back. Alrighty. Situated. All right. Good morning, ladies and gentlemen. Another day. Here we go. Get right into it. Ended up actually in profit yesterday. As weird as as weird as it was yesterday. Ended up with a $57 gain, $59 gain. The bot was some of it because it started running the bot yesterday. And it was just that basket against the dollar in the end. The NASDAQ was a lot of it. Short NASDAQ was a huge percentage of that. And it ended up with a gain. Went into a drawdown. The market was garbage yesterday, really. But ended up catching the high of the day on the NASDAQ. It was a great trade. And that made up for it. Let's take a look here in a second. Where is this? Get this out over here. Oh yeah, I got my monitor on the top now. Better. All right. My 10th monitor now. I was waiting for that to get here. 10 27-inch monitors, 5 on the bottom, 5 on the top. It's ridiculous. Not necessary, but it's ridiculous. Yeah, good morning, guys. When this one comes in here. Yeah, he just passed his second 100K challenge. Killing it, man. Yeah, we were just talking about that. He was posting in Discord about it. Yeah, he's just absolutely murdered it. It's weird, not weird, but it's he's using the hedging strategy. Leaving it open. It never closed a single trade until he hit 10%. Talked about that. Not going to get into that on YouTube, but yep. All the way from the beginning to the end without closing the trade. Locking positive equity in place. And just running it. You start to build up a buffer and build a bigger buffer and build a bigger buffer. And until when you hit your 10% goal, you just close everything out. There you go. Banger. Done. Just did it 2 times in a row. So good for him, man. Killing it. Kind of stuff works. So where are we? Annoying dollar is what we'll go through. I'm gonna watch this for a second. We're gonna do a quick analysis here. We'll take a look at everything. Dollar's super annoying this morning already. Where's my, okay, yeah. Got a couple things on. I just took a small basket of the dollar just now. We're going to see what's going to happen. I don't know. I want to be long dollar, but from lower, and we'll talk about that. I took it just in case it starts to run up now. I would really rather be long dollar from lower, and we're going to get into that in just a second. Yeah. So we're watching a couple things here. We'll just get right into the analysis. We'll do a little bit of analysis first, and we're also looking for trades. However, it's annoying at the moment. So yeah, I ended up in the green yesterday. The bot took some good stuff. The NASDAQ was a killer, absolute killer. Pound dollar short, but yeah, caught the NASDAQ all the way off the top and closed down much lower. You don't see it there, but we'll go through it. We'll look at some charts in a second. I want to flip through real quick and make sure we're not going to miss anything. And then we'll start finding some trades. But ended up in the green yesterday. Ended up hitting target. A little more than 0.2%. Just short of 0.25%. Ended up hitting target. And that's the thing. People look at it sometimes and are like, this looks stupid. Then you look at it later. Once the market moves. Yeah, so let's take a look and see. Go back to the beginning here. Just take a quick flip through and then we'll do some analysis and try to figure out what's actually happening today. Aussie CAD, that looks like that's going to be a bounce long back to the top of the range. Wait for a pullback on it. See if there's anything here right now that just needs to be managed, that needs to be entered. Nothing there really. Aussie Swiss. I mean, it looks like just right off the bat, it looks like the Aussie is going to be a bounce. Let's take a look at, hold on one second. So the Aussie's the weakest currency right now. Everything's clustered in and very dense.
1 hour.
The yen is clearly lifting off the low, going out to 1 hour data points. Each one of these data points is 1 hour, and it's the index movement of the currency indexes themselves, the indices. So the yen is gaining, the dollar's been down, way down, and we're looking for that to potentially come back the other way. Pound has been a steady gainer. Green data point, lime green data point there. Pound has been a steady gainer, but that may change.
15 minutes.
Aussie's coming off the high. Aussie's weak right now. Just looking to see what's going on. Is there anything weird happening?
5 minutes.
What direction are we heading in with the currencies as an index, so we can get a good idea on relative volatility? What do we need to look at relative to what else? The Aussie may be a thing. The Aussies looks like it's trying to hold, and you would probably expect a little bit more. The pound is still gaining. So pound, what is the question? What's weak? The CAD is losing, the dollar is losing, but at the same time, I want to be short dollar down here. The dollar's too low to be short. I could see it running lower though. All right, so yeah. Again, this is, once this starts spitting out our confluence, there's only confluence on 3 of the 28 combinations. So out of all 28 possible combinations of the 8 major currencies, there are only 3 that have a multi-time frame confluence. It's garbage. It's complete trash. Market wide. That means there's nothing trending. Everything is choppy. Everything is going sideways. There's only 3 out of 28 combinations that have a multi-time frame confluence on direction. Pound Aussie, Euro Kiwi, and Dollar CAD. And that may not stay that long with Dollar CAD. So come back to that. I was just looking to see what the state of the Aussie was, because there's 2 in a row that look like they're going to be longs. Normally I would just take this long. I mean, what's it going to do? Break the low. Yeah. Make sure my risk is set low. Get the mouse out of the way. I'm going to take a quick long there. Whatever. Take Aussie Swiss because the price action. Look at it later. Same thing here, whatever this is. At the bottom of the range. Normally I would wait for a pullback. Basket trading it, I'm not going to worry about it. Let me actually get back where I can see. So I'm trying to protect whatever might happen with the dollar here by taking something else. Just going to take a couple things and then we'll go back and actually look. Aussie yen. The yen is strong. I don't like that. I don't. Why not? I don't really want to take a long here against the yen, but the Aussie may be stronger than the yen, so we'll see. I'm going to take a basket and see what it looks like. It should wait for a pullback, honestly. But I'm just going to jump in it. Aussie Kiwi, I'm not messing with that. I don't like trading that pair anyway. Let's go the same direction too often. Yeah, Aussie dollars, not surprising that it's going up. CAD Swiss. Total risk is at $42. Oh, wait, you guys can't see that. Hold on. Manager back on. It's the star of the show. Believe the main character. Yeah, so I'm risking 43 to make 190-ish right now. All right. It's the total risk on your total account, not just one position. It looks at your entire exposure in either pending orders or open exposure and figures out what your total percentage gain and your total dollar gain and loss are. Very valuable tool. Magic Keys doesn't do that. CAD Swiss is probably going to be a long. Not going to worry about that. Whatever on that. That looks like a long on CAD Yen. The problem with the yen is kind of gaining. Normally I would just buy that. I'm not going to right this second. Euro CAD, same thing. I mean, this looks like it might be a long later. I don't like the entry. It's tempting because it's trying to break out of the range. Let me look at the euro real quick. Euro relative to the CAD. Okay, yeah. Euro is stronger than the CAD. I'm just going to take this long and look at it later. Small. Whatever. Take a small piece on it. We'll shoot for the projected high of the day. If it cuts through the range, then whatever. Next. Euro Swiss. Probably gonna, I don't know what that's, if that's gonna hold inside the range, it would be a long, but it's a little too sketchy right now. Euro pound, not sure about this one. The pound is gaining steadily. Skip it for now. Total risk wise here. Yeah, so yeah, risking $46, not a big deal. Things looking good. Still fine. Next. Euro Aussie, whatever. This looks like it's going to take a second leg up to me. I would rather take it long from lower, like maybe down here somewhere. If it would pull back down, I would rather try it long from lower. I don't know what that's going to do. It could set some pending orders is one thing you can do. We'll come back to that. We'll be, we stay pretty active on it anyway. Tried to take euro dollar short because of the dollar, but the dollar's not playing ball. Now that we got a little more information on the dollar, I'm ready to take this short. It's just not going. I actually take this both ways, to be honest. Yeah. See if it's going to run up or not today. Euro dollar. Either going to go up or not. Take it both ways. Go long. I'm already short. I'm going to go long to kind of hedge it and see which one gets stopped out. It looks like it's going to go up now. The dollar is just completely uncertain. It's typical London shenanigans. This is why I'm not a super fan of trading London lately. I used to love London session. Just really been a mess lately. Pound Aussie, easy call. It's only a long. Going for it now. I'm not even going to worry about it. I'll wait for it to pull back. If it pulls back, I'll take another one. I'll set a pending order on the center. If for some reason that I'll have two, I'll set a pending order right there to take another one. I'm just going to jump in it now. Pound Aussie, it's a long. This is one that I would actually put more lot size on. If it pulls back, I want to take even another one. I'm gonna scale into that one long. I want to be long Pound Aussie. Easy call. It was from yesterday. It's easy call from yesterday. Pound CAD, same thing. It's a pullback to the center. I'm just gonna spread some risk out. to neutralize that dollar. Long off the center, easy call. Yeah. See if it breaks the low, I'll take a stop. Pound Swiss. It looks like the pound is going to continue to gain. Pound Swiss, same thing. I'm going to go long pound. Basket. Pound yen. I mean, why stop there? It's already short pound yen, but if for some reason this changes, go all the way up on that. And then overweight it to the upside with 2 positions. Pound kiwi, whatever, nothing there. I'm going to wait on that. It's tempting while it's pulled back like that. I'm going to lose. Taking such small positions on it. Pound dollar. This is the one that's annoying. It's either going to run up or not, right? Say we'll shoot for the extreme up there. We'll shoot for the projected high of the day. Whatever. It's right in the middle of that gap. It's probably going to go higher than that if it goes up. As that's pulling back to the center, probably going to be a good trade. Let's see, what else? Kiwi CAD. This little run and gun style here this morning. Like Nuketown on Black Ops. Little Black Ops Nuketown action this morning. A little run and gun in a tight space. Just going to set some risk with small positions and just let it ride and see if I can hit target. Actually, let me check that before anything crazy happens. Let me check what it is, because I've got the bot running too, and I don't want to do anything too crazy because I am running the bot on the NASDAQ and pound dollar right now, just to demo it. Where's my auto close? 1 second. Profit goal, we'll set it to $50 for now, and we'll reposition.
5 minutes.
We'll try to get target and then reposition. Yeah, Aussie looks like it's going to try to come up off the low. All those Aussie pairs are probably going to be a thing. Is anything weak? Our Aussie dollar long is probably going to be good. The Aussie is very low already, and eventually that may pull back up. The Kiwi too. Like this Kiwi CAD looks like this is going to be a long. Like realistically, like this is something I would normally be buying into and just taking the stop if it runs back down. Small piece, 2 micros. Kiwi Swiss, I'm leaving alone. Kiwi yen, I don't like it. Whatever. Now, Kiwi dollar. Here's the thing on the dollar. We don't know which direction the dollar is going to go. And we're going to look at this analysis-wise in a minute. Going to do what I think is going to happen first, and then we're going to do some analysis. Not sure what is happening here. I don't want to be long on this kind of thing. Dollar CAD, clearly want to be long. It's not even a question. Already in it. Every time it cuts the low, I'm going to take a lower position on it. That's enough, I think, exposure to it. I want to be long on it. If I have to be long from lower today, I'll do that. If it breaks the actual low, I'll be even happier. If it breaks the low, I'll put a pending order down here somewhere. If for some reason it made it all the way down there, like I don't think it's going to. Yeah, if that broke the low, I would probably try it there. We'll watch it. I'm not going to put pending orders on this. I'm going to just hope that that goes back up a little bit. Not great. I'll wait and see if it breaks the low. Dollar Swiss, again, uncertainty. It's on a lower low. It's not a short. It's definitely not a short, for any kind of distance. Come back to it. Dollar yen. Nothing. Dollar yen I'm not interested in right now because the dollar and the yen are both likely to gain. Now one is going to go probably more than the other, but we don't know which one it's going to be, and there's no reason to guess. Silver or gold. Yeah, gold I'm short because of where it is. Easy call. Now the question is it going to actually go or not? Let me put a pending order up here on the hash. Get a stop on it. We'll put a target lower, much lower, really. I think this is going to be a short when it gets there. But one higher, that may be not going to hit today. Skip that. Again, I'm just looking. We'll watch it. If for some reason it goes higher, then depends on the dollar. Depends on equities too. We'll come back to that. Silver. Crazy because it looks like a long. I may take this one in the other direction just because. And then distribute my risk across the market. And if it stays inside the range, good game. But where it is, it's pulled back to the center, I'll take the shot at it. And if gold gets stopped out, then this will likely to go in profit. I want to leave some room for the bot too. No idea what's going to happen yet with this. With the market, it's too early. Too early with not enough movement. We've got no trending here yet today. Everybody go. I was going to miss all the fun here in just a minute. Whatever, man. You can go watch somebody trade a fake account if you want. Buckhorn, S&P. Let's see. NASDAQ. This is interesting today. What happens here with the NASDAQ? That was a really good short. Look at that short from yesterday. See where it closed out? Killed that. Murdered it. This carried most of the profit yesterday. Took it short from there all the way to there, all the way down. Killed that. And hit target. That carried through yesterday. That and the yen stuff. For sure. Come on, dollar, go up. I want to see the dollar go higher today. I just don't have faith in it this early. So yeah, not sure here on this. Man, probably could have held out for a little more on that S&P and NASDAQ basket. Could have put my stop to break even and just let it go for a couple days, but it was small. But man, nailed it. Nailed the high right on the hash part. Got the high yesterday. Now we're going to wait and see what happens, if we're going to push back through there or not. And we're going to flip over and do some look at some charts in just a second. I just want to see where we are here and make sure I've got some risk on. Okay, so silver's coming back down. There we go. Come on. What we want. Oil is going to be interesting. Oil, if that would pull back a little bit, I think oil is going to be a trade here if it'll pull back. Put a pending order down here. Put a target there. Never put a pending order down a little bit lower. 73.4-ish. And we'll wait to see what happens with it. There's a gap there. Didn't quite fill. It came close. Just in case that comes down and breaks the low today, we'll come back and look at that. Dollar yen, I hope the dollar goes up. It's not a good it's too much of a consolidation after a drop. It's not really great. Dollar Swiss looks exactly like the dollar index. Looks like crap. There's no answer. There's nothing there. There's nothing to say on this. Like, it could go both ways, and it probably will, and that's the problem. It's probably going to go both to both sides. Whatever, we'll do that. See if it holds the low on dollar CAD. Put one more pending. I've got 2 market orders in. I'll put a pending order down just in case the other one gets stopped out, and just take the L. Kiwi dollars, whatever. This Kiwi yen's about to get stopped out. That's fine. About a couple dollars a piece. Kiwi CAD. That's a long, actually, which is fine. Pound dollar. Yeah, I got that, I think, both ways on that. Kiwi, of course, getting wrecked. Yeah, we got a super choppy market here so far. Pound Swiss looks good. That long looks fine. Got a really choppy market, and there's just no answer yet. There's nothing here. Pound Aussie I'm fine with. I'm looking for higher later on that. If it breaks the low today, I'll just be getting back into it. Put a pending order down here in case that gets hit. Put my stop somewhere. It could be tight on that because of where the hash is. Put a pending order lower just in case it ends up lower and I'm not watching it. Not sure on euro dollar. I'd rather it go down. Got it both ways. Kind of bracketed just to figure out which before we could figure out what the dollar is going to do. Just going to take something. Euro Kiwi, whatever. This looks like this is going to be a short, unfortunately. Euro Aussie. Looks like it's going to pull back. You know, if for some reason that doesn't break the high, put a stop like right here, maybe put a target a little bit lower. Not something I would normally take there, just in case. Maybe it gets stopped out, maybe not. And if it doesn't, then it'll probably be end up higher. And we'll be looking to sell the high of the day. Everyone will try it there first. Tight stop. If it breaks the high, whatever, take the stop. And if we hit our expected high of the day, that would be better. And take the tight stop. Pending orders. And we'll go back through and look at all this stuff in a minute. We'll actually look at some normal trades and see what we're looking for. We just went and did some analysis on the other side, in the group side. See what we're looking for here. Yeah, so I'm ahead already on today's close. I'm ahead. So basically had not much yesterday, and then overnight all that basket from yesterday closed like a $59 profit. Part of it was the bot and part of it was the positions from yesterday. So I'm already ahead. It's not a huge, it's not Lambos, but it doesn't matter. Consistent. See the same stuff every day. Until there's really good positions, though. When there's good positions that come through, we'll take a little more risk. There's just no reason to do anything stupid right now. EuroCAD's coming back through, of course. Take a short there just in case. Just in case that is going to go down, we'll put a target right there. Run it both ways. One's going to get stopped out. Hopefully both don't get stopped out. One will get stopped out and one will run for, 1 to, what was it? 1 to 4, almost 1 to 3.5 R. So that's an acceptable risk. Next, we'll go back through and look. Almost there. Just making sure, because the market is moving now on this 5 a.m. candle. This tends to be when the market starts to go. This normally I would wait for a pullback and buy into that. That was a really good long. Just missed it. Wasn't watching it. Aussie dollar, I'm short. I only want to be short on that. Just waiting for it to come down. One of these days that's going to come down hard. Like mega hard. I'm not going to buy a higher high on that. The highest high in 6 months. I'm not buying that. I'll wait for it to come down. Oof, man, Aussie keep taking that. Yeah, it's at the hash though. That's probably going to continue, honestly. I would wait and see if this will retest right there. Put a target right here or something just in case it spikes, and shoot for lower. Give it a little room. Whatever. Put a pending order there. If it pops back up and tags in that pending order, whatever. Look for a continuation later. Come on, Aussie dollar down, down, down. Aussie yen, same thing. I'm not buying that. Only a short. I'll wait. Aussie Swiss though, boy, that looks good. That might have to take a little more risk on. Yeah. I'm gonna take a. That looks different because of the price action. The price action is there strategy wise. It's there. Oh my God, sorry guys. Blow everybody's eardrums out. Aussie Swiss is a long only. Even though it's high in structure, where it is currently is worth a shot. The what just happened there is worth a shot. Put a little bit more on that. It's a little more reliable price action. Doesn't mean it has to go, but it's better. Aussie Swiss is probably the best looking thing right now. So I think that's good for now. It's enough exposure. Let the market play out for a few minutes. We'll see what happens. Do some analysis. Sipping my coffee. Yeah, so it ended up in, for everybody who missed it yesterday, ended up in the green. Ended up with 0.2% gain. A little more than that. Just short of a 0.25% gain on the day yesterday. It just took until Asian session for it to play out. All the positions were good. It just took a while for it to actually go. The things that didn't go were the dollar, because the dollar didn't move at all. It was a very slow day yesterday, honestly. It was pretty quiet yesterday. Nothing you can do about that. Please. So let's take a look. Our classified range tool up here. Secret. An open secret. All right, so Buckhorn. Let's take a look at. We'll look at the 4 hours and refine at the 1 hour. Bitcoin, we know we're watching higher or lower. It's all over the place right now. This is all 4 hour stuff. Yeah, so 4 hour levels are going to be, we're there now. We're in a block, bearish block. There's another one higher. Let's see what we got. Yeah, just as far as price action is concerned, we've got targets for bounces on the way down. But yeah, I don't know what I would do there. Nothing really. It's a good game. You know, it's been a decent run. The last, and we'll look at the 1 hours. There's not really much to say here. It's been really choppy. kind of had an expansion. It went up and then down and really nowhere. It's in a range right now. I could see this going a little bit higher. All this FTX stuff needs to fizzle out of the news. It needs to go away, and people will forget. People always forget. It's a crazy thing. It happens in politics, in world events, in business, in the news, especially in news, in media. People always forget the important things. Something bad will happen, and people will forget. And just continue to do the same things. It's funny how that works throughout history. But this FTX stuff needs to go away. It may be a while before people. I know Logan Paul's getting dragged right now too for promoting Crypto Zoo. He's getting dragged all over the place. A lot of people got wrecked on that, and I think they were saying he took like $60 million or something to. I think Andrew Tate said something about that. He was dragging Logan Paul over his Crypto Zoo thing, promoting basically a crypto scam. And he took a $60 million payout to promote it. And he's getting wrecked on that right now. CoffeeZilla is raking him over the coals. If everybody pretty much knows who Logan Paul is. It's an interesting story. If you haven't heard about it, check out the CoffeeZilla beef with Logan Paul. It's started to play out over the last week or so. It's actually pretty interesting. Hey, welcome. Yeah, so yeah, it's a long story. Not going to get into it all. For the people who don't know, and a lot of people don't know this about me, I'm a former developer for 2 coins that were listed on an exchange. I've been a part of 2 projects. I was a crypto developer, a coin dev, and I worked with. I have seen how the sausage is made, and it's not pretty. It's not. It doesn't have your best interest in mind a lot of times. These marketing people that will they'll tell people anything, tell investors anything just to raise enough money to get listed on an exchange, and it's not fun. A lot of people don't know that about me. I don't really talk about it much for reasons, but yeah, I was a developer, lead developer for 2 exchange listed altcoins on Sexio and some other things, so a couple other places, but that was where we had some traction going. We paid some crypto influencers. Crypto Rand, the dude with the horse head. I mean, I can talk about this now. And Not So Fast. If anybody knows who Not So Fast is, we paid them to promote our coin on Twitter and Bitcoin Talk and say, ooh, it was the best thing. It's the next best thing. Everybody buy this thing. Well, they had a 5% incentive to do that. We allowed them to pre-mine 5% of our coins in order to get it moving. And that is a 100% true story. So remember that all of these guys are paid to tell you to buy this stuff. I can vouch for that as from firsthand experience as a lead developer. Firsthand, that's not a rumor. That's firsthand experience from being a developer. So this was, back in 2018, 2017 going into 2018. It's just not something that, I just don't want to be associated with it anymore because of how bad of an experience it was. Honestly, it was like, wow, like this is just a scam. Like I love crypto, but I saw the other side of it. It's a true story. Actually how I got started in trading. Love it. But I've also seen the bad side of it, and there's a lot of mess out there, a lot of scams out there. The idea is, how can we get people to invest their money in this thing that we created for free out of thin air? We're going to create a thing out of thin air. We're going to change the name of it, and we're going to add a couple features. We're going to call it something different, and We're going to sell it to people and see how many people will buy it. That is what crypto is. Sorry, it's the truth. At least right now, that's what it is. Until that changes. You know, everybody's trying to solve world hunger and cure cancer and, you know, cure cancer coin. There's too many scams out there. There's just it's so easy to make money as an influencer as part of it. I'm not going to get into that whole conversation. I've talked a little bit about that on TikTok before. But I got to be careful what I say with this because of the people involved and what happened. I was bought out. The short version is I had 10%. I had a 10% developer stake in one of the projects, and I didn't agree with the way that things were happening. And I said, look, I'm going to dump my I'm going to put my 10% up for sale, 10% sell wall on Sexio. And if you don't stop doing this, like, I just don't want to be a part of this anymore. And I'm holding 10% in the developer wallet, and I'm just going to sell it. And they were like, please, no, don't do that. We'll buy you out. We'll buy you out. And that's exactly what happened. And yeah, so been there, trust me. That's the short version of the story. But trust me, it's not what people think it is. It's not what I thought it was. It's a bunch of marketing people sitting around trying to figure out how we can get more people to buy this thing that you created from thin air. How can we go in and pull a hostile takeover on other communities and offer, you know, a 1-to-1 swap or a 2-to-1 swap and like get people to come over, put their money in our thing instead? Like, that is the goal. Like that is what the meetings are about. It's crazy. Anyway, Bitcoin. It's not going anywhere right now because of where we are in the cycle. I could see it going a little higher today. We'll see what happens. If it breaks the high, I would start taking profit. Dollar. So here's where we are. This is annoying right here. I know where everybody went when I started talking. People didn't like me talking about crypto, I guess. I left. Typical. That's pretty standard. Every time I get bearish on crypto, everybody trips out and goes away. It's hilarious. And I'm always right. Always. Every time. Every single time. Dollar. I hope this goes up today. This is a mess because we're already low. Like, just zoomed out here, we're already low. The red hammer of truth has spoken. Spoke a little early, but it spoke. We're already down on the low here. Now, here's the problem. We've got some really rough price action. This price action just doesn't look good on the dollar. We're in a kind of a flat consolidation. That's not great, but we are in a lower low. And don't ever want to sell down here on a lower low after that. Look at that move. Straight down. Straight down. You know, we were just talking about this. We've got a range expansion now on the dollar. And we've got equilibrium. And we're not going to get into strategy stuff, but look at the markets a little differently structurally. The next likely move on the dollar, the next point in the sequence, is eventually to retest the mean, to go back to the mean, a mean reversion. Where is the equilibrium? You know, that's the next likely move here. I want to be long dollar. I'm not sure if this is the perfect entry, but I at least want to have some exposure to it just in case this thing rips up. You know, it's making a higher low right now. It's putting in a higher low, and we're down. We're down on the dollar. Like, the likely scenario is that the dollar ends up higher at some point. Now, the question is, what kind of shenanigans is it going to pull before it goes up? Are we going to go back and break the low first and then run? Or is it just going to go and, you know, put in some consolidation and then jump up and put in another consolidation? Like, is it going to start stepping up from here? or is it going to crack the low and then go nuclear back to the, a mean reversion? And this is what we're watching on the dollar. This is going to be very important this week. We got Powell at 9-2 in about 3.5 hours. He's going to be, drawdowns come back a little bit. Dollar. If the dollar's back above the daily open, we're green on the day. I'm assuming that we're going to go higher on the dollar, so I don't want to be short dollar in whatever form that may be. I don't want to be long Aussie dollar on the high, and we'll segue into this. I don't want to be long Aussie dollar up here on the highest high going back to June. Same thing here, like, we're high, we're on a broken high. We're above our global swing high. We have a new global swing high now. So, the next likely point in the sequence is lower. The Aussie itself is holding a little bit stronger today, but it's just as far as a play on the dollar, it's just not a good idea to be long here. We're condensing in, we're in a range contraction short term. We've got lower highs and higher lows. It's a range contraction that typically resolves to the downside. It's a lack of volume, and those thin volume moves tend to spill. But it's not a great short entry from here either, and that's the thing. It's just, I'd rather be short just because of the dollar, basically. We'll watch this as this starts to play out, but I could see this going lower. Moving into euro dollar, you're going to see the inverse of the dollar index. We're in a range expansion, from equilibrium. We're on the high now. You can see what's going on here. Like, once you see this, you can't unsee it. We're in a range expansion, and we're also in supply up here on the highest high since June. I'm not buying it. I'm not going long here with any kind of size. I'm looking for a short here. Now the problem is we're same thing, somewhat of a range contraction. You've got higher lows and marginally higher lows and marginally lower highs as well. So we have progressively reduced volatility over time here. We're condensing down into nothing. Condensing down into nothing. I don't know if that's going to run up or not, but I'm looking to sell any kind of range high. Narrowing this down, I would probably be looking somewhere in here. That's where it's already gone off of. It just sold off of that level, so I kind of missed it. But I want to be short. I am short. I want to be short euro dollar. That's the play. The Aussie stuff's starting to go. On Swiss are going, yeah, I want to be short here just because of the dollar. It's just not the best not the best entry, unfortunately. And we got Powell speaking today. We don't know what's going to be said. I don't think there's any data releases or anything. I don't think he's going to say anything that's important. I think he's going to say the same thing that he says every time. We're watching the labor market. We still got more to go, with the rate hikes. I don't think he's going to say anything that's going to be a surprise. And I think the important question with these kind of things is he going to take questions? Or is he going to take questions from people? Maybe, probably, and that's the thing. What questions are going to be asked? And that is where your surprise could come. If they ask a specific question, that he doesn't really want to answer or something like that could hint at something. So that's what we're going to watch it. It's a nuanced thing with these kind of things where he's speaking like at a college somewhere and he wants to take questions. Like, it can be nuanced. But a lot of times these aren't the big market moving events. It's not like FOMC. So we'll pay attention to it. It's in about 3.5 hours. We'll pay attention to it and see what happens. Obviously we'll listen to it if it should be televised. So there could be some volatility in the dollar today. Equities and gold, possibly. The big asset classes, the big containers may slosh around a little bit today. Euro pound, I'm not a fan of trading this. I like to know what it's doing, so I know whether or not I'm focusing my capital on the euro or the pound. I want to know if the euro is going to be stronger than the pound, that kind of thing. Right now, we're kind of locked in here. We'll set up our range. Just short term. We're just locked in a range like this. If it's going to go lower, honestly, I would just look at the range tool. Yeah, I mean, it hasn't even started moving yet. So, yeah, I'd be looking lower down there or higher up here. Really. I would trade from up here or down here. And the range tool figure this out for you. So, I already have my trading plan for the day. Every day at 3 a.m. London Open, I have a standardized trading plan that doesn't change throughout the day. It's already there. It's ready. And I just need the market to play out. I need the market to move. So I know that on the downside, I'm targeting down here. On the upside, I'm targeting up here. Potential reversals in both scenarios and potential trend in both scenarios. Now, we don't know which way it's going to go yet. Come on, dollar. Dollar's pushing a little bit. We're going the right direction on the dollar. About to be in the green, actually, which is good. So we already know what we're watching here on Euro Pound. There hasn't been any movement yet. So we know that statistically, our high of the day is here and our low of the day is here. And we already know that. Already know that. So moving along. Same on every pair. Doesn't matter what the asset is. We already know that. Got this figured out. Just sometimes you got to wait for the market to play out. Euro yen, same situation. Our projected low is down here. Relative projected low, current projected low, and a bullish block all at the same place right down there. We already know that we're targeting that to close shorts, and we're targeting that to take a reversal long if it were to go down there. On the upside, a little more nuanced here. Relative projected high in liquidity there. We would probably look somewhere a little bit higher than that. There could be a false move here because of where our relative projected high is. There could be a false move where it pokes out and then back down. That could be a thing on Euro Yen, and that's actually probably exactly what's going to happen. So we'll watch this. If this starts to leave the range, we'll watch for any turnaround. If for some reason this runs up like this, if this stalls and starts to turn around and continues to close back in the range, we're going to be looking to go short. Other than that, we'll watch up here. We already know what we're looking at. Make decisions at decision points. EuroCAD, same situation. I think this is going to be a long. I'm long on this. We took this long earlier in that flurry of positions that I took, just because the euro is stronger than the CAD. As an index, it's gaining. We know there's a higher time frame thing going on there. Yeah. Be watching two spots on the upside. We're going to take profit right here. And we're going to take profit right here at our current projected high. Algorithmically, where statistically our high would be, it's where algorithms are going to make decisions. So we're going to make those same decisions at the same place. Think like a liquidity provision algorithm. Think like a programmer. That's who's controlling this market. So on the top side, we'll watch up there. On the downside, obviously, we'll watch down here. Very easy call there in confluence on the downside. Now, whichever way this starts to go, we've got room for a trending move here. From price, we've got 80 pips on the upside and 80 pips on the downside. You've got equal potential distance to travel. Also got a previous equilibrium right here, right at the hash, which would be a valid target on the way down. So we already know what our plan is. We're not going to go through specific group strategy here on YouTube, but we already know what we're doing. We already know. We're waiting. What else? Euro Kiwi. Same situation. We don't have to go through all this. Probably here. Watching the hash. Upside hash on Euro Kiwi for the group people. Get rid of that. Supply from yesterday. And on the low, we'd be looking to break the low actually. Be looking to close shorts and take a reversal at or below that swing low on Euro Kiwi. Still watching the dollar here on the other side, guys. This is going to be the important thing right here. What is this going to do? And we may have an answer here soon. Sorry, guys. So at or below the swing low to the upside, and we got a whole mess of equal highs up here. If for some reason it ran all the way up, be hitting it again. But first things first, Euro Kiwi, if it were to pump, if we were going to run up today, which may happen, it stepped up into a range. I'm tempted to take that long, honestly, where it is. Matter of fact, I'm going to do that right now. Hold on 1 second. Because of where it is at the bottom of the range, it's a decent entry. It's not perfect. 1 second. Already in Euro, also Euro Kiwi, whatever. If for some reason it holds, and whatever, we'll run it like that. Whatever. Nothing crazy's happened yet. Nothing's been stopped out. Still ahead for the day already, but this came off of yesterday's positions that closed overnight before London, all this stuff closed. So, I'm ahead already for the day. And that was yesterday's trades. All those positions from yesterday finally hit. Ended up, $60 in the green, which is not huge, but it's something. It's free money. Free money real money is better than no money. Not going to win every day either. Some days are going to be positioning days where you're taking positions and waiting. And some days are just going to be on fire, absolutely on fire, and everything you touch is going to turn to gold. And, some days you're going to take a loss. It's just trading. It's part of it. So, come on, dollar. This is the only thing that I care about right now is which direction is the dollar going. 1 second, guys. Yeah, so the euro's gaining and the dollar are both gaining. So the yen is losing actually. So yen is losing value. New Zealand dollar is the strongest currency, but is already blown out. Just looking to see what's going on here. The pound is continually gaining, which is fine. I want the dollar to keep going up. It's the thing that I want the dollar to lift off the low. It's the thing that matters. 1 second. Alrighty, back to this. Hold on 1 second. Yeah. That. All right. Okay, yeah, stream's on. Need to check the chat here. I don't know why the chat's not showing. Sorry. Oh, Jesus. Sorry, guys. I don't know why the chat wasn't showing. Let me go back here. Good morning, guys, by the way. Ladies and gentlemen. Good morning, guys. Yeah, man, yeah. I need to put the sounds back. I forgot to do that, actually. I should have done that over the weekend. I tried to run it, and it wouldn't run. I restarted my computer. Let me see if it'll run now. Hold on. That's important. That is a necessity. Oh, man, I hope I didn't wreck Zoom. Okay. Yeah, I don't know why it won't. I don't know. I need to reinstall it for some reason. I run it, and it doesn't show up. I can see the processes running in the task manager, but it doesn't run. I don't know why. Annoying. figure that out. Yeah, I got to get the sounds back. Boy, man, we used to have so much fun with that. Need to update it a little bit now that we have a new president. But yeah, I'll get that running. I'm gonna try to make it. I need to remember to do that today. It's important. Would I say I'm more of a day trader? Yes. Yeah. I'm not a high lot size 2-pip scalper. I'm the opposite of that. But I'm not like a swing trader anyway either. I'm generally in a trade for a couple hours to 1 or 2 days max, depending on what's going on. Depends on the run and how long it takes it to get there, and how long it takes my basket to get there. I've done a lot of testing and a lot of writing code and stuff, and a lot more back testing than most people will ever do in their entire lifetime. And just through testing bots and testing code for years. And I've settled into what I've seen is consistently profitable. It's the best ratio of consistent gains to drawdown, and it's hard to explain. I don't know. I just prefer to trade a distributed risk model. I'm definitely more of a day trader. My goal is, and to put it specifically, I'm trying to capture the majority of the daily candle range, as much of it as I can. I'm trying to capture as much of the daily candle as I can. I'm not sending 20 lots for 3 pips. I'm sending a tenth of a lot for 200 pips or 100 pips, or, I'm looking for, on a trade, I'm looking for 50 pip minimum, but I'm also not holding it for weeks either. Like, I'm looking to get in and out, trying to, taking profit at the highs and lows of the day, and then closing out and then going to the next day. Sometimes you get caught in a position and you got to hold it for a day or two. There's a lot of times where I'll take, like, look what happened yesterday. There's a lot of times I'll take positions and it'll hit overnight or something. I'll wake up in the morning and it all hit profit. That's exactly what happened today. It happens a lot. But most of the time, when the market moves, when there's actual volatility and volume in the market, like if we take some positions and then the market runs up, I'll be like, okay, and I'll start closing out, and we hit target and be like, okay, done. Sometimes you're done for the day in 30 minutes. Sometimes when stuff moves in London, you hit target and you're like, all right, well, hit target, and now on to the next one. You just go right on to the next one. I don't look at it as I'm done for the day. It's I'm done for this series. I'm done for this basket, So, just think about it differently. But yes, I'm definitely more of a day trader. I would classify myself as a day trader. I do very little scalping. I do it sometimes when there's very little volatility in the market. Sometimes you have to, or just do nothing. I just don't like sending a very large lot size for a very short distance, because I don't know. I'm not going to get into it. Yeah, there's nothing wrong with doing that. It just doesn't make a lot of sense to me personally. And it's just a personal thing from experience. I've done it both ways. Trust me. And I have changed. My mindset has changed over the last few years. I've moved toward a low risk, consistent strategy. I'm not trying to blow my account up every day. I'm not risking 2% of my account on a trade. That's crazy to me. And a prop firm is going to laugh at you when if you try to do that. You're not going to make it. You're not going to make it doing that. You may get some hits, but it's not a sustainable strategy in my opinion. It's just my opinion. But some people are successful doing it. I'm not going to say that it's impossible. I'm saying it's not for me, if that makes sense. S&P, man, this is super tempting here, where the S&P is. If this is just going to be a range right here, God, it's a short now. Matter of fact, do that. I'd rather just take the risk than miss it. We'll look at it later because of where it is. I can get down to it quickly enough. Oh, when it's, yeah, okay, yeah. On the strength tool, that means that there's a multi-time frame confluence. It means that what that does is it analyzes the currency, the 8 major currencies as an index measured against the other 8 major currencies. It's a formula, and it looks at multiple time frames. That specifically on the way that I have it configured right now, it's the 5-minute, the 15-minute, and the 1 hour. And when there's a confluence and the currency as an index is trending in the direction, trending meaning direction and rate. There are 2 factors. It's moving in a direction and at a consistent or accelerating rate, then it'll show up green on there. That green or red or whatever, whichever. But that's what that means. It means it's trending in a consistent direction when it's green. And it's strong. Second. What was I doing? Oh yeah, S&P. But yeah, that's what it means. It's looking at it and says that, look, we're moving in a direction here on 3 different time frames. So we know that there is strength coming in, and it's not like RSI, not relative strength index. When I say relative, I don't mean RSI. It's not even close to the same thing. I'll take a little short on the S&P. If it runs up and gets stopped out, then whatever. If it runs down, good game. It's got a long way to go down if it rejects here off the top of the range. But yeah, that's what it is. It's looking at all things relative, rate and distance, and it's on 3 different time frames. And if there's confluence there, then it says, okay, we've got consistently gaining. The index as an average is gaining. It's just different. It's a different type of calculation, but and it helps you determine what to trade. It's not about entries and exits. That doesn't help you figure out. There's 3 problems that need to be solved in trading. The way that I've come to explain this and the way that I classify this, there are 3 problems that need to be solved in order for a successful trade. You have to know, what instrument are you going to risk your capital on? What asset am I risking my capital on? You got to know what to trade first, because what you trade is just as important as how you trade. So what am I going to trade? Then you have to know, what strategy am I going to deploy on that asset? So first, I need to know, what asset am I going to risk my capital on? Then you need to know, what strategy am I going to deploy on that asset? And then you need to know, how much risk am I going to place on that strategy? And they have to be solved in order. You have to know what to trade, how to trade it, and how much risk, based on multiple factors. Where are we within our cycle? Where are we within the daily range, the weekly range? How much potential? You got to understand potential in order to figure out how much risk to place on it. And you need to understand relative volatility and direction and rate of currencies as an index if you want to know what to trade. That's what this is about. This is what the strength tool is about. What to trade. What do I risk my capital on? Why am I not going to sit here and worry about pound dollar right now? Because the pound and the dollar are both traveling in the same direction at the same rate. There's almost no relative volatility between that pair. I want 2 things that are traveling in opposite directions, right? We're not going to get into specific strategy. Cars on the freeway analogy that we talk about all the time in the group. If I'm in the analogy, without getting into the whole thing, is if I'm going to give you $1 for every foot of distance between 2 cars on a freeway. You got a highway and you got cars going northbound and southbound. If I'm going to give you $1, I want you to pick 2 cars, and I'm going to give you $1 for every foot of distance, or every meter for the Europeans, every meter of distance between, we'll say every yard or every meter to make it easy. For every meter of distance between 2 cars, I want you to choose 2. Because you got a bunch of cars to choose from, right? There's a whole bunch of pairs. There's 28 combinations of the 8 major currencies. So I want you to pick 2 cars on this 8-lane highway, and I'm going to give you $1 for every meter of distance between these 2 cars in an hour, Are you going to choose two cars that are traveling the same direction? Are you going to choose two cars that are traveling northbound at 60 miles per hour? Are you going to choose one car that's going southbound and one car that's going northbound? Think about it. That's the analogy. Won't go into specific strategy, but that's one thing that we talk about a lot is how to choose. How do you determine what to risk your capital on? Because that matters. What you risk your capital on is just as important as how you're trading, what your strategy is. And that's all this group stuff on the other side. But it's important. It's extremely important to understand. That's why I take a look at this every now and then. I instantly know what not to trade. I know what not to risk my capital on because I can see that there's going to be low relative volatility based on,
15 minutes.
Sorry.
1 hour.
I know what not to risk my capital on, and I can look and see, okay, look, we're going to look at this
15 minutes
today because of this. There's a reason you want to trade those
5 minutes.
Things that are moving inversely correlated at whatever time, and it changes all the time. So you need to pay attention to this. And if you sit there and say, I'm only going to trade GJ is the only thing I'm going to trade, that's kindergarten level. Honestly, it's you got to progress past that, man. You got to progress past that and say, look, I'm only going to trade GJ. It's the only thing I'm going to trade. Because I guarantee you're going to be sitting there a lot of times with nothing to do. You're going to be in a very dangerous, choppy market environment, risking way too much for way too little gain. And when there's so many other opportunities out there, you got to learn how to pick which thing that you want to trade and what to risk your capital on. Is extremely important. It's one of the three. And the way that I do things, the way that I do it personally, I know what not to trade, and that's the important thing. And then you take some risks on the other stuff, but you got to know when something is just not good. You got to know when to just not mess with it. It's important. What do I trade? How do I trade it? How much risk do I place on it? What asset do I risk my capital on? What strategy do I deploy on that instrument? How much risk do I place on that strategy? Those three problems need to be solved in order for a successful trade, especially if you're like waiting for the right thing. Sometimes I'll just run and gun, and just because I already have an idea on where the market's going, or have a good guess, at least. Nobody knows for sure. But, and I trade baskets a lot because of that, because I look at the whole of market approach. I want to know what metals are doing. What's the U.S. equities market doing? It's huge, extremely important. What is the U.S. equities market doing? That is the driver of the market. What's the S&P 500 doing? That'll tell you what the dollar and the yen are going to do. What's oil doing? That'll tell you what CAD's going to do. Understanding those positive and negative correlations, it's just super important on figuring out what to risk your capital on. And, going into the strength tool, that's why I look at that. Because I just want to know what to risk my capital on. It doesn't help you with entries and exits. It's not like it's like, okay, this thing crossed, it's time to buy it. It's not that kind of thing. I want to know what direction currencies as an index are traveling, not a pair, but the currency as an actual index. Because, pound Aussie may be going down, but pound dollar, pound yen, pound CAD, and pound Swiss may all be going up, because it's about the pound relative to it's the primary component relative to the secondary component. That's the important thing. And you're not always right either. And things change. Sometimes it will change on a dime. The pound is notorious for changing directions. The euro tends to pick a direction and stay there, but those little nuanced things can help you make money, knowing those things. The pound is volatile sometimes, but that's why, it has big ranges. It runs a lot of pips. That's why the pound is a good thing as a base currency to trade. Right now, pound yen's running. We'll get back to the charts here, but just to take a second to explain that, it's important. Those things are important to understand, and we won't get into too much of it because that's what we do on the other side. But back to what we're doing. It's a fair question. What about that thing? Why do I look at that? It has nothing to do with entries and exits. has everything to do with what do I not trade? What do I not waste my capital on, waste my time on? I can look at that strength tool and I can tell you whether or not it's going to be choppy or trending. And that's why I'm going to stay out of the things that are likely to be low volatility and choppy. Sometimes you can't control it, but sometimes you can get a good idea, and we know what to risk our capital on. We're looking for the thing that's going to has the highest probability of making a distance move within the daily range, because we're trying to capture that range, right? We're trying to capture the majority of the daily candle from low to high or high to low, depending on whether it's a long or short. And we're not going to mess with something where two cars are traveling the same direction on the highway. We want two cars going opposite directions or back toward each other. And we won't get, there's more to it. There's a lot more to it than that. But just to make the analogy, pick two cars on a freeway. Look at an 8-lane highway. I want you to pick two cars, and I'll give you $1 for every meter of distance between those two vehicles. Are you going to pick two cars that are traveling northbound at the same speed? Or are you going to pick one that's going northbound and one that's going southbound? One of those two is going to make a lot more money than the other one, sitting around watching GJ do nothing all day. That's all I'm saying. There's a point in your trading career where you've got to expand beyond that mindset, and things open up when you get past that stuff. That restrictive thinking, say, I'm only going to take 2 trades today. I'm going to risk 2% of my account on GJ. You got to get past that, man. I'm telling you, once you do get past that, it will change your trading journey. I'm telling you. There's too much of that goes on, and people sit and don't progress for years. See the same people doing the same thing after years, and it's just, I don't know. There's a point where you can do better than that with less risk. It's about less risk, and that's what it's about. The game becomes not how do I get rich, but how do I make consistent gains without blowing it up, without even a chance of blowing it up. And then once you figure that out, you start to go after more capital. Once you build the skill, you go after more capital, and that's the name of the game. My opinion. Euro yen, nothing here. Probably going to be a short. It's not yet. The yen was a little bit crazy. Yen's low. Yeah, and the euro is stronger today and the yen is weak. Now, at some point, that's going to turn around, and that's the thing. We may be close to that. We're in supply here. Ish. We're on a high there. We'll skip that. EuroCAD, I think, is going to be a long. This looks like this is going to finish that move out. We're right in the middle of kind of where your sellers have been in the past and haven't been stopped out. That's super important. This looks like it's going to go higher. Talked about that one a minute ago. Euro Aussie, good game on that. Pick that long. That's already doing all right. Let's see what we got here. Not much yet. Got some risk put out there. Not much here yet going on, but possibilities. The same thing happened yesterday. It was whack, and then all of a sudden everything went into profit. Except the dollar stuff just didn't really go anywhere. It didn't die either. That's the crazy thing. Looking at the dollar, we tried to go long dollar yesterday, back in here. It didn't die. It just didn't go up either. And that's kind of where we are today. We're just flat, completely flat. I guess everybody's waiting on Powell. Euro Aussie took that long earlier, so that's good. A little bit more. We're just going to be in supply up here. It's not really you don't want to go long here because of that. Pound dollar. I think this is going to be a short. It's just not the best entry really right this second. I could see this, going both ways short term, and it depends on your strategy. Are you looking for 5 pips or are you looking for 50 pips? And it depends, what your thought process is on that really depends on what you're going to do here. I don't know. I might wait on this. It just didn't go anywhere. I could see it bouncing and going up, but then being a short. If it would break the high from yesterday, this like swing high here, if it would break that, I would be looking to sell the high of the day. Only looking to sell the high of the day it's just not a good entry short right now. It's not a great idea to short that kind of price action. It's right in the middle too. Pound yen, same thing. Probably going to be a short, but not yet. I would be looking to sell the high of the day. I don't want to buy it up on the high after that kind of a run. Really, it's a personal thing. I don't really want to buy into that. But I could see it going up. You're buying into sellers is what it is. And you're really taking a big risk on doing that. Taking a risk that this just slams back down because it's already up. You got to remember this yen went way, way outside of its statistical range last Wednesday and stayed up. We've traveled a very far distance in a very short period of time. Put it that way. It was a very short period of time to make that kind of a move. So you want to be careful buying into this with like any kind of heavy lot size. Unless you're, whatever. Depends on your time frame you're looking at. Careful here because we're in nothing but sellers up here. So it's just not really, it's not a good position either way because we're in density here on pound yen. I know a lot of people trade this. There are better things to trade, but depends on the setup too. Right now, it's not really the best thing. It's rejecting. Yeah, it doesn't want to get past the daily open. We'll see what happens with it. Pound CAD. It's a mess. A lot of this is just a mess. It already moved. It moved a couple days ago. And made the trending move, and now it's just kind of going into a consolidation. Not really much to do here. We're right in the middle. Same thing. I could see this going both ways. This may come pull down and bounce back up. These last 2 candles rejected nicely off the low. Just stupid, honestly. It's not really the best thing to do. Pound Swiss looks bullish to me. However, it's heading toward the top of a range. Well-defined. We know that this is going to be a range. Whatever. We'll just call it that loosely, but see what we're doing here. We've stepped up here in a consolidation here. We've stepped up into another range, kind of in the middle of it. It's not really the best entry. Short term, I could see it going up. I think I'm actually did take a long on this. I think so. Took some pound longs because the pound is gaining today. And we know that from the strength tool. Know that the pound is gaining, but we don't want to focus on pound dollar because the dollar is also gaining. And euro pound is not a good long because it's not a good short either because the euro and the pound are both traveling the same direction, and we can filter that out by looking at relative volatility like that. S&P shorts going. Hold on a second. S&P shorts looking good. So that may be a thing. Let's pause for a second and look at this because there may be a trade here. We're getting a confirmation. We have a range high right here on the S&P. Think about it this way. What if this was just a range like this and something like that? And we're coming off the top of it right now. What if it's that? And potentially step down another level. What if this is just a range consolidation? We're coming off the top of it now. What if it comes all the way down here, comes back and fails, and then takes a second leg down today? That would be normal. Look at what it made, a ridiculous move. It overextended, and then it has a lot of room to pull back, and that's the thing. Range wise, oh man, you got plenty of room. Statistically, if the high of the day is in, say this was the high of the day and it's rejecting and coming down, your low of the day would be down here. That's important information. It's incredibly important. We already know that. We already know. We know what not to do. No, we're not buying it here, right? So you're going to get the same thing on the NASDAQ. Wrecked. Looking to go back and break the low. Dollar up. Let's go. We're going to be in the money here. $1. Yeah, dollar's putting in a big green candle right now. Equities are coming down. That's exactly what we're looking for. Risk off. Silver, gold shorts, which aren't really doing anything yet. Silver's trying to square up. So it looks like we may have a risk off situation here. Stronger dollar. Hopefully it's going to stay that way. As of right now, you know, that's the thing. We took S&P short right off the top of the range. Right here, it was an easy call. Took it short right there about an hour ago or so during all those positions. Easy call. You know, and we already know where our projected low of the day is going to be. And we've got bullish blocks down here. We're going to be targeting down here somewhere. Low of the day. It's a huge move. We already know that that's likely to happen. So we're going to hold that trade. We already know that we're going to hold that. Looks great. Great. S&P down right now. Be looking to scale in on pullbacks or looking to get back into it. Hopefully that was the high of the day. That would be cool. Next. Yeah, good game, Wilson, man. Killing it. So, where are we? Down. In structure, too. I mean, it's a structural play. We've already stepped down a couple levels. Yeah, so until that's invalidated, we're going to have a short bias in equities, which is going to probably push the dollar and the yen stronger. The yen's weaker right now, but there'll probably be a continued strength in the dollar, and that's important to understand. Also, if we're likely to be weak in equities today, then we're likely to be stronger dollar. So for stronger dollar, we're likely to be weaker gold, right? That's why gold and equities tend to run together. Not always, but they tend to. So if we know we're likely to have a stronger dollar, then we know that we're positioned the right way on the dollar. Short Aussie dollar, which is going. Short Euro dollar, which is starting to go now. Look at where this is, guys. Look at the potential you have on a pullback. It's insanity. But why, it's easy call. And, just got to manage the risk is the hard part and wait for the market to play out. Trying to sell the high of the day on this Euro dollar, Aussie dollar. Same thing. It's on a big broken high. It's already come down a little bit, but it's still weak. Aussie is actually the weakest currency today. So on the other side here, as this pulls back right in here, that's what we're going to watch on the dollar. And when that happens, we're going to position on this. Position there. Just explaining why specifically the other side. So we need to actually pay attention here. It's a weird time, man. Fire. Hold on a second. What's going on there on the other side? See this here. Bot's also going. Yeah. 1 second. All right. Tips of duty. Modern trading. let's see, euro dollar. So yeah, the Dow's already down. Silver and gold looking good. That gold's fine. Dollar is likely to go higher, but I'm going to leave dollar yen alone. Dollar Swiss, wait for a pullback. Dollar CAD, want to stay long there. While this is pulling back, probably going to get a rejection and a dump here. Stay there in dollar, Kiwi dollar. Kiwi yen. I'm just looking at the dollar pairs right now, really, because of where the dollar is right now. See it on the other side. I'm going to actually take, I think I'm already short or long. I think I might have hedged that. Yeah, I want to overweight short on pound dollar here now that we know what the dollar is doing. Here's what I'm going to do. I'm going to actually close all trades on this chart, and I'm going to reposition short on pound dollar. I don't want to be long on that. I'm going to shoot for that gap way down there. Done in the trade, auto scaled. It's just going to be a small trade. I would rather be overweight short there given what's going on. I'm going to take a risk on the dollar again now that we have a different piece of price action. It's not closed yet, but where it is, I'll take that risk. Pound Swiss, whatever, CAD, whatever. Pound Aussie is actually going. I want to be long on pound Aussie. And it's going. Good game. Got some good stuff going on there. Good game on that. Euro dollar. Same thing. I'm going to just overweight short here. Let me see. I'll just put a stop above the high. If it goes above the high, then whatever. Accelerate that down there. Actually, I'm going to take two there. Overweight that to the downside on euro dollar. And I'm going to bet on a rejection because of what the dollar index is doing right now. So euro dollar, I'm going to bet on some downside. Euro Aussie, good game. We got some pending shorts up there at the top of the day just for a pullback. Whatever, I'll let that play out. Nothing there. Euro yen's kind of a rather be short, but from higher I'll watch it. Come on, dollar. Hold that right there. Euro pound, I'm not messing with. Euro Swiss, not messing with. Euro CAD. We'll see on that. Rather be long. Long on that. I want to wait and see if it goes. CAD yen is probably going to be a short, but it's not a good entry right this second necessarily. May regret that later. I may regret not taking it. Don't really have a lot to lose actually, whatever. Small piece. Swiss yen I'm not going to mess with. CAD Swiss, same thing. I have a feeling this is going to be a short. It's just not really the best entry right now. We'll look to break the low. Position on it next. Really worried about the dollar right now. Aussie dollar, good game. Short there. I'm not going to move my stop to break even yet. I'm going to wait and let that play out. If I wanted to, I could just do this and just instantly move all stops to the barrier. Here we go. Come on. To break even. It looked like it was going to go for a second. You can close all trades this chart or all on the account. I can take partials, and this is a net partial. It calculates your total open exposure, your total volume for all of your trades, and you can take partials on all of it and not just one trade. And there's quick, 1, 5, 10, 20, 25, and 50 and 75%. So if you wanted to close half of your positions, you just do that, bang, and it's done. Only a micro, so I guess I could do it. It wouldn't close it because it's a micro lot. If I wanted to close half of my position, I just do this. And it's done. Whoops. Wrong button there. There, that. So you got to roll over. Use the radial menu, roll over, and done. So that's weird. Don't hit the wrong button. Just hit my my pending order button. So yeah, if you wanted to close half, you can just do that and done, just like that. So, but it's only a micro lot, so there's no half to close. That's useful. You know, if you wanted to close 10%, you'd go over to 10% and do that. You wanted to close 75%, you do that. So it makes it really easy with a radial menu that you control with the analog stick. Nothing like this out there. It's the best risk manager on the market, period, end of story. And there's so much more coming. So much more. Analyze your total risk and open positions as well. Goes through all of your orders and figures out how much risk you have total. What your total risk of loss is in dollars and percentages. And on top of that, I mean, you can control MetaTrader with a freaking PlayStation controller. Who has that? We do. Aussie Kiwi. Good game there. Yeah. That never got hit. That pending order never got hit. It's on the way down. Good game. I had a pending order short in case it retested right here, and it just never got hit. I don't think it's going to either. Skip that. Aussie dollar. Whatever. So I just wanted to take a look at the dollar. It looks like it's going to do a thing here in just a second. Hopefully. Getting there. Pending orders there. Euro Kiwi. We'll get back to analysis here. Looking at what we're trying to figure out what we're looking at. Just think about what you think about. Oh man. Old Bo Jiden. Just think about what you think about. Pound dollar. Whatever. I want to stay short there. The pound is strong, but there's a potential for that to pull back for a couple hours, and the dollar is looking like it might be doing a thing here in just a second, hopefully. Don't know yet. If it doesn't bounce here, it's just going to be a turd of a day, honestly. Today is already whack. There's just nothing happening. Look at the price action. There's nothing. Nothing to do. S&P short could be really good though right there. If that holds and rejects, man, the aggressive play would just be to sell green candles for the rest of the day until that's invalidated. That would be the aggressive play here, to just short every single green candle. Every time it pulls back green, selling into it. Building in that position for the dump. But there's, who knows, man. Whack, man. We got stuff going back and forth both ways. It's going to let the market move and eventually be in the green, hopefully. Probably be in the green either way, whichever way it goes. The fun part about distributed risk, you don't really have to be right. Hard thing for people to understand. You have to position the right way, and it doesn't matter which way the market moves. You manage it. Oh yeah. Yeah, look what happened yesterday. At Swiss, that looks good actually. Good game. Next, look at some stuff. Look at charts. Nothing's changed, drawdown wise. Nothing's changed really. We're just basically hovering around break even. But when the market moves, it's going to go one direction or the other. We're going to figure it out. Give it a minute. We're in a weird time too right now. This is not the best time of the day. Not a good time to be taking scalps really, because of the timing. There's profit taking from London, and you get choppy markets right now. This is the worst hour of the day, basically. Over the next hour. God, this market is garbage, man. Look at this. Here's price action. Nothing. Nothing. So, what levels are we watching today? I think that's the important thing right now. That the thing that we would be the most productive to look at be, you know, what are we watching? Where are we going to be watching today for activity? Dollar. If it's not going to go from here, you know, we'll be watching lower. But I would hate for that to happen. But it's not going anywhere. Not going anywhere. So it's hard to make a decision on this. It's so low already that it's hard to short it. But it's also not going up. That makes sense. You know, we're going to survive either way. We're going to make it. I'm going to make lemonade out of lemons here. Guaranteed. This is interesting. Aussie dollar. This may hold. I could see a green candle coming over the next couple hours. It's just not a good entry short or long. It's not a good long entry because it's already so high up. Do with that. Oh my gosh. Anybody watch the national championship game last night? Oh man. Lol. It was 65-7, I think, was the final. God. Anybody watch that? College football, Georgia versus TCU. Oh my God. The national championship game was 65-7. So that just tells you what a lopsided lineup that was that ended up there. That's pretty crazy. So, good game, Georgia. Yeah, pretty funny. I watched a little bit of it, like the first half, but I had to go to bed because I had to get up for London. But I woke up and the score was like, it was 65-7, I think, was the final in the national champ. Those were the two best teams, and it was 65-7. Like, come on now. Somebody didn't belong there. Crazy. You know, it makes you wonder if there was a better matchup for that. I don't really care too much about football, but I like college football, actually. I like college football. I watch, you know, the Bucks because I'm in Tampa. We go to the games and stuff a lot. We just went to the last game. It's fun to go do it in person and stuff. I'm not like a super like football nut, but I do like watching college football. It's funny. It was 65-7 in the national championship. It's hilarious. It'd be like a soccer game would be like 10-0 or 10-1. Like, it's that bad of a blowout. Like, if it was that crazy, like, that is an incredibly high score, especially for a national championship game. It was just wild. It's a blowout. Nothing here. Nothing happening, man. Stupid. But we're going to be ready for it when it does. Drawdowns come down a lot. Something's going. Something's starting to happen. Something's starting to go. Yeah, we need the market to move is what it is. And our coffee's good. Swiss. Got a strong pound. The pound is strong today. The problem is, so is everything else, except the yen and the Aussie. The Aussie's already down. Yeah, I have a feeling this Aussie's about to do something crazy. Dead, man. Is it completely dead? I mean, everybody can't be waiting on Powell. Like, God. Completely dead. There's nothing happening here. EuroCAD, I think, is going to be a long. I think this is a long. You just might have to wait for it. This makes sense that this would step up again and run up into that and then start to sell off. That would make a lot of sense. I'm already long on it. It's just not going anywhere. We didn't get a trending run in London. So, all right, so here's what we'll do. Here's what we do in a group a lot. We'll take a look and see what actually left the opening range. Let's just look through everything and see what pairs actually left, what pairs actually broke their original high and low of the day. And that will show you the lack of volatility. That will show you what actually happened in London. All right, the dollar index. Your potential high of the day is up here. Your potential low of the day is down here. This is all that's happened in the last 3 hours, 4 hours almost. That's your London session right there. Nothing, zero. It hasn't even left the opening range. Aussie dollar hasn't left the opening range. It hasn't broke the high or low reasonably. Hasn't even left the opening range of the day. Euro dollar hasn't left the opening range. It's still in the middle. Euro pound, same thing. Still nothing. Zero volatility. Hasn't even traveled half of the opening range, much less the daily potential. Not even half of the opening range. Euro yen hasn't even left half of the opening range. Hasn't left the opening range. It's still inside. Euro CAD, lowest volatility of any pair. Hasn't left. Nothing. Zero. Euro Kiwi hasn't left the opening range. Zero volatility. Euro Aussie. Okay, so there's one that's actually outside of the opening range, but it's running right into supply. Bearish blocks all over the place. On a higher high. This is not a long. It's not a long. Matter of fact, normally I'd be looking at this and selling it. It barely left the opening range, but very little volatility at all. There's been no trending move in London there. So there's one. Pound dollar has it not even close. Not even going to say it. Pound yen hasn't left the opening range. Pound CAD hasn't left the opening range. Pound Swiss hasn't left the opening range. Just to put this into perspective. Here. Again, your projected high of the day is here. Your projected low of the day is down here. This is all that's happened. Nothing. To put it into perspective. Zero. Dead London. Dead. Hasn't left the opening range. Pound Aussie. There's another one. And so what was it? The Aussie. Euro Aussie and Pound Aussie. Man, it's because the Aussie is so weak. So there's one that's actually left the opening range and run some kind of a trending movement, but it hasn't gone very far relative to its projected highs and lows. Very well might reject here too. I'm actually going to do something here. Aggressive. I'm going to make an aggressive play here on Euro Aussie and Pound Aussie and take those short because the Aussie is so far down on the low. There it is. Where is it? Euro Aussie and Pound Aussie. I'm going to make an aggressive play short here and guess that it's not going to make it. I've already got some pending orders up there. Aussie. Oh my God. Off all over myself. Jesus Christ. Edge one of these short. I'm already long. I want to be long here, but just in case that runs down, I'm going to take one. So at least that'll slow that down if it goes down. So I'm overweight long, but I also have a short just because of the price action. It looks like it's gonna go down. And what I'll do is I'll move my stops to break even on the other pairs. Hold on, we can do that with one button click on all trades. Done. So the long is in profit, and the others are pending orders anyway. So I'm hedged one way or the other. It's probably going to go down, to be honest. But when it pulls back, I want to be long. I do want to be long pound Aussie, but it looks like it's going to reject. I'm going to do something aggressive and take it the other way. Nothing's changed, but just in case it does, back to trading. Man, I need to go coffee all over the place. Next, pound Kiwi hasn't left the opening range. S&P hasn't left the opening range, but we shorted the top, and that's looking good. That's looking gangster right now. This is the short from the top of the range on the S&P. Let that day play out. That could be really good later. NASDAQ, it tried to leave and then came back inside, so we're still inside the opening range. We're still inside of the initial high and the initial low of the day. We're still inside of that value, those ranges, which means there's been no trending movement. The Dow, still inside the opening range. It's looking pretty bearish. That's only a short, but it's not a great entry. CAD Yen, still inside the opening range. Dollar CAD, still inside the opening range. However, the dollar's looking better here. I want to be long on this, but I'd rather be long from lower. I don't know if it's going to do that today. Still inside the opening range. There's been zero movement in London. Again, relative to your projected high could be up here. Your potential low could be down here. And this is all that's happened today. That's it. That's all that's happened. Nothing. Zero. No movement. There's nothing happening. Oil. Oil is outside. So we're starting to make a trending move on oil. But it's not... I'd rather be long oil, honestly. It's not the best entry. I don't like entering in that bearish block right there. I would rather be long oil. You know what? Actually, I'm not going to do that. I'm going to wait and see what happens here because it looks like we're going to be risk off in equities. But I could see oil being a long. Watch oil today. Watch oil for long. Silver, still inside the opening range. We have not broken the initial high or low of the day since the daily open. Gold, shocker. It is barely outside of the opening range, but gold is so high that it's not a long. It's not a good long entry right now. We're up on a big peak high. This is a prime opportunity to get wrecked and faded the other way. You'll buy into it and then it'll slam back down for the rest of the day because it's already high. We're up on a big higher high. It's, you know, you're gambling that this is going to go higher, and it might. Depends on, you know, your strategy. Looks like it's trying to come back in. So we had what, like maybe 3 out of 30 that have even broken their initial high, low, or low of the day. It's ridiculous. Honestly, it's ridiculous. There's nothing happening here. There's nothing going on. You know, the aggressive play here normally would be to buy Aussie dollar. I'm short because of where it is, but looks like it's going to bounce here. I don't know what the dollar is going to do. I'm not making a decision on that. I don't know what the dollar is doing, but yeah, crazy to look at it and put it into perspective that way. You can really see the lack of volatility in the market. There's nothing happening. Like as far as potential movement, nothing's happened. Nothing. So here comes the pound parent pulling back. I figured that was coming. Pulling back down. So that pound Aussie short might be a good idea, actually. Because the Aussie looks like it's going to gain. That hard to take that long up there on a big higher high in supply. So yeah, but put it in perspective. You can see how whack this has been. Like, there's nothing going on here. I think S&P short's the best trade of the day so far. Short from the top of the range all the way to the low. If you were, you know, scalping that out, you would probably take the profit there at the low of the range. However, We already know that where our potential low of the day is down here. I'm not gonna close that. I'll wait and watch and see what's gonna happen. Could move stop to break even. Matter of fact, that's probably a good idea. Let's do that. Just to protect it. There's no reason not to at this point. Let's go back and find it'll be down at the bottom. Scroll down to in. I had to clean this up. Got coffee all over myself. S&P, I'm going to move my stop to break even. Done. Like that. That's all I need to do. Next. My streaming software. All right. So just in case that slams back up, I'll take the break-even stop because it's such a good entry right at the top of the range here. Still watching the dollar, guys. There's just nothing happening. I wish there was something to do. Yesterday it was the same. It was just very boring. And then we'll wait for Powell at 9 a.m. We'll get a new 4-hour candle and Powell at the same time, which is interesting. And then 30 minutes later, we'll get the equities market open. So I think everybody's just kind of sitting on their money waiting is what it is. But we need to be aware of what's going on. Need to know what levels we're watching. And that's going to be the thing. Once the market starts moving, we'll already know what we're watching to make decisions. It's just whack right now. It is what it is. Let me clean this up real quick. Give me 2 seconds. I'll be right back. Not going anywhere. And we'll continue on with we'll take a look at, I don't know, maybe we'll look at the 4 hours or something to watch and see what's going on. Hey, welcome. Give me 2 seconds. I spilled coffee all over myself. I tried to sling it and stir it, and I had the lid to the Yeti open, and it flew all over the place. Hold on, give me just a second. Let me do this real quick. I'll be right back, and we'll continue on. We'll take a look and try to figure out what levels we're going to watch on the top and bottom end. That's the best thing we can do right now is to prepare, because we got a dead London. Give me just a second. 1 minute. I'll be right back. All right, let's try this again. Yeah. So back to this. We'll take a look. We'll just hit the charts and be ready. We're still just waiting on the dollar. It's unfortunate. There's just no movement here. Low. London has been really bad over the last like year or so. It sucks. I hate it, but there's nothing you can do about it. But try. The only thing you can do is try. And, 4 out of 5 days a week is going to be dead. You might get one day where things run in London and you never know which day it's going to be. So you got to try it. You position on things that make sense and then you wait. You wait and try to get it more right than wrong and wait for the volatility. The volume generally comes, volume and volatility generally come around the equities market open. Nothing you can do about it. Didn't used to be that way, but it is now. Yeah, so back to this. Come on, dollar. It's holding. Gold, yeah, we'll take a look at gold. Safe to leave the bot on during Powell? Yeah, sure. It depends on if you're trading with a prop firm or sometimes they don't want you to trade during news, but yeah, it's because of the strategy. Yeah. I don't bother turning it up. There's no reason to turn it off. A lot of times it'll catch good entries. It's actually what you want. You want volatility. It likes volatility. Back and forth whipsaws, it'll perform well with that. It depends on the strategy, but for the most part, especially with the default strategy, it's a mean reversion type of strategy, and that's what you want. You want markets to run out and then come back. That's typically what happens on those types of things. Gold, nothing really to say here. It's very high. To put this into perspective, look at where it is. And put my blue blockers back on. My hater blockers. Staring at a wall of monitors and trying to keep that stuff out of my face. Yeah, good game. Yeah, welcome, boring. Yeah, try to come back. We'll try to come back a little bit more. This is just normal stuff. We go through a lot more than this on the other side. Specific strategy and the tools and that kind of stuff. Give them a little preview, price action, just how we figure this out, but without giving too much away. There's other stuff. Things that, I don't know. I mean, I'm just going to say it because it's true. We have information the public just generally doesn't have. Understand things about the market that most people don't. There absolutely are things that happen in the market that are very interesting that people just don't know about. People who tell you that doesn't exist are the people who either don't know about it or they're the people doing it to you. The goal here is to reverse engineer algorithmic movement and try to understand what levels liquidity provision algorithms are making decisions at. And it's just a very different way of looking at it. You're not going to see the same stuff here that you're going to see everywhere else because we don't look at it the same way. But, not a sales pitch. If you want to join us, go ahead. We're here, but it's not going to matter either way. Gold. I don't know what I would do here. I mean, it looks like there's going to be some temporary upside is what it looks like. The dollar isn't making a decision. One second. There's not really much to say here, unfortunately. Same thing. I mean, we're in a flat consolidation. Okay, let's look at the 4 hour. Aside from the fact that we're in the clouds, this is a 4 hour chart. You got to zoom out on a 4 hour chart to really understand this. Like, We're way up, higher high, higher high, higher high, higher high, higher high again, over and over and over and over, higher highs. You know, Sir Slithery the snake. And, you know, it's extremely dangerous up here to be taking heavy lot sizes long. On the top, the highest high since, you know, now going back April of last year. We're approaching like 9 months back. After that kind of a run, you just want to be careful with it. Be very careful. Mind your stops if you're trying to go long. It looks like it's trying to go bullish again, and we'll take a look at where our highs are going to be. But for now, we have to pay attention to this and explore the possibility of this. And this is one way that just people just don't look at the markets, and they should. You have to at least entertain the possibility that we're in a range consolidation. What happened here? What happened here? What happened all down here? You know what I mean? We're right in the middle. We stay out of the middle. We only, you know, call it the price action hamburger is what we call it. Call it the price action hamburger. And we stay out of the meat. We only enter in the buns. Giggity. So, lol. Price action hamburger. You only enter in the buns. So we're only looking to sell the high or buy the low of a range, right? Everybody looks at like trend lines and stuff, and you should be looking at it this way. You should be looking at what's actually happening. Markets trade in vertical ranges. Markets step up and down vertically in ranges because it has to. You know, we're right in the middle. If it runs up higher, we're just going to run into sellers, and if it runs down lower, we're going to run into buyers. So it's not the best time to mess with it right this second. You know, just think of it like, you know, the price action hamburger. We stay out of the meat, stay out of the middle. The only thing you can do. You know, as far as potential, you know, I don't know. I'll be looking. Let's see what we got here. Yeah, I mean, God, that ain't happening today, but I mean, it would take a pretty crazy thing to happen for this to make it all the way up into here at 1900. I don't know what I would do here because on one hand, we have bullish price action. On the other hand, this thing is in the clouds and it's extremely dangerous to buy it. It really depends on how far you're looking to take it. You know, what is your time frame to hold it? You know, if you're looking at a 5-minute chart or a 1-minute chart, you know, maybe it may be different, but even lower time frames, you're in a range that's just a consolidating range. You have lower highs currently and higher lows. It's a range contraction. It's not really the best thing to be messing with. You know, even very short term, you're in a range contraction. You got lower highs and higher lows. So the volatility is getting less, not more, if that makes sense. Looking at the higher time frames, 1 hour and 4 hour, I could see a potential for this to go a little bit higher. I don't think it's a good entry from here. What I see here is immediately what I see is we're trapped in a range between here and here. This is our effective trading range, and we're right in the middle of it. And there's no disproportionate risk versus reward, which is something we talk about a lot on the other side. There's no outsized risk versus reward where your reward is greater than your risk. When you're trading from the middle, you have equal opportunity to get stopped out both ways. Trading from the middle of a range. So there's no disproportionate risk versus reward, which means you're risking less than your potential reward. You're risking equal in the middle of a range, and it's not, you got too much room for shenanigans and whipsaws. The S&P is looking good, by the way. S&P shorts starting, looks like it's about to go break the low. Dollar's looking better, which is also crazy because, yeah, it could be risk off. Could be a risk off day here. And that's another thing you want to pay attention to with gold. there's a possibility that this goes with the equities market and against the dollar. It's extremely high already. It's dangerous to try to take this either way. I look at this and it's just immediately no trade. That's just me personally. You may see something different on a lower time frame. You know, we're not talking about the 1 minute chart, but realistically, like there's really not much to do here. And, you know, looking at it this way, you know, we're locked in between a range. There's not much to say. So this is one of those things where I wouldn't really risk my capital on it other than to try to play the short. You know, if we're going to get a pump in the dollar, which is starting to look increasingly more likely all of a sudden. It's kind of what I'm hoping for, is that the dollar goes up today, because we're like pretty much net long dollar. Be a good day. If the dollar runs up, it'll be a good day. So yeah, you know, looking at gold like that, it's hard to make a decision because we're just locked in a range. So it's like, you know, what do you do? Nothing really. There's no answer here. You know, realistically, you could guess one of two ways. Depends on if you're looking to hold the position or get in and out. If you're looking to hold it, you probably don't want to be long, because we're probably very near the high of, you know, the week probably. There's room to go both ways. I could see this running up and down. It's not a good entry either way. It's not a good long entry from here for sure. It's a much better short entry than a long entry, but it's also not going down. That's the analysis on gold. It's it's neither. Bitcoin looks pretty terrible here. This looks like this is going to be a short. Maybe I'll take a little nibbler on that just because there's nothing else to do. If equities are going to go down, Bitcoin's going to go down. That's another thing you need to understand about crypto. Bitcoin follows the equities market, and if stocks are going down, this is going to go down too. Whatever, I'll take a little. I don't know. I'm trying to figure out how to size this. Whatever. Bitcoin actually had a good trade on that yesterday. I'm going to guess that this is going to go back down, and I'll take the stop if it doesn't go. If it cuts through here pretty quickly, the dollar's looking like it might go. It's a maybe, but see how nothing's changed here. Like, there's nothing happening really. But once things start to move, maybe you're positioned the right way. And that's the thing, is we don't know yet. And I hate this kind of stuff because you don't know if you're right or wrong because there's not enough movement yet. You know, so there's not much to do to hedge the risk right now because there's not enough movement. Come on, Aussie dollar. There you go. It's cut low. Short Aussie dollar. Long some other things, Aussie. Short Aussie dollar. Come on, dollar. Pump, pump, pump. Good game. This was a great short yesterday. We took this short yesterday. I wish I was still in it, but the basket closed out, so that's good. Euro dollar looking good, looking much better. Took, net short there on euro dollar. Looks much better now. It's got a lot of room, but a lot of potential room to go down. Looks great. Euro pound, whatever, good game. So the pound may be a little weaker. So pound dollar may be the better short against the dollar, which would make sense. Thing looks terrible. Big, huge range expansion. It's got a lot of room to pull back to the downside. You don't want to be long here. It's not a good idea to be long. It's just not a perfect short entry either right this second. So we'll keep going through. Try to wait until we see something that makes sense. Where were we? Aussie dollar down. Euro dollar looks good to the downside. Euro pound is meh. Euro yen's probably going to be a short. Normally this kind of price action, I would just short it and wait. See if it goes. This kind of thing is just not it. It would be a short. I think I'm already short Euro yen. Hmm. Aussie yen's kind of going. I'm not sure euro yen. Do that real quick. Same thing, nothing. It just. Not going to worry about the entry. This looks like a short, especially on the 1 hour. It looks like you want to be short here to run down. We know what we're watching. And if it comes down, we know we're going to be watching back at the bottom of this range. Also projected low of the day statistically, and we have a bullish block down there back in here. And it's held. So we'll be watching that on the downside. If for some reason it pumps, we'll make a different decision later. But it's the kind of crap where anything can happen coming out of a consolidation. It could go both ways. A lot of times it will, and that's what I'm not looking forward to. It's the whipsaw. But once it moves, we'll be able to make that decision. Euro Aussie, this is looking like this is going to be a short. I'll wait. Be watching up here, the high of the week for the next area to short this. That's going to be a pretty good short from there, depending on when it happens. If for some reason that made it there today, if it did, I would be looking to probably sell that. May not make it that far. I'll be watching here first. See if that stalls first there. Whatever. On dollar. Pound yen looks like this is going to be a short too, because the yen is just completely blown out. And as the yen comes up off the low, which it's already starting to do, pound yen's probably going to be a short. And it's kind of treading water right now, unfortunately. What you can do about this mess, man. Watch pound yen. Dollar's strong, but I'm sure it's going to reject and pull back here because of where this is on the other side. Hopefully we can get a run up on the dollar today. Go through specific strategy on everything. Try to keep that fair to the group members. First rule about Fight Club. On Kiwi. The range is probably going to bounce though. I think this is going to end up being a long. I think Pound Aussie and Pound Kiwi are both going to end up being a long. Not much happening right now. I'm both long and short on Pound Aussie. I'm waiting to see if it's going to pull back. And I've got some pending orders that are looking to get hit. I want to be long on this. Look at where this is. We're way down already. It's a much better long than a short. We just spent, a couple weeks going down. It's starting to flatten out down here. It's just likely that we'll pull back up a little bit. Oh man. Tired today. Come on, S&P. I want to see some downside. Hold again. Yeah, I mean, if it made it up there, if gold made it up that high, I could see that. You'd have to go back, and I don't know. We won't get into the. There's a logic problem with looking back too far, and this is the thing. The thing that people miss a lot of times. There's a logic problem with looking back too far in time for those kind of areas. You're going back, a year ago. What makes you believe, and it's just a thought experiment, I'm not saying anyone's wrong or anything, and I've talked about this, especially looking at supply and demand on a weekly chart and stuff like this. What makes you believe that a year ago, looking back at what happened a year ago, what makes you believe that all of this money is still in the same configuration on the books that it was a year ago? Think about it. Mind blown. People get freaked. People get triggered about this. People say, oh yeah, looking at a monthly chart. They're looking at a monthly chart talking about supply and demand levels back from 2015. What makes you believe that that money's still on the books in the same configuration back from 2015? From even a year ago, through presidential elections, through COVID, through all of the craziness that's been going on, all the China warfare. Hey, welcome, Zach. Welcome. And it's just, this is a logic. There's a logic problem. The very fabric of supply and demand, order blocks, previous price, whatever you want to call it, previous price. The very fabric of the logic breaks down once you go back a little bit too far. And this is the thing. And it's something that a lot of people don't think about. And people get triggered, say, oh, I was looking at a monthly chart and, back from 2015, there was this level and you expect price to stop there. Why? Why do you expect, why? Think about how markets actually work, how orders actually work, like how things are squared up on the back end. For every buyer, there has to be a seller. What makes you believe that? And I'm not, picking on this specifically. I'm just saying, like, it's an important thought experiment. It's an important thing to think about. What makes you believe that going back a year ago, this money is in the same configuration on the books that it was? Nobody's taken any profit. Nobody's sold some gold and put it into emerging markets. Nobody, you know what I mean? Nobody's done anything with that money, and it's all still sitting there. Everything's still sitting there on the books, open from a year ago in the same configuration. That completely changes the logic, completely changes things, and understanding how markets work and knowing how those positions come on and off the books. It is extremely unlikely at best and virtually impossible for that money to still be in the same configuration on the books that it was a year ago, even a year ago. And much less looking at a weekly and monthly chart going back multiple years, talking about supply and demand. It doesn't make sense. Now, there is somewhat of a self-fulfilling prophecy because humans make decisions based on historical information, that historical data. And I've talked about this in the past, and people are like, they get triggered at first and then they think about it and then it gets real quiet. It's like, wait a minute, you're right. Like, if you think about it, what makes you think that all of this money is, we're looking at what happened in the past previously, and we're trying to make decisions based on, especially things like order blocks, especially that logic breaks down doesn't take long. The logic of it just breaks down that money's not still there in the same configuration. So why should the market stop there? This is where some people that teach this are wrong, because they're not thinking about that. What makes you believe that going back a year ago, and again, not picking on anybody specifically, it's just a thought experiment that matters. This matters. What makes you believe that this money is still in the same configuration on the books that it was, especially, it's more about, people are looking at a weekly chart and, they're looking at a level back from 2018 and, expecting it to be significant at all. Why? Why do you think that money's still there? It's not. I promise you, it's not. It's not. And, if you actually see order flow, you'll see that it's not. And we'll put it that way. This is just a historical record of things that have happened in the past. Now, it changes. That money's not still there in the same configuration. That volume isn't there. It's changed. People take profit. People, move that money into something else. You know what I mean? So, and this is where the logic of it breaks down once you get past a certain, especially when there's big money movement events, like all the Fed decisions, all the rate hikes. You know how much money's moved? Like, we've had some days on the NASDAQ that were record days lately. We've had multiple record days lately with record moves. That money is moving all over the place, and it's virtually impossible that it's still in the same configuration. That's why people, it gets me on Bitcoin all the time, is people look at like a log chart on Bitcoin and they think that, going back, whatever, however many years or however much time, that all that money's still there. What makes you believe that money's still there? And why should price stop there? Because the money was there at one point. You don't think anybody's taking profit or anything? It's something to think about. It's a very important thought experiment.
NASDAQ. Entering position. Log.
Wrecked. That must be a range expansion if I had to guess. It's probably not going to be a long, but it's a range expansion protection. We'll take a look at that in a minute. The bot just took NASDAQ. Maybe it wasn't a bad idea. I don't know. I tend to let it do its thing. But, it's a very relevant thought experiment. Once you go back a certain amount of time, the whole logic of price action, really supply and demand and things like that, looking at some order block on the 4-hour chart from a year ago, kind of breaks down if you think about it. And it's just something to think about. It doesn't mean that humans aren't going to make decisions there. And that's the flip side of the conversation, is humans make decisions based on something that's happened in the past. Even if it's not there, it becomes a self-fulfilling prophecy. And it's the Fibonacci is that way. Fibonacci sequence. You have million traders all making decisions at the same levels. They draw their retracements from the same highs to the same lows, and they all make decisions at the same levels and pretend that it's some magic, that it's think about it. It's a self-fulfilling prophecy, and this is where something like that's healthy to think about, even if it runs counter to what you believe in your narrative. But there's a lot of sense in what I'm saying, and this is something that nobody ever talks about. Never heard anybody ever talk about that. But just understanding how markets work and looking at the way that it changes so much in order flow, it changes. Open interest changes, constantly changes. Just because something happened a year ago doesn't mean that money's still there. And that's why things just blow through sometimes. And it's just like, well, I thought it should stop there because it was resistance or whatever. Well, money's probably not there anymore because we've gone through multiple rate hikes, all this news, money changing events, inflation, global events, presidential elections, whatever, Brexit. People are looking back before Brexit on the pound and expecting that some levels should hold because that's what it was before Brexit. You know how much of that money's in a different configuration now? It's not there anymore, and it's in something else. That's the problem, and it's something to think about. It's just something to think about. I can hear anybody else talk about that. People get mega triggered when you explain why supply and demand and order blocks break down after a certain amount of time, and it doesn't make sense anymore logically after a certain period of time because that money has moved. And if you look at order flow live, you'll see that things changes. Open interest in the green. Something happened in the green all of a sudden. Got profits. Dollar. Okay. Dollar's pumping. So anyway, it's something to think about, looking back at, where gold was before and why it was there before. There's a lot of things that have changed in gold. Russia pegged their ruble to the gold at a fixed price. That's changed the gold market. And that's the thing, is how much of this money, and you have to ask yourself logically, how much of this money from last April is still there in that configuration and hasn't moved, and all of these people are still holding all of that money in the same place. It's something to think about. It's just something to think about, not arguing against whatever. I look at, levels too, because I know that humans make decisions at these levels. Software makes decisions at these levels. However, there are other things that happen in the market that are more important than looking back at a level from a year ago. And that's where it kind of breaks down. After a few weeks, the very logic of supply and demand breaks down after you go back a few weeks in price action. And it's just something people never think about. It's something you should consider as a thought experiment. Think about what I'm saying. It'll make a lot of sense. And it's like, oh, wait a minute. Oh, okay. Yeah. So, anywho, come on, dollar. So, but yeah, I could see gold going higher for sure. Just statistically, where within its current ranges, I mean, there's a potential, given the amount of price action that's happened, the potential projected high of the week is at 1920. So we've got a huge range on gold right now because we've been in a flat consolidation for a couple days. So, our effective trading range is between 1920 and 1820, basically. 1828 and 1920. Crazy. We got $100 range on gold within a weekly right now, and we're just hanging at the weekly open. We haven't moved. We're flat. It could go either way. So assuming that we only had a small half-sized weekly candle, you're still talking about a potential range like this in gold. Like, even if the candle was smaller than average, like there's a lot that could happen here. The problem is we're up on a big high right here. And what tends to happen with this stuff is there will tend to be the shark fin move. Won't go into specific strategy on YouTube, but you tend to get that kind of thing where it'll get everybody long, it'll trigger everybody, all the breakout traders long, and chew into that liquidity and then run it hard to the downside to break that low right there. That's probably what's going to happen. Probably what's going to happen is we're waiting for it. I'm taking a preliminary position short, but I'm waiting for a break of the high. I'm going to wait for the break of the high and fade into it because of where we are. And, again, it doesn't mean that that's going to be right either, but we don't really have enough movement to make a decision yet. And it's going to be not just gold, it's the whole thing. Same thing with the dollar. The dollar may run up a little bit and then get wrecked. It may run up here like this and then go break the low. Trying to figure out which way it's going to go. Up right now, fortunately. Stopped out on a couple things. What was that? Got stopped out. It's all right. Still in the green for the day. Like $15 in stops, but going into profit now too. $3 in profit. Need more than that, obviously. Aussie dollar. There we go. That's running. That's looking good. Short here. Oh yeah, got plenty of room. Yeah, we already know what we're watching on the downside there. Trading like a liquidity provision algorithm. We need to know where it's no longer profitable. Be long or short. Where is it no longer profitable for a liquidity provision algorithm to take the opposite end of the trade? Because that's what LPs do. They provide liquidity by taking the opposite end of the trade of you. All just on a ledger anyway. Try to find what that net balance is in the market. Are we 17 billion long and 16 billion short? That kind of what's the likely balance? Where is the market lopsided on one side? That's the thing. If everybody stands on one side of the boat, that's the side of the boat that's going to sink. Beware of the crowded trade. Dossie. Lol. Yeah, so kind of watching. Give me a second. 1 minute. All right. Sorry about that. Yeah, it's an interesting conversation to have about supply and demand. And once you look back a certain amount, the whole logic breaks down. Think about it. It's an aha moment. That is an aha moment. If you think about that and say, wait a minute. Right. That doesn't make sense, does it? Does not make sense to look back past a certain period of time. People
Yo, it's good,
change.
BB. How you doing, bro?
Hey, what's going on? Yeah, what's going on?
No, you make a really good point with that, and I think a lot, like, because it's not even it's not profitable to hold something from, a 2000 high, like 20 years. It's not really profitable to do that.
Right.
I think there's like two ways to think about it. I mean, obviously, there are people who hold trades for months,
Banks
even
hold for a long
I guess
time.
years, if
Sure.
like it. But it's not even like leverage trades. It's like, am I going to transfer, am I going to hold billions of dollars worth of the USD if USD is going to go down in value and CAD is going to go up? So why wouldn't I just like shift it over and maybe gain a few percent or save a few percent, whatever.
Right. And it changes configuration too. Some gets taken off and some maybe get added to it. And that's the thing. And it's just a thought experiment. It doesn't mean that like you're saying, sometimes banks do hold positions for a couple of years. Like it does happen, but it gets knocked off and it's not in the same configuration. It's just a thought experiment of it. Yeah, go ahead. It's just,
exactly.
There's some logic to it,
And there's two ways to think about it. So like above a high is buy side liquidity. And what is buy side liquidity? If somebody's short, and I mean, obviously, we'll think of it as like you have stop losses in the market. If you're short, you have, a buy or you have to buy back at that price where your stop loss is at.
Right.
So if price gets to that point, you want to be out. But there's also trend following institutions and all that kinds of stuff that are looking at the macro. So if it breaks a high, they're going to be buying.
Right.
So that's what the buy side liquidity, it's flooding with buy side going up, and then also buying back from shorts. So it might not necessarily be, breaking a high. Like let's say for Bitcoin, broke the 2018 high before the run to 65K or whatever.
Right.
That break above people might not necessarily been holding shorts from 2 years ago or whatever, but there would have been a lot of, trend following buying happening when it was breaking that previous high.
Sure.
So that's like something where it wouldn't be necessarily holding from, years, tens of years prior, but it would be new,
but there's still
facilitated liquidity.
No, I totally get that. Yeah. Yeah,
Yeah.
right. Yeah, and that's what I mean. It's nuanced, and
But
where
it's
the
not in the
balance
market
is,
though. Like
right, and where the
what you're
balance,
saying, it's
right,
not in the market, but it's, it's looking at
interest,
price
open
action to
interest, right,
determine what would happen.
or yeah, and it's about that interest too. Where I totally get what you're saying. That's where there are levels where there's going to be more interest than others, right, and that's kind of part of it. It's the thought experiment of, is the money still there? But like you're saying, maybe there's interest in that level for a different reason. I get it. But that's kind of the thing. It changes. It changes is the point. Where the money used to be may not. It may be in a different concentration. Is kind of the thing.
Yeah,
Money
exactly.
changes
And the thing is,
concentrations in different levels.
if you are willing to look far enough back, you'll find a reason to go long or short at any
Sure.
level. It's
Right.
like there has to be a
That's yeah.
cutoff.
Right.
I know for you, I mean, you have, so this indicator specifically, there's a specific amount of days that it'll calculate how the average of the
Right.
daily range, all that kinds of stuff. There's a certain time period that it,
Right.
it takes into account. I know ICT talks about it's the IPTA data ranges. So it's 20,
Right.
40, 60 days back, and anything. So it's basically a month, 2 months, 3 months. So like anywhere from the monthly chart to the quarterly chart is kind of how I think about it. But it's interesting where that's kind of like the longest. And I mean, I don't do like long-term trading, so it wouldn't really matter to me, but
Right. And that's kind
that's
of the
kind of like
point.
the liquidity that you want to be looking for.
Right.
So like
And that's
weekly highs
part
and
of the
lows and
point.
stuff.
Yeah. Is it, looking at a monthly chart to take a trade on a 1 minute chart. Like that's kind of, it's kind of the point. Anyway, it's just a thought experiment. Is it, how useful is it looking back multiple years on a weekly or monthly chart if you're just going to drill down into a 1 minute chart to take your entry? And that's
Yeah,
the
I think
point.
that's
It's a thought
ridiculous.
experiment.
Yeah.
It's the thought experiment of, wait a minute, it kind of forces you to think about what's actually happening on the chart and not pay attention to your moving average or whatever. Like it's kind of a it's the thought experiment of, wait a minute, there's something else happening here, kind of thing. There's something else. There's another reason why price does what it does. It's not because
I think
my moving average, my
the
MACD crossed.
the reason most people do that is probably they're trying to enter a scalp trade. And you see
Good
those
point.
people with 100R 200R trades, they're trying to get in as a scalp and hold for like months.
Yeah.
Which, I mean, first off,
Yeah,
like people don't understand the math behind, like it's not even hard math. Like it's literally just compounding. Like
right.
100 times 1.01, just 1%, like whatever, a day, a week, whatever,
Right.
it doesn't matter. It compounds fast, like very fast. Once you get over a certain point, like the 1% is now 1.01%, and it just
Exactly.
it compounds fast, and
That's
people
the
don't
point.
understand that.
Yep.
And $100 account might not be, like, it might not be very fascinating seeing the fluctuations of a 50 cents or a dollar, but you get
Right.
funded and you get 100,000, or with
by
a bunch of different
percentage,
prop
right?
firms you have 1 million, then 1% becomes 10K.
Right.
And then
That
it's
percentage changes on that larger the dollar amount changes because the percentage is, even though the percentage is the same, that dollar amount can be very different once it's compounded. And that's it's part of the thing. You might make $50 today and be mad you only made $50, but a couple months from now that $50 may be $500, compounded. And that's kind of the whole I get what you're saying there.
And then people
Small
also don't have the
targets.
psychology to, like, they'll be like, oh, it'll be great if I have $1 million account and then I can hold for 100R trades. Let's say
Yeah.
they
Or
would
I can take a
take
100
100R
lot
trades.
position. Yeah.
Let's just
Yeah.
say they were profitable doing
Yeah.
that. We'll whatever. Like, we don't need to say if that's realistic or not, but
Right.
let's just say it happens. There's no way you risk 1% and hold a full 100R trade on $1 million account.
Right.
Like there's just no, you're gonna have a floating profit of $1 million? Like
Yeah.
that's, I mean, that's idiotic in my
And the
eyes. Because what
stocks
happens,
alone, yeah.
this happens a lot. And like I mean, I know it happens to every trader if you don't have a specific, way of managing risk, or you're willing to let the price come back to either break even or come
Right.
back to stop loss. If you're gonna let it come, it goes up 50R and then it comes all the way back down because you're married to an idea and
Right.
you think it's going to go one place and you're just seeing that. You got tunnel vision one way, and that's a very dangerous thing to do when you're trading,
Yep.
specifically for day traders, because it's, you know everything can change really fast.
Sure. Right.
One black swan event or
Right. And then
something, and the whole narrative changes.
I was just going to say the whole narrative, the whole sentiment, the whole market sentiment can change in the flick of a switch. And then,
Yeah,
how many months did you waste,
exactly. Like, I don't know how many, I don't know when it was, but like I remember dollar gapped down. Like I feel like it was half a dollar or something like that, and
Mm-hmm.
translating that to Forex and stuff like that, that's crazy. And that's just on the weekend gap. And then,
Right.
the GBP, whatever that was, that all the GBP pairs moved 500 plus pips, which is insane. That
Right.
changes everything.
Sure. Right. And then now the whole thing has changed. Right. Exactly. That's the problem with trying to hold for months. It's part of it. You get it can change so quickly. We're in a very volatile. There's a lot of headline risk right now. It has been even since Trump. Like, never knew what he was going to say, and like even back then during the China trade war mess, like you never knew what was going to be said from one day to the other. Things were getting jerked around all over the place, and you had Brexit come in, and now you go through another election. Now we got all this crazy inflation, and it's like everything keeps changing like very rapidly. So it's it is a tough thing to stay on top of. What am I here? Both I'm hedged. Yeah. So yeah, it's and everybody has a different way of doing things too. I'm not necessarily saying that one way is right or wrong. I'm saying that it can be there. Maybe there's another way to think about it. Is kind of what I'm saying. Trying to drive the idea of thinking about it a different way is really what it is. So we're getting closer here, getting closer to our 8 a.m. candle. Don't really have a lot here. We got the dollar's moving in the right direction now. Finally, some of this is starting to go. Finally, starting to get into green. It's slow today, unfortunately. Not some of it right. Just slow. Aussie yen move stops to break even there. Oh wait, no, that's pending order. Never mind. Lol. Aussie Kiwi, that's a pending order. Aussie dollar, I think it's time on that. I'll move my stop there. Stops to break even. Gonna protect that. CAD Swiss is whatever. Some things are starting to go. Gold short starting to go. Dollar CAD long is good. It's slow so far. Small risk, but waiting to see if the market's going to do a thing here. If it's going to cooperate. What's that? Euro Swiss, that looks like a short too. Below. There. Get this here. Start taking stuff that makes sense again. See if it's time to reposition on any of this. Euro yen, still waiting on that. Nothing to do. Euro Aussie, just waiting on the market to move, really, is what it is. It's kind of crap so far. We got tagged in there. Euro Aussie got tagged in. Euro Kiwi, it's fine. That Euro dollar, hopefully that'll go. weird market today. So yeah, flipping through looking. But yeah, that every once in a while we'll have that conversation about the logic of looking back too far and how that kind of breaks down in a way if you think about it. And also the logic of traders, mass psychology, all making decisions at the same point. And, there's something to think about there. Everybody's making decisions at the same place. Maybe it's not that it's magic, but that it's everybody's making decisions at the same place. And maybe
that's a really good point.
Maybe that's why.
Like everybody sees the same chart. It's so you have to be able to, decipher what's important and what's not.
Right.
And
that's hard to do.
Very hard. And I think a lot of it is, because nowadays it's so easy to slam 50 indicators on your chart. There's so much information.
Right.
So blocking out
overload. Right.
Blocking out the bad, not necessarily the bad information, because anything can be useful, but blocking out information that won't be useful to how you're, deciphering the charts and all that kinds of stuff is, I think, the biggest thing. Because, you talk about it, I think like anything can be profitable, like whether you're flipping a coin or,
sure.
Your dog wags their tail 3 times, then you buy it, or once, then you sell it. Like you could make money anyway. So it's determining your thing. But I wanted to ask you about one thing. So this is kind of off topic, but this is in your realm and you probably following it. But the whole chat GPT thing.
Oh yeah. AI.
What are your thoughts on that? And how do you think, my eyes, the markets are controlled by like an algorithm, all that kinds of stuff. But how do you think that's going to change things going forward? Because it's now, to my knowledge, it's open source. So most of these things are open source, so it's available to the public.
Right. And
so I just want to see what your thoughts are.
I think it's going to accelerate development on things. I think it's going to put a lot of people out of business. It probably already is. I think some people are going to there's going to be a time period where some people who use it as a tool are going to make more money than they normally would, because they'll be able to provide that information or whatever. It's going to help people learn things quicker, I think, is the main thing. I'm doing some AI stuff right now. I've messed around with that quite a bit. It doesn't do everything for you, but it can rapidly accelerate. And this is the thing. This is what I have to say about it. I think it is going to rapidly accelerate development of things, of technology and things like that. I think that kind of thing being open to the public, we are in a crazy time right now. Like we are in a crazy time happening with this, with this coming publicly. Here we go. Here, got the dollar running, but I think it's going to rapidly accelerate the time frames on how quickly things can get developed, because it can cut out a lot of the learning curve on some things. You can say, look, I need to learn how to do this. I need to figure out this formula to do this thing. And, you can just ask it and it can help you figure it out quickly. It doesn't necessarily do it for you. And I've played with this a lot, and it gets a lot of things wrong, but it's very good at figuring out the logic of how to do something. Say, look, I need to make a formula on, I need to figure out how to calculate, how many times in the last 200 days the high of the day came in the 10 a.m. hour. It can help you figure that out. It may get it wrong, but it can help you figure out how to do it. And that's kind of the point, is I think it's really going to like dramatically accelerate development. And I think there's going to be a point, because it's open source, and we've talked about this for years. Here we go into profit too. We talked about this. I think a lot of people are going to not have a skill to offer. If your job is to, take this information out of this spreadsheet, move it into another file, And you got to determine which one of these, you got to look through a spreadsheet and say, okay, every sale that happened before the first of the year gets this mark on it, and every sale that happened afterwards gets this mark. There are people who that's their job, things like that. That kind of stuff can be done now with AI. Now it can be done within seconds. It can do a day's worth of work of a human within seconds. And that is disruptive. And that's the thing is I think we're going to see a large wave over the next 2 or 3 years. You're going to see some people getting fired. You're going to see some people whose jobs are kind of like not really super necessary. You're going to see software start to replace a lot of that. And I think open source AI, GPT-4 is coming. There's a next generation that's coming soon to that type of AI, and it's just training on all of just billions of lines of text on the internet and all encyclopedias and Wikipedia and it's already smarter than humans, and there are some things that don't require really any human nuance, any human interpretation. Some things that are repetitive tasks that are, I think, are
binary,
going away. Yeah, right. And, rules based, right? Rules based. Like if, your job is to, look at this expense report and everything that was before this date, do this, and everything after this date, do that. Like that's some people's jobs. Like that's what they do. They go in and sit in a cubicle and they open a spreadsheet and they say, okay, every, dollar amount, I need to add up all the dollar amounts from this doctor and put it into this file and bill them. Those jobs will be going away. I mean, you look at an Amazon warehouse right
for
now.
Sure.
Have you seen the robotic, like between AI and robotics and the combination of the two? They already have robots that can like pick up boxes and move them across the factory and stuff like that. Like it's here. It's already here. You're going to, in 5 years, wait till the wave starts. Wait till it starts. And this is the problem with demanding too high of a minimum wage. People are going to demand themselves out of a job. We've talked about this a lot.
Exactly.
People are going to demand too much money, and the business owner is going to have to make a business decision and say, you know what, I can spend $300,000. Say you're a franchise owner of McDonald's. Just as an example, say, look, I can spend $300,000 and buy this robotic arm and this AI software to run the drive-through, and you just talk to it and then it gets your order right every time perfectly, and the robotic arm gets your order right every time perfectly, and you don't have 15 teenagers in there picking their nose making your burgers. There's no risk.
And it can run 24/7.
24/7. There's no risk of a slip and fall and them suing. There's no risk of an employee suing you because they got burned on the fryer. There's none of that. You can eliminate all of that. Business expense. You don't have to pay insurance. You don't have to pay dental. You don't have to pay whatever. You don't have to pay you don't have to put toilet paper in the bathrooms for your employees. You just think about all of the little things. You don't have to buy uniforms. You buy 2 robotic arms that make hamburgers and French fries, and you have a programmer or a computer guy in there. You have 1 computer guy in a McDonald's instead of 12 teenagers. Think about think about what's about to happen here. Aside from that, like grocery baggers or like cashiers, like at the grocery store. Like here's an example, just at the Publix right down the street. Went in Publix the other day and they completely remodeled the whole thing. It's almost all self-checkout now. They removed the whole middle aisles of all the cashiers. Where the cashiers are, it's all self-checkout now. And that's just something that's going away. So it's being replaced by software. But think about, I think the fast food is a great example. And when one does it, they're all going to jump on it. Wait till McDonald's makes that decision. Then Burger King's going to chase them. Taco Bell's going to chase them. All of them. They're all going to do it at the same time. And
I was thinking about this a whole lot.
Are about to just disappear.
Oh, completely. And so I was thinking about this a lot the past few days. After I was playing around with ChatGPT, and it was fascinating. But I was thinking about it. I was like, damn, I really wish I had this in high school. Like
right.
High school would be so easy.
Yeah, think
But then
about
I
college.
got to thinking, like a few hours later, I was like, you know what? I think that I just turned 22, and
Hmm.
I think that the few years below me, so maybe people who are around 20
Hmm.
or maybe even 18, but the kids in high school right now and below are effed. Like, I think that because they have access to things like this, like,
Right.
they don't need to be competent because they don't need to think for themselves. And I think that's, I
That
mean,
is a
now that
real
I think
thing.
about
Yeah,
it,
that's absolutely
it's
happening.
bad. Yeah, it's
Instant information
bad
sharing
for,
has changed the world, and it's only accelerating. It's like pen and paper. You don't need to know how to write anymore. Why would you need to? You can just talk to your phone. You dictate it, and it just, you know what I mean? You don't need to know how to do something. You just ask Google, and it tells you. You know what I mean? Like, it, things
and
are
then
changing.
and then what does that do? What does that
What
do?
does it do
It
for
creates
society?
dependence.
There's
It
a,
creates dependence.
right, and there exactly. That's one problem. Is what if it gets taken away? That dependence, and it, you'll have a dysfunctional society if it gets taken away. But also, there's a very real question that you have to ask yourself: is what service are all of these millions of humans that are in school for whatever they're studying? What service are they going to be able to provide the world if
Yeah, yeah, that's true.
software can
That's
easily
scary.
do their job? You know what,
That's a
you
scary
know,
thought.
like think about it, like an accountant. If you're in college to be an accountant or you just graduated, AI can do that now. It can do it now. You know, like it can do your job better than you can. If you're a pharmacist, this is a known issue in pharmacy right now. If you're a pharmacist, AI can do your job way better than you can with less errors per 1,000. Well, no errors, you know, you know what I mean? Like filling prescriptions and making sure it's right. Like that job can be done now. A lawyer, it's a thing that's based on rules. Law is based on rules. There's no need for a lawyer anymore. AI is already a better lawyer,
I never
faster
thought about that.
than a human. It's
That's
a
true.
system based on specifically on rules, law. Think about it. Like there's no need to think about an attorney. Like there's no reason to, like you don't, AI
Wow.
is the ultimate attorney. It's based on rules. There's no
Yeah.
interpretation. It's the law. And so think about things like that that are binary, like you're saying, that are black and white. There is a set way to do things. Anything that is a repeatable task that's based on rules at all, and there's no interpretation, there's no nuance, human nuance. That is all going away, and we're heading into a really rough period over the next 3 to 5 years, where there's going to be a lot of people who just aren't going to. There's businesses who are going to make that subtle shift, and they're going to stop hiring people to do this kind of job because there's software that does it now. They have an open AI beta that does it now. You know, they'll be shifting away. You document about money management. No, we do that. You know, yeah, we just do it all live. As far as the money management itself, it's mostly experience, man. Honestly, that's a tough one, man. That's hard because of you know,
That's the
it's a
hardest part of
subjective thing.
trading.
The money management is the hard part, and that can make or break it. It can make or break a strategy. Um,
It's
Maybe
because
we'll get into some of
and
that, but
I mean, in my opinion, and I just for personal experience, it's the hardest part because if you don't have a plan going in of how you're going to manage it, your
yeah,
psychology completely shifts once you have money on the line.
right.
And it just the
That
money
fear of
management just
loss. Yeah,
it goes completely out the door because you might be up 5% floating and then you realize, oh, I might be able to get up 10%, even though your plan was to go up only, you're aiming for whatever or whatever.
right.
And if you don't have a plan of how you're going to get out of the trade, you're screwed once you're in the trade.
Yeah,
It's by far
the
the
money
hardest
management
part.
part is the
Entering
difficult.
entering easy. Yeah,
Uh,
entering's easy.
yeah, it's that, and it's subjective too. Like it changes. It can change depending on the market conditions. Like, you know, sometimes you may need to take a position off in order to protect something else, and it's really it's hard to say sometimes, to say, look, I'm going to risk X amount of percent per trade. And that's why taking small profit targets helps. And stacking it depends. There's multiple schools of thought on that. It's a tough question to answer. As far as the risk management, the money management is the important part. That is the most important part, and it's mostly the reality. And my answer is, it changes, and you got to do it on the fly. You got to. Sometimes you might need to change it. You might be in a trade, and all of a sudden something happens, and it's, might be time to take profit on that, and change it because, you were planning on holding it, but, whatever. It's mostly about, I think the biggest problem is how much you're risking. What is your total risk of loss? I'm working on a tool to fix that. I've got it working right now. It calculates your total, all of your open positions, including pending orders, and it calculates if everything got stopped out, what would your total loss be? So at all times what your total risk of loss is per pair, and in total, this is going to be an extreme help as far as risk management goes. It doesn't exist out there. I've looked, and I don't see anything like this, especially like this. But this will figure out easily all in one place, right from the app. It'll analyze your open exposure, all of your pending orders and open trades, and tell you exactly what percentage and what dollar amount you're risking and what your total reward would be if your targets hit. So your total of what everything is. Like if you have multiple positions on, say, look, all of these positions, if everything got stopped out, it's risking, 2.1% of my account or whatever it may be. That's going to be a big help. I just got it working over the weekend. It's going to be coming. So that's a thing. That'll definitely help. But as far as the risk management, the problem is you can't control the market conditions. That's the problem, and it changes. Sometimes it changes, and you got to change with it. Moving stop to break even on this pound kiwi, it's up.
Because sometimes you want to be targeting, previous like week's high or something like that, and you're expecting a lot of volatility one day. And if you're going to use the same rigid rules from one day that you expect a lot of volatility to another day that you don't expect a lot of volatility, like it's going to be like a Z day, it's going to be completely different. So, I mean, you can have rigid rules for specific things, but you have to have like a process to figure out which day you're going to do. So, I mean, there's a way to do it, I guess, but
yeah, go ahead.
But yeah, no, I mean, like you said, I think that's the biggest thing. It's experience is the biggest thing.
That's the answer. I hate to say that. Yeah, there's no set
because
rule.
You can't you can't look at. I mean, you can back test as much as you want, and even forward test as much as you want, but it's like that doesn't. Money management isn't applied there. No matter how much you back test or forward test, even if you know for a fact 80% of the time your trades go to 2R or whatever, the money management, it's a different thing because psychology is brought into it.
Right. Yeah, you got some stuff going here. Yeah. So yeah, that's a tough one, man. That absolutely is one of the hardest parts of trading, and it's a make or break thing. Like the entries don't matter nearly as much as the management. We talk about that a lot. It's a hard question to answer because there's no set answer for that. Might get tagged in there. Yeah. So yeah, there's really no set, do this and that. You can try to have a set thing, like say, I'm going to risk 0.5% every single time, but that doesn't always work out that way in reality. And that's the problem with it, is in practice, it sounds good on paper, but it doesn't always work out that way. I don't know how to even answer that question because it's different and it changes. Your risk management is the thing, and it's kind of one of those things you do on the fly. And, both. Yeah, you just kind of do it on the fly, and sometimes you got to change your bias and decisions, and that's the hard part, is changing it. Yeah, risk management is one of the crazy things. You can, the better thing to do is to just make sure that you don't go over a loss limit. First things first. Say, look, there's nothing wrong with doing that. Setting a loss limit, saying, look, I'm not going to lose more than this many dollars today, or this much percent, depending on how you want to look at it. I'm not willing to let this trade go beyond this level, or it's invalidated. And then sometimes it's just part of it. You're going to take losses. You're going to have losing days. You're going to have losing weeks. And I don't know. That's why I advocate for smaller positions and more of them, because you give yourself room to be right. Give yourself room to breathe sometimes. That matters. It's just, yeah, it's a tough one.
You give yourself the ability to be wrong on the. You give yourself the ability to be wrong on the bad days and right on the very good days.
Yeah.
And you can only do that by staying in the game.
Right. And that's the thing. Exactly. It's about the long game. You're going to have good days and bad days, but can you survive to trade again tomorrow? And I think the immediate answer there would be to take less risk. Just right off the bat, just, less risk. And try that for a little bit. Whatever, risk you're taking, try less for once. And just, even though you say, look, well, it's going to take forever, just try it and you might be surprised. You'd be surprised at how quickly you can gain ground with less risk. It seems counterintuitive, but you might be surprised. Dollars you run, and finally we got the dollar right today, which is good. We're betting on the dollar. Still haven't run. Watching this here, we got our 8 a.m. candle. Watching some of these things to when they start to get to level, might take some profit. I'm considering. Did take some stops actually during that movement. Yeah, got chewed back in stops, but got some good positions, so it's okay. Considering closing out a basket and then repositioning. Know that some of these could go. Trying to protect what can be protected, like Bitcoin, whatever. I'll move my stop to break even there. I'm short from higher. Hopefully it'll go. Did get stopped out on some things, but some other things ran, so it's fine. And got some good positions. That S&P short is money. That's money right there. So I'm going to leave that on. What did there? Yeah, it's moving stops to break even, making sure that some things are protected. So I'm watching this. I'm waiting for the dollar to hit a certain level, and I may potentially take some profit. But we got it, for the most part, we got it right. The dollar up was the game this morning. That was the play. We got that right. So that's good. Waiting. Like dollar CAD has just got so much room, so far that it could go. I'm just going to wait on that. Yeah, so got a run on. We got a basket on. We got some of it right. Don't have to get all of it right. With this kind of stuff, I'm just kind of, honestly, I'm just taking things that make the most sense with low risk, and I'm waiting for the market to move. We needed to wait for the market to move is what it is. Actually, real quick, I hear everybody getting up. Stops to break even. Let everything do what it's going to do. Some things are going to go, some things aren't. That's looking really good right there. Euro Kiwi. Well, I'll see the other way. Euro Yen, that looks like that's going to be a short. That closes that way. I'm going to get these stops out of the way. If that closes like that, that's going to be good. Stops out of the way, so there's no reason to take that because I'm already short, but go the other way. Tighter one, let one go and take the tighter run. More risk. So got some stuff going here. We'll have to look at the market here. Look at the charts. Maybe gold's going to have a hard time going up if the dollar's going to be strong, though, and that's the thing. Yeah, we'll see. You know, I'm watching it. Relative volatility matters. We'll see. Short stops and break even. We'll see what's up with it. I've got a pending order higher if it breaks the high. I'd actually rather it break the high and tag me in short. The dollar is moving, so that's the thing. If the dollar is going to be strong, gold's going to have a hard time. That's it. There's going to be pressure on it. It doesn't mean that the dollar and gold can't go the same direction, but not terrible to take it long where it is. To try it, I'm not going to. It's because it's right in the middle of a range. It feels like it's going to be a risk off day. Equities are falling. Again, it feels like it's risk off here. Bitcoin's down. Equities are on the way down and have a lot of potential room to go. Considering taking profit here at 0.1%, taking 1/10 and then repositioning, but I've got some good positions on, so I don't really want to do anything crazy. I've got a lot of potential here in positions, potential for some really good stuff. What is that? Euro Swiss. Let me put a pending order here, see if that gets tagged in right there. Stop above the high. See if that gets hit. Maybe not. Euro CAD. Both long and short on that. Waiting to see which way it's going to go. It doesn't matter. CAD Yen. That's another one that's very high. Back. The yen, yeah, whatever. It's probably going to come down now, which is fine. Considering taking profit and repositioning here. The dollar will go just a little bit more. Trying to figure out what to take profit on and what to let go. Some things are going to turn around here soon. Weird, I could take the 10th and then just reposition is probably what I'm going to do. Watch that, get ready to do that. Ready to close all. Give me a couple more dollars. Probably could have taken it a few minutes ago. I may take the 0.1% and just go up and then reposition. I'm waiting to see if the dollar is going to push here. Give me a couple more dollars. Because we're going into, let's see, it's 8. I know some of these have potentially so much more room that they could go. Like euro dollar, man. That has a lot of room that could go down. The S&P short is a very good short. That has a lot of room that could go. Kind of hedged on some of these, holding open exposure. Trying to see if I can get to target. Potential bounce right there. Back up in the range. Try to scalp my way into 25 bucks. Getting close. I'm already up a little bit. I may just take the profit and reposition. Give me close to 25 here. And I'm going to hit the close all. Yeah, that's a tough one, Hamza, man. I don't know. That's try to take more time and less risk. I know that it sucks, man, to try to do that, but once you start to get in a groove and you have less to worry about, you'll start to say, okay, well, you start to gradually increase your risk a little bit instead of just swinging for it. It's a tough one. It's a tough call there on the risk management. And I'm just going to reposition here. I'm going to close all and reposition. It's knocking them all out. And I'm going to go again with it. I need to put the pending close in there too. Now I got to close all my pending orders. Need to have it close pending orders too. The bot, I have that in the bot already. Forgot to put that in. I'll do that. I don't have to do that manually. Ugh. All right, so I'm going to go through and reposition. I just took the profit. I took the green while I've got it. Generally, that's what I'll do during the day. I'll shoot for a smaller profit target. I'm trying to hit 0.25% per day. If you think about 0.25% compounded, talking about some real money, that's the idea. If you can do 0.25%, like the majority of the days on average, you are killing it with low risk. So I'm up, not a lot. Yeah, I took a couple stops during that whole series, so whatever. But I'm more than 0.1% in profit, and what I'm going to try to squeak this up again. I'm going to try to hit another one. It's basket time. So what I'm doing is I'm resetting my net position. Some things are going to pull back, and we'll go back through and see where we are, and then reposition. I've got a whole new series here that I can start. So I took some profit, kind of reposition. Easy. Actually, hold on one second. Let me run these dogs out. I'll be right back, and we're actually going to get into this. We're in the volume now. I'm going to do one thing, and so I can actually sit down and go at it. I'm going to get aggressive here. Hold on just a few minutes. I'm going to let them out the back. I'll be right back, and then we're going to continue this on and actually start taking some positions here. Give me just a second. I'll be right back. 1 second. yeah, it's back. Yeah. Mixed feelings about ICT. Dude is simultaneously a very good analyst and the biggest fraud in Forex history at the same time. So, yeah, I don't do things like ICT. There's some things that he's very right about, and he's also the biggest fraud in history. So, yeah, it's one of those things. Let's see. Aussie Kiwi looks good. Euro Aussie. I'm gonna have to reposition on this. I'm gonna have to go through here. Try this again. Euro Aussie looks good. Yeah, ICT is the number 1 fraud. Raja Banks is number 2 fraud. They're pretty much tied for the. That's crazy, actually. Euro Aussie. They've both been caught multiple times that span years, faking accounts and stuff like that. It's just hard. It's hard to, if it wasn't for that, I would have a different feeling about it. Just straight up fraud. But yeah, depends on how you look at it. There's some good information there, though. I'll say that. I think with ICT, the arrogance, ridiculous arrogance, and just the fact that he photoshops his accounts and stuff like that, that just ruins it. And it's hard to sit through a video, but there may be some good information there. I can't sit through it personally, but there may be some good information there. Just haven't paid attention to it in a very long time. I've watched a couple of them a couple of years ago. I haven't watched any of the new stuff. It's impossible to sit through. Dude pretends like he invented trading, and it's just ridiculous to me personally. It's just me personally. Everybody's got a different opinion on that. And there's a lot of drama there that people just don't know about. There's a lot of things that people don't know about there. On Swiss. Yeah, so repositioning on what? The dollar's maybe pulling back here. I wish the dollar would go lower, honestly. If the dollar would go a little bit lower, I would feel better about it. Yeah, I just don't. Yeah, I don't trade that way. I see the market my way, and I'm not here to promote somebody who photoshops their accounts. That's just the truth. Dollar, yen, silver. Silver looks like this is going to bounce. Feel like this is going to go lower, but it's not a good short from here on silver. I'm tempted to take a little small shot on that. Bitcoin, same thing. It feels like the market's kind of turning around here. I got a really wild situation here. Waiting for gold to go higher so I can short it. I'd rather be short from higher, really. I've also made, here's the, I don't know, I'm not going to say it. Not hating on ICT, but people need perspective sometimes on that. I've also made more money today live than he's made in his entire career live. Today, I've made more money live on YouTube than he has ever made live. See a whole lot of hindsight analysis and good analysis, but zero trading. It's just, it's not hate. It's just, it's truth. It's a reality. I have made more money today live than ICT has made in his entire trading career live. Think about that for a second. Tell me I'm wrong. But yeah, there is some good information there. That's not the argument. Pound Swiss. Let's see. I do wish the dude would just come on and trade live on YouTube. Man, you know how much, talk about validating the entire thing. If he would just do that, holy cow, it would change the game. It would change everybody's opinion. Dollar pulls back and runs. Come on, Euroasi, you got a really good short there. It's going to be a good one. Let me check my auto close here. Because my risk management has changed now that because of where I am. I've gained a little bit and I'm backing down the risk a little bit because I'm trying to hit target. Let me make sure my auto close. Hold on one second. Let's see. Yeah, I'm going to back this down a little bit.
5 minutes.
Do it $25 at a time. About 1/10 of 1%. We'll say $26, whatever. 1/10 of 1% at a time. And then we'll move on and wait for the right trade. We're waiting for a really good setup, but I think things need to move out a little bit more. You know, like gold, if it would go higher, I think it's going to be a great entry. I'm not willing to buy it here to find out, but if it would go higher, I would definitely, that'd be cool. He's going to do lives next month. Dude, I hope so. It would be great for him if he did, honestly. I think serious traders would take him more seriously if he would do that. Honestly, I think it would be, I would love that. I think that would change a lot of the public. Yeah, it's just, I don't know. I have a different view on it. I have a different view on that whole situation. I've been doing this long enough that it's just not something, it doesn't matter. I know he has a very solid following, and I'm not, it's whatever. It's just, I don't do things like he does. There's so many people that try to teach exactly what he does, and it's just never been what I do. There's a lot of it that is similar because there's a lot of things that make sense, like market structure and stuff like that, but that's not new. Those are 100-year-old concepts, literally 100 years old. I'm not going to get into the whole thing. I mean, I don't know. There's so much evidence out there. Like if you just Google it, like there's so much out there that people don't know about ICT and other people too. Just straight up photoshopping $5 million accounts and just caught so many times and even as far back as like 2 years ago, just complete fraud. And people still, he's like trading Jesus to everyone. I've never seen the dude take a live trade. When he comes on and trades live on YouTube, I'll change my opinion. Never seen the dude take a live trade. I see a whole bunch of hindsight analysis and good analysis. It's not the thing. And the strategy, you know, a lot of the strategy stuff is, I mean, he's not wrong about a lot of stuff, is what I'm saying. You know, that's not the thing. That's not it. Dude pretends he invented trading though. Like, he's the only person in the world that is capable of profitable trading. Like, it's actually crazy. Like, to listen to him is difficult sometimes. There's more than one way to do it. And I'm not saying that what he's doing is wrong even. It's the delivery. It's the delivery sometimes. CAD. I'll see. Let's see. We do here. Still waiting for things to get to levels. I would love to challenge ICT to a risk-adjusted trading challenge. Risk-adjusted. Not who made more money. Who had better trades relative to the amount of risk that they took. Who made a better P&L over a series of time. And I bet people would be shocked. I hope he comes on and trades live. I would love that. I think the whole world would watch that. He would have a million people watching him at one time. I mean, he would probably have 100,000 concurrent viewers on YouTube. Why wouldn't he do that? Why would you not do that? Do you know how much ad money he could make? He would have at least 100,000 people watching him trade live. At least. I don't know why. I don't know why he hasn't done it. People would too, just to watch, just to see. Do you imagine if he comes on and trades live? That would be crazy, actually, if he did that. I hope he does, honestly. I hope he does. That looks interesting right there on EuroCAD. Same thing. I mean, if we're going to close back inside the range, God, it was a long from lower, but now it looks like a short. We've closed back inside the range. While we got a green candle, I'm going to take the reversal. What I should be doing is waiting for the dollar to get to where it's going to go. That's kind of what I'm doing. I'm really waiting for the dollar to get to where it's supposed to go, and to at least to the next decision point, and then I'm going to try to take some positions, like actual positions. Like maybe put a little more risk on. I'm just I'm just trying to hit target, low risk, just hitting target at, I mean, if they hit 0.1% every single day, think about it. Or 0.25%, you know, I've already hit that. I'm trying to get to 0.25% now. You know, hit it yesterday, hit it the day before, hit it the day before. Hit target every day. Yesterday was sketchy. I had to wait until Asian session, but eventually hit it. And that's the thing. You know, I'm obviously not making massive amounts of money. I could risk more on this account, but why? You know, why risk it? It depends on what your goals are, really. I could take more risk. And I will, when things get to the right levels, I will. I think there's going to be some really good trading coming. I think we're coming into a time where there's going to be some really good trading, for sure. See, like S&P, if this would retest, if we weren't so close to the Powell hour here, That's kind of what I'm waiting for. I'm going to position on some things that make sense and then wait for Powell. Silver, if that would pull back to the bottom of the range right there, I think that would be good trading. Yeah, Usman. Yeah, I nominate Usman. I put him up against ICT right now. I want to see that. That's what I want to see. Usman's passed 200K challenges in like the last couple of weeks. I put him up against ICT. Oh man, killing it, absolutely killing it. Good strategy too. Yeah, that's what I want to see. But yeah, no, I'm not hating on ICT. I think needs some perspective sometimes. He's got some. I'm sure he's got some good information, but do you trust a guy that acts like a complete idiot and then fakes his accounts constantly? Like, you should see what's out there about him. It's been proven. Now again, who do you want to give? Who do you want to pay $200 a month to, or whatever it is? The guy that's actually doing it, or the guy who's faking it and never takes a live trade ever? I've asked people in the group, has anybody ever seen him take a live trade? Why not? Why? That's the whole thing, is you learn from someone by watching them do it. And that's the thing. It's just, and it's not just him either. Not just him. Raja got busted with his fake account. Somebody called him out on that too. He was showing an account that wasn't from Vantage. They caught him on the commissions per lot. He was showing some other fake account. It's a fake withdrawal. That $1 million, all that crap, it's not real. Busted. Yeah, so really it speaks for itself. There's nothing to say. Come on, you're okay. That looks like that might shark fin actually. Aussie Swiss. That, man, it's a good bounce. Gosh, man. That was some good price action there. Right back in here is good price action. And now that we're coming back inside of this opening range, it's probably going to be a long. I think the Aussie's going to come up off the low. It looked like, man, the dollar's flying. Got that right. The Aussie's starting to lift up off the low, but we're gaining as an index. Again, just scaling in here. But by the end of the day, trying to put points on the board here, basically. Aussie CAD, that's a possibility. Sketchy, but I wish it would go lower. I'd rather be long from lower, but I could see that that's potentially going to pull back up a little bit. Some of these Aussie pairs look like they're about to lift up off the low. Aussie yen, same thing. It's just back to previous density. Reasonable long. It's one of those things where you could take it and then look at it later. We're just so close to the news. Let's see. Yeah, a little bit farther. CAD Swiss. That was a good game. Good game there. Took that earlier. See, a lot of this stuff just hasn't moved very much is the thing. A lot of stuff just hasn't moved very much. But maybe. Could be a good short there. I think it's going to end up long, higher, on EuroCAD, but I think right now it's clearly pulling back. Watching the dollar, good game, bullish dollar. Just had it right early, but it was uncertain. It was uncertain. And the thing is, if the dollar is going to continue a little more So euro dollar is probably going to come down a little more. We're going to be watching right in here, right in there for a potential bounce today, with the potential to go lower. But I think it's going to make it at least down to where this little green line is right here. I think it's going to make it right in here, and then turn around. Dollar will continue. Again, Powell come in. We don't know what's going to happen with that. The pound dollar. Come on down. Kind of got the market moving here a little bit now that the dollar's pushed a little bit more. A little bit more on the dollar, and then we'll make a different decision. I think it's going to probably run into some trouble about 103.55, 103.55 on the dollar index, and we're going to start having some issues right around 103.6-ish, just short of that. This is already running into supply up there. Yeah. Silver's kind of missed the pullback on that. That was a really good pullback right in there. After that big bullish candle went back in the opening range for that to pull back. Yeah, that was a good run there. Still a short on the S&P. So tempting to get back into that, where that is. Might take a little piece, whatever. It's going to get stopped out. If it goes without getting stopped out while that candle's green right there, it just rejected center mass too. Should have taken it there, but when that pulled back, I'll give that a shot just in case it starts to run. 839. Powell coming soon. Buckhorn. That was a good short earlier. It's trying to go again. That looks like that's coming down. That doesn't look good. Old Buckhorn. It's not a good entry right now. They're short. We'll wait on that. Aussie dollar. Those are a great short. Probably could have held that for more. God, the thing is so high. Good game on that. I'll reposition on that when it pulls back. Again, just putting points on the board until we can figure out what's going on. Oops, sorry. But I have to go back down there. Oh yeah. See, like we're getting up there on that Euro Swiss. We're waiting for the highs of the day on some of this. That's probably going to be a good short as that goes just a little bit higher. Try to catch the top of the range. So there's some things coming. Go through the 1 hour charts and see where we are. Euro yen. Maybe a little bit higher. Euro Aussie. I'm cool with where I took it short, but it may be holding actually. Try it again at the next level higher. That's going to be a range expansion, and when that gets to the high of the day, it's definitely going to be a short right in here. Yeah, put a pending order in there. Actually, let me move my I'll put a pending order in there. Why not? Move my target somewhere lower. Put a pending order up there on whatever that is, Euro Aussie. Just sell into it as it goes up. Euro dollar is good to go. Come on down. Dollar's pushing. Dollar's pushing nice here. Oof. That rejection there on pound Aussie. Wrecked. Yeah, pound wrecked all of a sudden. Pound yens, and pound yen's too messy. Feels like it's going to be a short, but just not really go very far. Dollar. And nothing. I really want to be long there on dollar CAD for sure. It was earlier, but it was a better entry earlier. I don't really want to take that there. I think might be in a range here. I'd like to see this drop lower over the next day or two. I don't think it's going to be a short right this second. Again, we're getting a little too close to Powell. We got 15 minutes, 17 minutes. Hopefully he says something that moves the market. Oil, God, that looks like a long right there. That looks good. And should have taken that earlier. It's not a good entry, but could have a pretty tight stop on it and say, look, if it's going to break the low, it's either going to go or not. What I may do is put a pending order back if for some reason it pulls back, then whatever, and I'll target somewhere up near the high of the day. I'll put a pending order there. Maybe that will pull back. It might not. I think the long entry was earlier on that. Good game on oil. Ooh, silver. That is a long for sure. Take that right where it is. Man, the spread's terrible on that. Crap. But I like the price action. Silver's got a really good price action right now for a long. It's a good pullback for a long, which makes me wonder about gold. But gold's is different structure, man. Very different. Very different. I don't know. We'll see what happens there. Again, just trying to hit target. 0.1% at a time. Close out, reposition. That is the risk management. Low risk. Try to hit smaller targets. Gonna be gone. Dollar's got a little bit more to go. Dollar yen's probably going to go higher. It's not really a good entry, but it's probably going to go higher. All the dollar stuff is probably going to go a little bit higher, so that's something. Everything against the dollar, like Kiwi dollar, is probably going to go a little lower. Euro dollar going to go a little lower. Aussie dollar a little lower. Just not really great entries right now. Pound dollar, same thing. I'm gonna put stops to break even here. The pending order, never mind. Can't do it if it's not in. Yeah, put a pending order in case it hit. Oh no, it's a long. Why did I do that? All right, never mind. Might hedge that. Probably bought the bottom of the range earlier is what it is. That's fine. Hedge out of that. Whatever. Below. I'm gonna hedge out of this. Long from higher, and it didn't hold. So while that's pulled back right where it is, it's a reasonable short entry. I want to mess with that right now, but I'm gonna hedge it in place so it can't get any worse. I may overweight it if it goes higher. I'll come back to that so it won't hurt me. What else? What else? What else? That looks like it's going to be a long on dollar CAD. Hard to know if it goes and if it dumps the low and comes back in the range that wasn't going to go up anyway. Take a small piece on that. Target needs to be higher on that. Much higher. If that's going to go, it's going to go big. And if not, it'll get stopped out really tight, which is fine. Stops one of them or something. Yeah. Yeah, it's good to go. Are we on S&P? You want to see some risk off today? We're gonna end in the green today. We're already in the green, but gonna get it today. I have a feeling this is gonna be a good day. Oil, I might have to take this. I've got a pending order. I'm gonna take one here just to not miss it. I just don't want to miss it. I don't want to miss it in case that runs. And it's worth it. It's not a big stop if it does. If it doesn't go, looks like this is going to fly to the upside today. Probably going to break the high. A bigger stop than that. It would be a good place to take the target, but really looking to break the high. If I don't hit, that'll easily hit target if oil runs. Easy. Next. Let's see. Can you use it without a controller? Absolutely. Yep. It's all mouse control too. Like you can use it with a keyboard or a mouse. Yep. It's specifically designed to do both. Yep. You don't need it. It's in the Discord. I just posted a new version of it, I think yesterday, with the EA that goes with it. But yeah, you can use a mouse if you can see it. Use a mouse, keyboard. There's keyboard commands to automatically move all your stops, close all the trades on the chart, X to execute the trade. So you can drag, like you can grab the, if I can do it. Whoops, something happened to my MetaTrader. It's crashed my MetaTrader. Oh, it's trying to change the chart. But yeah, you can move the targets with the mouse. Like say I want to drag it here. It's just much faster with the controller. It's a lot faster. Instead of, grabbing, trying to drag it in place, you just, whatever, just move it. It's a lot quicker, especially if you're scalping and stuff that matters. It's much easier and faster using the controller, but yeah, you can, do whatever. Say I want to change to 0.25% per trade. You just click the button and whatever. You just move this wherever it needs to be. And again, I was doing this years ago, back in 2019. So, waiting for the first person to tell me I copied magic keys, and then I'm going to drop on them. Show them how it's actually the other way around. I'm waiting for that, and it ain't gonna happen because they know. But yeah, you can use the mouse, keyboard, or most gamepads, USB or Bluetooth gamepads. Actually, set my risk back. Whatever that was, I don't want to risk quarter percent. Put this all down low. For what? Dollar yen. Let me not do that. I'll go to take a trade on dollar yen and risk too much. But yeah, you can use a mouse, keyboard, or any game controller. It's awesome. So it's in there in Discord, and I provide all software to group members, plus the trading bot. Plus we sit here and trade all day. Link is in the description, probably. Let's see what else. Euro yen, euro pound, euro CAD. Looks like a short. No, gonna go back the other way. Euro CAD's just a mess. Look at this crap, man. Just sideways. It won't make up its mind. So whatever. Wait and see what happens there. Trying to trade in a crap market today. Got it right though. Got the dollar right. Need to wait for a better position, really. Want to wait for the dollar to either pull back or hit a little higher. It's right in the middle, and it's not a good place to make a decision. Kind of market wide. It's kind of the same situation. Powell coming in 7 minutes. Just kind of wait for that. 1871. Yeah, let's look at some charts actually. Just flipping through, doing nothing really. Positioning, waiting to see what happens. Take a look at the chart. Gold. Yeah, there are a lot of buyers in here. That's the thing. We're back in the bottom of the range. Totally get it. Why you would want to be looking long in here. We're right back into all the buyers. Are they done yet? Maybe, maybe not. I could absolutely see this going a little bit higher. I want it to go higher so I can sell it. Actually, I want to short from higher, and I don't want to sell it from here because there's a reasonable chance that does go up a little bit. 71 to 1881. Yeah, that makes sense. Within the range for sure. Yeah, I can absolutely see that. That makes sense. Yep, that definitely makes sense. It could go either way. We're right smack in the middle. Yeah, I can definitely see that happening. I think if it goes one direction or the other, probably go more. Either going down a lot or up a lot. And it may go up first and then absolutely get wrecked. This is what's probably going to happen. I think gold's going to end up here and then doing that. Wrecked. When the dollar lifts up off the low. Remember how low the dollar is right now. Super important. Where the dollar is. Yeah, we'll see. I want this to go higher. I do want gold to go higher. I'm definitely watching it. We're just locked in a range right now. It's not a lot of decision to make there. For a scalp, I sure could absolutely see that going higher. Going down in a 5. I rarely go into anything lower than a 15-minute because I generally trade price levels and not really candles. The level is going to be the same on the chart, whether it's a 17-second chart or a 34-minute chart. Whatever, it doesn't matter. It's kind of the joke. I'm looking for a specific level, generally, a number that has very little to do with candles now. However, looking at supply and demand levels, that you need to see where the rejections were to figure that out. So there is a lot of value in the candles. I'm not saying there's not. Yeah, I could see this being a long temporarily. Just I have a different rule set. I'm not buying now. I'm not buying it now that it's already moved up. I'll wait. But yeah, I could see it going higher. Watching it. 4 minutes. Let me see. Actually, let's see if we can find this. See if we can find Dingleberry Finn's going to be on answering questions. It may be on YouTube. We'll listen to it and see what we got. Blah, 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 blah. I don't know if they're going to stream it. Maybe. 3 minutes. Nobody's running it. Interesting. It doesn't exist out there right now. Clickbait, man. Big garbage out there.
Are institutions that are directed at meeting those challenges.
Might be on early.
So as Beatrice reminded us in this morning, in the 1990s, there was a wave of institutional reforms in high-income economies when they adopted inflation targeting.
Yeah, and we'll listen and see what's up. Give me a second.
More legal legislated independence. So this concerns the Reserve Bank of New Zealand, Bank of Canada, the Riksbank, the Bank of England, plus ECB around the newly formed euro. And arguably, these reforms had their roots in the challenges of the 70s and 80s, high inflation, spurred on by large supply shocks and sustained by high inflationary expectations. So, a first question for the panel: which were the main concerns behind the 1990s wave of central bank reforms in terms of practical policy experience and perhaps also academic thinking? And how much did these concerns reflect specific challenges of the 70s and 80s or more germane issues? Then we saw a downturn in inflation.
NASDAQ
like
entering position. Log.
Losses of output and employment. So the main policy challenges in the next few decades were instead to be about financial crises, how to recuperate from the great financial crisis, and how to stave off new ones, not least at the onset of the COVID-19 pandemic. So we got to see new financial regulation,
doing something,
QE,
bots running,
conventional central bank intervention, and policy rates at record lows for a long time.
Bots taking profits. What's going on?
So second
Something
question
going on.
for the panel then is, which new concerns were raised by the events and challenges in the 2000s and the 2010s in handling financial crisis and deflationary pressures? And in particular, do these challenges suggest new trade-offs, for example, between monetary and fiscal policy, or between present macroeconomic outcomes and future financial stability? So if we look at today, superficially, the situation looks like 70s, 80s redux with major supply shocks and emerging inflation inertia. So this brings us, I guess, to the most important and the bottom line question. Given the concerns behind the 1990s reform and the challenges in the next few decades, should we rethink central bank independence and central bank mandates? That is, are there good ideas or even concrete proposals for new reforms of central banking rules? Okay, so finally the plan for the session. So we'll spend the next 20 minutes on initial remarks by each panelist. Then we'll have a discussion within the panel around these initial remarks for maybe another 15 minutes. And after that, we'll turn to a round of Q&A involving the audience. So think about questions, and please think about succinct questions rather than statements beforehand, and try to relate them to the three major questions that I outlined. And in the last 5 minutes, panelists will be able to make some final remarks. Okay, so now let's go to the initial remarks, at most 5 minutes for each of you. I'm sure these remarks will span many aspects of the broad panel theme, but by agreement, each panelist will put more emphasis on one of the 3 main questions.
I think he's about to come on. Let's see what he says.
Ken and Mervyn
People are going to ask questions.
Question number 1, Claudia on question number 2, and Jay on question 3. So without further ado, please, Ken Rogoff.
Here we go.
Well, first of all, thank you very much to the organizers, to the Riksbank, for inviting me to speak.
Thank you very much.
I think you've heard so many remarks about Stefan. I can just summarize them by, in the central banking community, he is regarded as a guru, that you don't know the answer, some hard question. He's a person you really can go to and get, you know, a very deep answer to, and we'll hear more about that as things go on. I've been asked to talk about some of the early developments, more the question 1 that we've had here. And I think the academic literature on this started in the 1980s. But of course, you know, really it goes back among practitioners far earlier than that. But I'd say an especially important event was the Fed Treasury Accord in 1951 that set up the Fed to be an independent central bank back in the 1980s. That was a rarity still. The Bundesbank had achieved that, but most countries had not. My own contribution was to develop a theoretical model that would try to address how it would work, why it would work, and it was an answer to a very abstract question posed by Kydland and Prescott and Barrow and Gordon about why you might get stuck in high inflation and what you might want to do about it.
I'll let Prophetess Prawn do the work.
My
$10 more
paper looked at various ideas, including using an inflation target.
Let's go.
Appointing,
come on.
People
$5 more
who had already had a reputation for having a strong anti-inflation commitment, and needless to say, I was very inspired by the great Paul Volcker, who I was working below, very, very far below, but I was working below Paul Volcker at the time when I was working on that. And there's been just tremendous amount of literature since taking this to many places. I think you're all familiar with Europe, New Zealand, the United Kingdom, but I wanted to just really
might slow down
emphasize
here,
an area people don't think about as much, which are emerging markets. And Tobias Adrian really spoke about this, but I still think most people don't quite understand about the efficacy of the concept,
just
about
how
important it is. European emerging markets, if you look at 1992, there were 40 countries with inflation over 40%. And that doesn't even capture things because a lot of them had hyperinflations at the time.
Cost to break even.
To get out of it, the early solution that was tried in many places for a long time was, well, the dollar's really good, or let's fix our exchange rate against the dollar. And that was very good for those of us that want to study financial crises, but on the whole didn't work so well.
A little bit more.
And there was really this period of transformation where some very bold emerging market central bankers got the idea, you know, it worked in advanced countries, let's do it here. And I think there are many, but I would single out Arminio Fraga in Brazil, Ortiz in Mexico, for example.
So risk on.
I think people forget, but when they were trying this, people thought, this is ridiculous. You know, you can't be independent in these countries with these weak institutions. And the IMF also over time really played a very positive role here in pushing the idea. By 2015, inflation was actually very low across the world. It's not today, But even in places it seemed unimaginable, not just the former Soviet republics, African countries,
looking great,
with inflation under 10%, even under 5%. And indeed, many people have forgotten, that central bank independence was ever needed. I invite them to read about Turkey, for example, where the president has fired central bankers the way Henry VIII changed wives, and you can see what's resulted there.
That's funny.
I would say there are many refinements once you have an independent central bank of how to do it, and literature to which many people in this room have contributed. But I think the independence of the central bank is at the absolute central starting point to this. If you look at many of these emerging markets, they weren't really doing inflation targeting. They aren't really still doing inflation targeting, but they've used this as a device to establish their independence. Now, just to sort of summarize, I would also say there are so many things I didn't expect, and I'd just single out one. I'm surprised the extent to which central banks in everywhere almost are regarded as honest brokers. I mean, if you want to know what the data is, you go ask the central bank, and I think that's also part of this coming from independence. I think another thing which
that might be
people in this room
too.
are very familiar with, but I think it's been very important, is the community of central bankers helping to support each other, exchanging ideas. And there's been a huge networking effect in this, in providing ideas and also support. When the whole central banking community stands behind you, a little bit, your government listens. And I think we can point at many examples of that. And then, certainly recently, the central bank independence has been under attack. I certainly don't think it's an idea, which is over at all. I would actually argue that the introduction of central bank independence has been the most significant positive development
oil's looking good here.
in macroeconomic policy since the Second World War.
Hopefully that'll go a little bit more. Should have taken a little more risk on that. Silver, if silver will go, it's gonna be an easy day. I just expect it to get hit at break even. I want to see it close above equilibrium there, but.
Well, Torsten, thank you, and good afternoon, everyone. Torsten's given us 5 minutes only, so I shall reserve my stories about Stefan and the resurrection of the British banking system in 2009 to conversation over dinner. I think it is impossible to understand the movement towards central bank independence without seeing it in the context of the great inflation of the 1970s and also the stagflation of the 1980s. The former was the consequence of, I think, in large part an intellectual mistake at the time in thinking that there was a long-run trade-off between inflation and unemployment, so that tolerating a somewhat higher rate of inflation offshore would make it possible to sustain a lower level of unemployment. But following the breakdown of Bretton Woods and the link to gold and 2 large oil price shocks, discretionary monetary policy led to rates of inflation well into double digits, and in some cases, such as the UK, above 20%. And as Ken said, in many emerging markets, even higher still. And the stagflation of the 1980s was the painful consequence of efforts to reduce inflation, which led to recessions, while inflation still remained relatively high. Now, an intellectual revolution in macroeconomics undermined the belief in this long-run trade-off between inflation and employment and helped to restore the case for price stability, which had been made over many decades before,
really good longs,
arguably most persuasively by
some of them.
Maynard Keynes in his Tract of Monetary Reform. But the attempt to achieve it after the breakdown of Bretton Woods by rigid exchange rate links collapsed in 1992 with the departure from the exchange rate mechanism in Europe of both the UK and Italy, and the end of the fixed exchange rate links in Sweden, where interest rates had been some of us remember, hard to think of this now, raised to 500%. And the same applied to Finland. Now, politicians drew two conclusions from the unhappy experience of the 70s and 80s. First, inflation was unpopular. If exchange rates were to float,
the barrel
therefore,
this year as China reopens
then
and
a
Russia
domestic
supplies drop.
framework was
According to
needed to
ING,
ensure
base
price
metals are
stability.
mostly lower, while gold languished, soybeans slid, and Fitch sees muted Chinese import demand. CVS is looking to buy Oak.
Whatever, bro.
And that framework was with
Lord
high rates of
Dingleberry of
unemployment
Central Bank
for
Shire.
a while. So politicians found that setting interest rates wasn't actually much fun. So why not give that power to an independent central bank with a mandate set by Parliament? And those two conclusions led governments
really
around
good
the
entry
world
there. Short.
to give
Hopefully that's
greater
got some more room to
independence
go.
to their central banks.
Probably should have closed
and
out
in
a
most
minute
cases,
ago, but
this did go hand in hand with
so
an
much more
inflation
room.
target. Now, the policy debates at the time in the 1990s are, I think, helpful in understanding the challenges to monetary policy today. But there are three important differences between then and now.
Oil.
First, in the 1990s, the memory of the great inflation of the 1970s was still vivid. Today, there is almost no one below retirement age who remembers the peak inflation of almost 50 years ago. And until recently, low inflation had come to be taken for granted, both by economists who mistakenly assumed that inflation in the medium term was determined by the inflation target, and by the public who had stopped thinking and talking about inflation. So the constituency for low inflation, so widespread in the 1990s, has been somewhat eroded. Secondly, in the 1990s, the popular support for low inflation encouraged politicians to grant independence to central banks and to support them when it was necessary to raise interest rates. I think today governments can see only too clearly the challenge of issuing substantial quantities of government debt when interest rates are rising and central banks are no longer buying their debt. So external pressures on central banks are, I think, much greater now than in the simpler days of the 1990s. And third, when they were introduced, and I think this is in some ways the most important point, inflation targets were not seen
There's some entries here
as
in
a
just a
theory
minute.
of
This will pull
inflation.
back just a little bit.
But today, in the models currently fashionable in academia and used by central banks, the inflation target is the variable that closes the model and
break that high,
determines
baby.
the path
Come
of
on.
inflation in the
hit
medium
target.
term. But the original aim of inflation targets was actually to focus and change the way decisions on monetary policy were made. That is why inflation targets were accompanied by measures to increase the transparency and accountability of decisions and decision makers, respectively. Clear explanations of the reasons for decisions on interest rates were to be set out not as a matter of mystique by central bankers mumbling and saying very little.
NASDAQ, same.
They were set out clearly in speeches, evidence to
that's going
Parliament,
higher.
and reports
While it's
such as the
pulled
Bank
back.
of England's inflation report.
Done for the
And
good
although
game.
these innovations
Where are we in
remain,
today? Oil, probably.
I worry that model builders have tried
Good
to
game.
use the
Come on,
inflation
oil.
target as a theory of what drives inflation. Because as a result, any deviation of inflation from target is assumed to be transitory, and policy mistakes followed. So I conclude really that an analysis of why many central banks were granted independence in the 1990s, along with the adoption of inflation targets, is clearly relevant to understanding today's challenges. Thank you.
Thanks. Come on, Powell. A little bit of a pullback.
Thank you very much,
here.
Thorsten. Thank you very much
Put a pending order
to
there.
the organizers. And I was very honored to be invited here to speak on this
Pending
panel
on the center
on the
on
occasion of
S&P.
the farewell of Stefan Ingves.
Start scaling into it,
For
assuming
me,
we're
when
going to be
I
risk
joined
on.
the ESRB, the European Systemic Risk
Not
Board,
sure yet, but it
he
looks
was
like the way.
one of the founding fathers. He was already there, and I actually learned a lot from him in terms of the relevance of financial stability for monetary policy, the importance to to act when it's needed, and the importance of clarity in communication. And I'm saying this not to break the rules, because actually rules are important, and that's going to be one of my main points here. But I'm saying this because I think this is all crucially important at the current juncture. As we've just heard, I think in some sense central banks have enjoyed a capital of inattention or rational inattention to risks to price and financial stability. We've lived in a period of very low inflation and moderated risks to financial stability, so the public didn't actually pay much attention to central banks' core mandates. But current macroeconomic developments, not just cyclical but also structural, really challenged price and financial stability. So explaining central bank independence and acting accordingly has become more difficult and also more important. Central bank independence is certainly protected by institutional safeguards. We've just heard that. And that actually includes fiscal and macroprudential policy frameworks. But I think we also need to be very accountable. We need clear communication to sustain public support to independence. So let me explain these points quickly. Obviously, as been mentioned, inflation and risks to financial stability have been low, so the public in some sense could safely delegate the task of price and financial stability to technocrats and central banks and pay relatively limited attention to the details.
Short here when it was a short, that's not anymore.
That's my second point. So we have first of all inflation, which is well above targets of central banks today, and it's one of the main concerns of the general public. I looked at the most recent Euro barometer of Powell, and there 42% of the respondents, and I think that's actually on the low side, cite rising prices as the most important concern, and actually that ranks above issues like energy supply and the international situation.
Close enough.
And I would argue that actually concern about high levels of prices and perceived inflation
Risking
is going to
165 to make 346 on the net position, and this is going to be useful.
So that's the first
risk analysis
challenge.
is going to be awesome.
The second challenge is that during periods of low interest rates, vulnerabilities in the financial system have built up. In Germany, to give an example, we've had 2 decades of declining corporate insolvencies, very low credit risk, strong support to the real economy and indirectly also to the financial system through fiscal and monetary policy. And that, we think, leads to an underestimation of macroeconomic risk going forward, and also the expectation of further policy support. So higher vulnerabilities in the financial system is the second vulnerability. The third, we have high levels of debt, and that creates tensions between fiscal and monetary policy. And that's my third point. It's important, but also more difficult to actually explain the role of central bank independence and to act accordingly. So one tension, one conflict of interest that can arise in the short term is that there can be pressure on central banks to keep interest rates too long for longer to avoid risks to financial stability. But I think this even increases vulnerabilities in the financial system. So if we delay the necessary monetary adjustment, that can lead to the buildup of further vulnerabilities.
No Powell
and I think
yet.
If we look back to the global financial crisis, we have seen how monetary policy can actually be at risk to come under fiscal or financial dominance. So at the time of the crisis, central banks provided liquidity to stressed financial institutions, and often to institutions with potential solvency problems. Capital buffers in the financial sector were insufficient, and fiscal funds were ultimately needed to cover losses. What are the lessons from this episode? Well, we need sufficient capital buffers in the private sector. Gaps in the institutional framework needed to be closed, so resolution frameworks have been certainly high on the agenda. And independence and credibility of central bank also may come under threat if there are insufficient fiscal backstops. Now, a lot has happened in the meantime. We have better fiscal and macroprudential frameworks, and that help us to prevent financial or fiscal or financial dominance. And these frameworks are actually complementary to the frameworks for central bank independence that we've just heard about. Obviously, there's a lot of institutional safeguards to central bank independence. In Europe, primary law assigns a strong role to central bank independence, and the legal basis in the euro system is even stronger than in Germany. So changing the treaty would require unanimity versus simple majority when it comes to changing the Bundesbank law in Germany. Maybe just as an interesting side remark, there's interesting historical research showing how independence was made into the legislation in Germany, and when independence was discussed in the 40s and 50s, there was actually stronger support for independence by the U.S. authorities than by the German authorities.
I guess that's going to reject and pull back down in the range, hopefully.
Financial stability, the frameworks, the macroprudential frameworks that we have to consider that the time horizon for financial stability risks is different than for monetary policy. Financial cycles last longer than business cycles. The policy objectives are different. It's more difficult even to quantify financial stability than this is the case for price stability. And we have different types of instruments. But still, we need also independence for financial stability policies, as we've also heard from Tobias, to avoid inaction bias and to avoid that authorities come under fiscal pressure. And the last point I would like to make is also something that colleagues have mentioned. Legal frameworks are not sufficient. We have to communicate and to explain independence. And this can actually be quite a balancing act. So we have on the one hand the technical experts which we have to explain our policy
from the bottom of the range.
We evaluate our policies, the intended and unintended consequence of policy choices. But these policy evaluations are rather technical and tuned to an expert audience. But at the same time, we need to convince the general public that the central bank acts in its best interest and protects the public good stability. So we need a translation from the language spoken by the technocrats to the language spoken by the general public, but we don't have established dictionaries for that. So one tool that the Bundesbank is using is actually a small video. It's like a comic strip explaining why financial stability is not boring. And if you get the chance, take a look at it and give us feedback. And so I think we need this dialogue with the public in particular because we live in a time of structural change and we need to understand what's going on around us, and so we need a lot of communication channels also to the general public.
Edged on this, so I'm just going to move my stop out of the way. No reason to have a stop on it because it's hedged. Emergency. Come on, Powell.
It's
a
pleasure and an honor to be here
here we
today.
go. Here
I guess I'd like to start by thanking you, Stefan, for your friendship, for being a great colleague.
Here comes the man.
You are an absolutely essential person in our world, and you'll be
Watch the markets.
I'm going to use my comments focusing on the U.S. context, and I'll address three main points. First, the Federal Reserve's monetary policy independence is an important and broadly supported institutional arrangement that has served the American public well.
Silver, let's go, baby.
Second, the Fed must continuously earn that independence by using our tools to achieve our assigned goals of maximum employment and price stability, and by providing transparency to facilitate understanding and effective oversight by the public and their elected representatives in Congress. Third, we should stick to our knitting and not wander off to pursue perceived social benefits that are not tightly linked to our statutory goals and authorities. So starting with the first point, as Ken and others have pointed out, on the first point, the case for monetary policy independence lies in the benefits of insulating monetary policy decisions from short-term political considerations. Price stability is the bedrock of a healthy economy and provides the public with immeasurable benefits over time. But restoring price stability when inflation is high can require measures that are not popular in the short term as we raise interest rates to slow the economy.
No doubt.
The absence of direct political control over our decisions allows us to take these necessary measures without considering short-term political factors. And I believe that the benefits of independent monetary policy in the United States and more broadly around the world are well understood and broadly accepted. However, in a well-functioning democracy, important public policy decisions should be made in almost all cases by the elected branches of government. Grants of independence to agencies like ours should be exceedingly rare, explicit, tightly circumscribed, and limited to those issues that clearly warrant protection from short-term political considerations. With independence comes the responsibility to provide the transparency that enables effective oversight, in our case by Congress, which in turn supports the Fed's democratic legitimacy. And at the Fed, we treat this as an active, not a passive responsibility. Over the past several decades, we've steadily broadened our efforts to provide meaningful transparency about the basis for and the consequences of the decisions that we make in service to the American people. We are tightly focused on achieving our statutory mandate and on providing useful and appropriate transparency. On the third point, it is essential that we stick to our statutory goals and authorities and that we resist the temptation to broaden our scope to address other important social issues of the day. Taking on new goals, however worthy, without a clear statutory mandate would undermine the case for our independence. In the area of bank regulation, as Tobias mentioned, the Fed has a degree of independence, as do the other federal bank regulators. Independence in this area helps ensure that the public can be confident that our supervisory decisions are not influenced by political considerations. And today, some analysts ask whether incorporating into bank supervision the perceived risks associated with climate change is appropriate, wise, and consistent with our existing mandates. Addressing climate change seems likely to require policies that would have significant distributional and other effects on companies, on industries, on regions, and on nations. Decisions about policies to directly address climate change should be made by the elected branches of government and thus reflect the public's will as expressed through elections. At the same time, in my view, the Fed does have a narrow but important responsibilities regarding climate-related financial risks. These responsibilities are tightly linked to our responsibilities for bank supervision. The public reasonably expects supervisors to require that banks understand and can appropriately manage their material risks, including the financial risks of climate change. But without explicit congressional legislation, it would be inappropriate for us to use our monetary policy or supervisory tools, for example, to promote a greener economy or to achieve other climate-based goals. We are not, and we will not be.
She gone. Let's close outside of the range. Let's go.
Thank you.
Oh, don't stop talking yet.
Excellent. Thank you
Questions?
all four for these lucid remarks. Now you'll have a chance to agree or disagree with
let's go down.
The other panelists
Stops to be E.
just said, or you can also get into one of our main questions that you didn't cover in your initial remarks, especially if you have views on desirable reforms of central bank independence and mandates. Mervyn?
Well, I just want to say how strongly I agree with what Jay Powell just said about mandates. Independence from politicians is a great responsibility, and it cannot be misused by trying to creep into areas which have not been explicitly delegated by the appropriate political process. And the way I think about it is this, that
there we go. Come on.
Nobody would ever create a central bank to prevent pandemics.
A little bit more.
Nobody would ever create a central bank
to
combat climate change. They would create a central bank to try to ensure price stability, and they would create a central bank in order to try to maintain stability of the financial system. So I think if you're going to have central bank independence, you should always remember the maxim, which I think is crucial for any agency, which is only do what only you can do. And there are plenty of other people who can take measures to combat climate change.
Go, a little bit more, go.
And I worry that people are in the great enthusiasm.
So close for the second time.
Are actually putting at risk.
Get it. A little bit more. Come on, $2 more.
Others?
Come on. Push. Okay. Oh my God, it was within like 10 cents.
Well, not necessarily the 3 questions, but just expanding slightly.
Yeah. Come on, profit is prime. Let's go.
I think particularly when interest rates were hovering around 0, one of the challenges to central bank independence was the idea we don't need it for stabilization policy anymore.
Open exposure profit target reached.
Group of academics. In fact, if you look at a poll of the American Economic Association,
next basket,
what they said
another 0.1%,
where that was not considered to be a good idea by most.
Knocking out 0.1% at a time.
The majority did think it was a good idea.
Powell talking the markets up. Didn't really say anything, really.
No one introduced Torsten, but he's made giant contributions.
He just said, what's up?
Political economy, along with his co-author, Guido Cavallini, also Lars Svensson is here.
Waiting for pullbacks.
Alberto Alesina. And this just seems to have been forgotten. That I will see a
little bit more on gold, actually.
Paul Krugman draw an IS and LLM curve, and he said, well, you could shift the IS curve, that's fiscal policy, or you could shift the LM curve. You can kind of do one or the other.
I think I was short a little bit higher there.
I mean, fiscal policy is actually the sum
of target down there.
Tens of thousands of
another
different
pending order on gold,
which are hardwired politically, and the fiscal policy is absolutely necessary in many cases. And of course, when a catastrophe, a pandemic, a financial crisis hits, it's less political. But in most cases, the independence of the central bank gives it this ability to approach things
on the NASDAQ. We may end up retesting the high. It's gone now. Could have held that. Could have held that for a lot more profit. I honestly should have.
Political dimensions.
During the news event, I probably should have held that, but it's all right. Take the profit. Might be a minute before that pulls back.
Reflection that I have when I listen to the panel
going to be watching up at this level.
Questions how central
before we're going to run into any kind of
over time. I think it's certainly important that we also see it as a generational issue. So to what extent does the young generation, I think that was very interesting what you said, like in the 90s there was still the memory of higher inflation, and I also alluded to the discussion of the situation in Germany in the 50s where actually the politicians seemed to be tempted when you the account of the historians to have a little
could have got double the amount of profit right there, but it's all right. Ahead for the day.
Was still so much aware of the
point.
Of the
trying to get there.
That they pushed for.
Yeah, so I hit $2 away from $1.50 away from target.
With the U.S. authorities
a little bit
at the
more.
time.
Scalp
and
it
I
out.
wonder whether today we're reaching the younger population and explain to them why central bank independence is so important. And I think
zero
that's
risk,
part of
zero
our outreach that we have to do.
Jay?
Almost nothing today. The biggest drawdown today was like $17 or something like that.
So, but I'll take a shot.
0.2% with virtually no risk.
So, the question being, did either the global financial crisis or the pandemic and responses to them, does it suggest that there are problems with the mandate?
Get that $2.
Unforeseen tensions between.
Get that round number of $50.
Either financial stability and monetary policy.
Where is it?
And I guess I would take the position that would not be my
right there. There's a short.
I think that I think what happened in both crises is that central bankers used their tools pretty innovatively to deal with exceptionally unforeseen and difficult circumstances. I think the main takeaway from the global financial crisis was the need to build far more resilient core of the financial system. And we did that.
That's a short
right there. The banks did that. We did that. All over the world, people did that. And I think that financial system is now substantially more resilient and more strong at its core. I think it held up better in the pandemic as a result.
$2 profit and I'll close out.
Thing. It was it called for a whole of government response.
Here we go, going into the green.
From a medical standpoint. And it called for use of fiscal policy and monetary policy tools in unprecedented ways. There had been a concern in the United States that Dodd-Frank had too limited the Fed's authority under Section 13.3 to do facilities and lending. The new system actually worked quite well. What it did was it required the Treasury's, the elected part of the government's approval for these emergency lending facilities. And that actually worked very well. And that's actually an appropriate thing. Because
equities market left. It's gone.
We only have the authority during emergencies. And to have the elected government approving it it was a very constructive process between us and Treasury. So I guess to take a step back, I think that the tools that we have work. I think there's nothing wrong with our mandates. I don't see anything about the laws that govern us or provide our mandates that needs to be changed, and it seems to have worked pretty well in these two very difficult circumstances.
Yeah, that's interesting. Yet there is somehow, at least to some of us, a difference in the reaction in the 90s and the reactions now. So in the 90s, the public enemy number one had been inflation, as Mervyn
find $2 somewhere. Probably going to go a little bit higher.
You know, that was an outcome of
Equities.
decision making that wasn't useful and was subject to discredibility problems. And what we tried to do then was to construct a more robust framework in terms of institutional reform that would produce better
reducing the risk now, pulling it back, not taking as many trades.
Now the public enemy number one, arguably over the next
but still looking for trades
with these repeated financial crises or risks of financial
still taking trades, but not going to put on as big of a basket.
Of course, much more regulation of the financial sector.
Secure that, secure the profit.
To the same extent, trying to address by institutional measures the underlying decisions in this arena. By banks, yes, but not necessarily by policymakers.
Gold reject.
Is there a case, Mervyn, you have strong thoughts on who should be responsible?
Let's break the high. If it'll break the high, I'll take it short, but I'm not messing with it here.
Policies.
Maybe.
Do the events that we went through during that dramatic era of the great financial crisis made you rethink those issues?
It's tempting.
Well, I think the answer is yes, because when the Bank of England was made independent in 1997, actually both the then governor, Eddie George, and myself were quite content, despite some press speculation to the contrary, that bank regulation would go to a separate body. But the reason was that at that point,
if oil goes and breaks the high,
was really all about
on that pullback,
depositor protection.
Maybe.
It was about elimination of insider trading, fraud, etc. It wasn't about a historical bank run and about inadequate prudential regulation. And in the 5 years before the financial crisis, that's when you saw the leverage of the banking system increase very rapidly, so that it did become very fragile. And I think after that, I was very struck that when the to-be Prime Minister David Cameron and George Osborne, the Chancellor, came to see me, their argument for putting it back, regulation back in the Bank of England, was essentially
we got supply there. Sellers all over the place on gold. Remember, we're very high in structure on gold. It's extremely high.
Now, you can argue, I think, whether some of the details of regulation needs to be inside or outside the central bank. That's a less important thing. But the principles of ensuring, as Jay said, that the banking system was sound, I think are ones that central banks have to be involved in.
I'd like to see this hit the center.
Deep down, it seems to be the big difference between the way policy was set in certainly the 80s and early 90s and today is this business of
it might bounce and break the high. It's possible.
Recognizing that the quid pro quo of central bank independence is communication, explanation, and clarity of that communication. The great American economist Bob Solow once said that an economist needs three qualities: faith, hope, and clarity. And the greatest of these is clarity.
Excellent. Torsten, can I just say something in response to your comment? I mean, inflation's back. So, yes, if you'd asked that question in 2021, maybe, people say, financial crises, but
need a couple dollars.
I think you need
to scalp it out.
Try to
brute force it.
Was saying is stable over the full cycle of things that are happening and doesn't get, it gets tuned, but and also let's look at the rest of the world. Don't end up in trouble
trying to get $2.
I think if we're looking at developing economies, emerging markets, which are also struggling to find frameworks, that I wouldn't tell the IMF to change what it's doing in terms of central bank independence.
All right. So maybe we'll go to the section when the public is involved, a Q&A session. So
Come on, let's talk to Powell. Put him back.
if you want to say something, please raise your hand. If you want to pose a question, if you do get the mic, please start by saying your name. Please be succinct, and please try to relate
questions
to the overall theme of the of the panel. Okay, Richard Portis.
Need $2. Come on, Naz. Let's push back up through that wick.
Yeah, we're coming.
20 minutes left.
Richard
Right,
Portis,
2 minutes
London
on the
Business
candle.
School and European Systemic Risk Board, where I have learned over several years a great deal from Stefan English. No more of that now, but maybe later. I'm not totally convinced that we now have a resilient system. Mark Carney said that in 2017 as his final statement from the Financial Stability Board. But then,
come on, baby.
The banks, yes, but we found in early
couple more dollars
2020 that wasn't true of the non-banks, in particular the money market funds, and the central banks had to step in. Central banks don't like to do that, quite rightly. They don't like to have to act as market makers of last resort, and that may be a compromise of the mandate.
Pump it.
So the questions that I would put to the panel, as we've seen. We've seen very recently, the rise in nominal rates is exposing financial fragilities in the system. They came from the search for yield, whatever you want to call it. And we saw an extreme example of that in the United Kingdom in September of this past year. Now, in those circumstances,
push the wrong button.
Should financial stability be explicit
$6 loss. Now I gotta get
the mandate?
No, I need more.
Should we be recognizing reality?
I need $10.
What central banks actually do in practice. Would that help avoid financial dominance?
Push the wrong button.
If it were in the mandate.
I was trying to change the chart and forgot that I had the
of financial crises. Is financial dominance in a sense inevitable? Recognize reality.
Try this again.
And put
back in
financial stability in the mandate. Why not?
Reposition anyway.
Whoops. Take a stab on that.
I mean, in a sense, it is in the mandate, most central banks now, and I think it needs to be linked explicitly
there on oil
to the instruments of central banks. This was the problem before, and the obvious instrument is whether you call it lender of last resort to banks or the equivalent to the non-bank sector.
You got another candle coming here in just a minute.
The community is very focused on the question of defining the circumstances and the nature of institutions
silver
that happen to be non-banks.
It looks like it's trying to hold and go higher. It's just in a range right now. It depends on the time frame, honestly.
Is to have a framework
I think it's going to end up lower, but it's not a
ante,
short right this second.
which actually tries to identify clearly the circumstances and the institutions that would merit.
Not a great short entry, but it's probably going to end up higher.
But also,
lower.
That the scale of that intervention is also under the control of the central bank and not something which the actors themselves in the financial system can expand to almost any number.
Taking the Dow,
simply by the actions that they take. It's ensuring that there is enough collateral against which to lend by the central bank. Now, I think the central bank community is well aware of these problems. It doesn't make them easy. It doesn't mean that you can do it in a week. But my guess is, yes, you're right, Richard, that there will be an expansion of the mandate and that it's there in principle, but it needs to be made much more concrete by saying what are the institutions, what are the circumstances, whether it's maturity mismatch or something else that would justify an intervention and to have sufficient regulation on that degree of maturity mismatch ex ante to limit the size of the intervention.
Claudia.
Let's see if that rejects on Pound Aussie. Again, I'm just trying to hit a target.
The framework for central banks to be involved in macroprudential policy is well defined. So the Bundesbank, according to the German financial stability law, has a clear mandate in that regard. It's a joint mandate with the supervisory authority and with the Ministry of Finance, because as we all know, there's a lot of distributional implications that macroprudential policy decisions can have. So it's not us alone, and I think also the ECB has clarified in its strategy review how monetary policy and financial stability interact. So the one point that I would like to make in addition is that we also do have frameworks for evaluation of policies and whether we've done enough. So the FSB, the Financial Stability Board, started this big project in 2017 and looked at the reforms that have been implemented, found no major side effects, found that a lot has been achieved, but there are still also gaps when it comes to resolution reform. So I think also for the areas that you mentioned, the non-bank financial intermediation space, we clearly have to implement policies and look at the resilience in that part. So I fully agree. We can never say that the job is done and we can all lay back. That's what we're there for.
Jay, please.
Just to add, in the same spirit, I think that what the pandemic revealed was weaknesses in the non-bank financial sector, much as the global financial crisis revealed those weaknesses in the big banks and the large utilities, financial market utilities. And so there has been, as Claudio was saying, and Mervyn was saying, there's a lot of effort going into and has been in what do you do about money market funds? What do you do about the treasury market? These things are I think the first order answers need to be changes to the structure of these institutions to make them stronger, more resilient on their own. I would say
messy right now.
Expanding the provision of central bank liquidity
trying to squeak a couple extra dollars out.
Not the desired response. It really is to strengthen these institutions. Our capital markets are quite vibrant and very different in what they do from
on silver. Let's go break that high.
From what the banks do, and I wouldn't want to see the kind of prudential regulation that goes along with liquidity provision. I don't think it would
liquidity provision.
Be great to extend that too much into the non-bank financial sector. I'd rather work on structural reform.
Take a pull back on the Dow. Kind of it's a maybe.
Klaus Eklund.
I like it.
Thank you. Torsten, you mentioned that you
Marty in the NAS.
did graduate studies together with Stefan.
Need $10
that I actually made undergraduate
to hit daily target.
Stefan, so I'm even older. But a question of independence. It seems that you have mainly been discussing central bank independence from, let's call it political pressure. And of course, partisan pressure would be even worse. But there's something more subtle about the independence issue, which I think we can discuss in Sweden right now. I'm personally interested in that. I worked in the finance ministry many years ago.
5 minutes.
I was also on the general board of the Riksbank, Riksbanksfullmäktige, not the board of directors, but the general board before, in the old evil days.
It'll auto-close at $10 profit,
anyway,
which would put me at my daily target.
Institutions. The Riksbank,
0.2%, and then I'll be trying to reduce the risk and try to get more.
The debt office, and of course the
while the market's still moving.
And they often work with similar issues, obviously, and they often have to cooperate. So the question here is how independent can the central bank be in reality? To what extent must the central bank discuss, compromise, lean against the wind or with the wind, and be politically agile at the same time as it is formally independent?
Morning, BB.
Maybe
Morning,
guys.
guys. Happy New Year, everybody.
But I think actually this is almost as important as the,
back, buddy.
let's call it the big issue of political independence. I'd like to hear sort of
just saw that in the chat. Good game, man.
Your experiences from this. How independent can the central bank really be?
Yeah, what's up, Fabi? Welcome back.
Can I start by saying
I think we have to
cat,
between monetary policy independence,
taking a spin on YouTube
very strong
this week. Dollar CAD. Let's
all the other activities of the central bank. So
had it this morning long, but closed out. Yeah,
that's very powerful.
I think
but there are
I
many
like
other
it long on the dollar, but
I think you're the same.
last resort operation had to be approved by the Treasury. That seems to me perfectly reasonable and appropriate. And you have a private conversation where you explain why you want to do it. And in very few cases could I imagine that the Treasury would say, if the central bank feels that a lender of last resort operation is appropriate to prevent some collapse, the idea that the Treasury is going to say you can't do it, I think is not likely to be true. But since taxpayers' money is at risk, it's perfectly reasonable for the Treasury to have an input on it. There was never any conflict between these two different approaches.
A little bit more.
In the different areas of policy.
$10.
So I think the important thing is for it to be quite clear what that policy responsibility is. Whether it's in the US with changes in legislation or the compact agreed between the bank and the Treasury in the UK.
Silver, let's go.
It's quite clear what the lines of responsibility are and who has to be consulted. That's the important thing. That's what prevents, I think, things going very wrong.
Come on,
it's
a little bit more.
It's where different institutions or players all feel that they are the people responsible for a particular policy that you get difficulties.
Yeah, or to express it differently and
$2
more simply, it's a big difference.
Come on, Profit is Prime. Tell me about it. Oh my God, it was $9 and something.
With others, or
there we go. Let's go. Target, baby.
And that's the
let's go.
Point, right? So, yes, please.
Yes.
Open exposure profit target reached.
Let me put it like this. I think it was already said by Ken Rockefeller. I think inflation is back now.
Rockefeller.
We are more or less, in my interpretation, still in the midst of a storm.
There you go.
And the storm is not over. So
$6 more to hit a 0.25%.
Mandate. This is our role.
See what the exact number is.
During the last 10, 12 years, we were the most welcome partners of the politicians because we, in our independent role, we did everything to fought against all the financial crisis and did what we did. But this came with a price. And now in the next years, the politicians have to learn that monetary policy is coming with a price. So maybe some of us, they have to announce that there are maybe losses or not the profits we came up in the past. What is your opinion about that? Is that influencing the way we are
$65, $64
about our independence?
You do a little more.
Who wants to take that on?
Well,
let's go.
I'll take it
next.
On. It's related to something that I said, which is that the pressures.
I need $10 more to hit 0.25%.
Are more complex today than they were in the 1990s.
Ultra low risk.
And you're absolutely right. But I don't think it's an issue about the mandate of the central bank. That is unchanged.
Next.
It's that some people in positions of
start reducing the risk a little bit. Not going to take as many trades. But try to squeak into as much as we can without losing. Name of the game now is to not lose it all. Oh man, look at that! Could have held it.
Always want other people to do things that would benefit their own short-run interests.
Yeah, would have had it.
That's why central banks will remain solid and maintain their independence in respect of monetary policy.
Oil's still probably
and
good.
They have every incentive to do so, in my view.
I don't know what dollar CAD's doing. I wish it would do either go lower or higher.
No. Well, I'll add briefly. I mean, clearly, there are many cases where, given the central bank's independence, politicians will look to the central bank, as Mervyn saying, to do something they should do, but they don't want to do, or political interests will say want something to do with inequality or something to do with the environment that they're not getting through the political system, and they'll view the central bank perhaps as an end around being able to implement it. But of course, at the end of the day, the central bank can't take political decisions consistently and maintain its independence. They're
need something low risk at this point. Something that's likely to go low risk.
But I think in that case, it again is looking to the political system to back it up. If you go to developing economies, the normal rhythm of things is the central bank moves, but then the Treasury kind of takes over everything it did, and everybody knows that that's coming.
Definitely going to take that short. I like the price action on that.
The central bank can move so quickly, but it needs to be very wary
squaring
of taking political decisions.
Rejected the hash and squaring up.
Stefan.
Or something else that's
outside
looking for high probability at this point.
Since Ken, you are on the panel, I'll ask you anyway. You wrote a nice little book called The Curse of Cash. And in this environment, cash is disappearing. So what's your advice?
Well, isn't it wonderful that the people who organized this event had a panel just before us about this? But no, I think one of the things that's been very naive about I will call them crypto evangelists, is that they can somehow do something better and have an end around. And in fact, if you look at the history of money, which is probably what I should have called my book, and you look at the private sector always invents everything, but for many reasons, the governments eventually regulate it and even sometimes appropriate it.
Did you hear what he just said?
That's what we're seeing.
I hope everybody just heard what he just said.
Going forward in the digital space, you need rules of the road.
Someone needs to record that.
I was going to bring it up earlier, but I have to mention
we'll talk about that in a minute. I almost want to write that down.
That was kind of a
said.
success for the regulatory
That
community.
was a huge statement that he just said.
It's the $32 billion at the heart of the crypto system. Just had
let me pause it. This central banker just said this tends to be in the history of money that private industry builds the innovation. They're the ones that do the innovation, and the governments come in and regulate it and appropriate the technology. Central banker just said it right in front of everybody. He said the quiet part out loud. He said they let private industry develop the technology, and then they come in and take over. He just said it right in front of everybody.
To summarize what has been
said.
Rewind
it and listen to that.
But I'd like to end with some final remarks.
Crazy.
But really,
the quiet
just
part out loud
for each of you to summarize for the audience, which is the most important thing that we should take away from the panel.
He just said it right in front of everybody.
Expound on one. Which would that be?
Right out loud.
Who wants to take that first?
Let private industry do the innovation, and government tends to come in and regulate it and appropriate the technology.
Bank independence is a matter of statute. It's not in our Constitution. It's just an institutional
regulate it and take it over.
That has served the public well. Nothing more, nothing less.
CBDC.
And as long as it does serve the public well over time, then I think it's safe, and I think it's safe now. But that means we've got to be committed to achieving our goals and to sticking to this precious grant of independence to keep it.
Central bank digital currency.
We deserve it, and that means stick to that work and don't
let everybody else do the hard work and figure it out, make it work, and then
we shouldn't be getting ahead of where the public is.
Ban it and steal it.
If there's no specific
mandate. It's been saying it for years.
In the case of the US,
exactly that for years. It's exactly what's going to happen.
Claudia.
Yeah, no,
crazy. Just that central banker just said that right out loud.
Jay just said, and that's also again when you look at the German history. So sticking to the mandate and deliver. I mean, this is what's building trust. And I think when it comes to financial stability, we actually at a critical juncture because the system has not been fully tested. So we have to make sure that we also deliver on both of our mandates, price and financial stability.
Marvin?
All good things do not have to come to an end, and central bank independence is one of them. And I think the point that comes out of all this is you can have a debate about whether interest rates should go up and say by how much or go down a bit. That's to do with the actual decision that's being made in a moment. But institutional arrangements matter. They really matter.
A bit higher on gold.
That's why
try to sell the high of the day.
Independence, I suspect, will live longer than many good ideas.
I also believe central bank independence will go on for many decades to come.
I don't like the range expansion like that.
Forever. And I would just again argue, as I said in my remarks, that it's really been maybe the most successful policy innovation post-World War II.
Right at this point.
And continues to be.
Going to continue on to target.
Okay. Let's stop at that and take early coffee. Thank you, with a big applause to the panel.
Thank you.
Okay.
I said the quiet part out loud there. Holy cow. All right, yeah, so they cut it off. They cut the stream off. Yeah, so Holy cow. Well, that was the biggest thing I heard. That's the only thing that was important. He just said it just went right through, like it didn't even matter. He just said that in the history of money, he said what I should have called my book was The History of Money. He said in the history of money, what tends to happen is private industry innovates and builds the technology, and then governments come in, regulate it, and appropriate the technology. Basically come in and take it. They regulate it into non-existence, say this thing bad, and then but trust our thing. That's exactly what CBDC is doing right now. It's exactly what the central bank currency is. They're going to regulate it into the Stone Ages and then say you have to use our thing. I mean, the dude just said it right out loud. Wild. They should take that clip and run with it. Honestly. Should take that clip and run with it. That audio clip. He just said it right out loud. Like, they're not even trying to hide it. They're not even trying to hide it. Pretty wild. Yeah, interesting statement there. Trying to catch something that's likely to move some distance. EuroCAD, I think it needs to go a little higher, and that's going to be a short. Dollar CAD's the dollar is just in a whack spot. It's just sideways. So now that we got that out of the way, yeah, it's funny. I was just talking to somebody about this over the weekend. We were talking about COVID and how all that stuff came about, and the vaccines and all that. And it's just like, man, they always tell you exactly what they're going to do, and nobody ever believes it. They always say it right to your face. You never notice that? We talked about that before here too. Notice that they always, as shocking as it could be, they always tell you what they're going to do, and it's like nobody believes it. Like they always say the quiet part out loud, and so weird how they do that. You would never believe it, but they'll tell you exactly what they're going to do, and nobody believes it. It's hilarious that he said that right at the end. He's basically like, yeah, we're coming in, we're going to take it over. We'll let them continue to build the technology, let them fail a million times and figure it out until they get it right, and then we'll regulate it and do it ourselves. Once they solve the problem for us, why should we do the work as a central bank? We'll let private industry solve the problem for us, and then we'll just take we'll just take it because we're the central bank and we can do that. Like, that's what he just said. Literally what he just said. Crazy. So be aware of that. It's what you're up against. What you're up against as an investor. Kiwi yen. Trying to get a little bit more. I could quit, but just take the money. Trying to move forward. I'm gonna move forward on this. Get closer to scaling this thing. I need more, but I'm just doing it low risk. Trade this account high risk. I need to get back to trading the other one too. Actually, may start another challenge actually. Thinking about that. And I might run the bot and let it do it. But low risk. It's going to take a while. I'm going to trade it manually too, but a hybrid approach with the bot, assisted with manual trades. Try to speed it up a little bit. Like yesterday, it had some great trades on the NASDAQ. The bot fixed the problem yesterday. I had a drawdown, and then I just let it go, and it hit the high of the day on the NASDAQ and ended up closing out. And I woke up to profit this morning. Yeah. In this choppy market, man, the bot probably did really well. Justin said he had a good day on it. Yeah, that's a good day. This messy market like this is perfect. Perfect for the bot. Choppy mess. The messier, the better. Bot loves a choppy market. The mean reversion strategies do. And a lot of it is mean reversion. So a lot of the more profitable strategies are mean reversion type of reversal strategies. Honestly. But you can run it. You can run trending strategies too. I think I'm gonna run a little both. See, what is this Aussie dollar? Normally we'd be buying this. A lot to lose. Why not? Worst that can happen. Just gonna put some low risk in. So yeah, interesting there. He didn't really say much. Powell didn't really have much to say there. Yeah. Yeah, it's funny. They always do it in the name of safety. It's always like that. They'll say, we have to protect everyone from this financial destruction that crypto is bringing. We have to protect investors. So we're going to put you all on the CBDC. And if you say a curse word in public, then we'll automatically fine you through your Alexa. And, welcome to, 1984. Utopians, like Demolition Man, if anybody's ever seen that movie. Old Sylvester Stallone movie. Old movie. Actually, it's like the early 90s. Demolition Man, where he says a curse word in public and it goes, you have been fined 20 credits for it. It was about the future, and it's funny because that's where we're heading. He said he woke up from being frozen after many years and says a curse word, and he's like, you have been fined 20 credits for using a curse word in public. And he's like, what? He's like, it just like this thing, this receipt prints out of the wall, and he's like, you've been fined. That's where we're heading. That's exactly where we're heading with central bank digital currency. That scene in Demolition Man pretty much sums it up. That's where we're heading. So just, if you're speeding, whatever, if your phone app account that you have to use your CBDC on detects that your GPS was speeding in a, whatever, you're going 56 in a 45, it just automatically finds you automatically. That is where we're heading. It's exactly where we're heading. And people are cheering it on. It's always like that. They'll always cheer it on too. Same thing with the Patriot Act and all that. Lost all of our freedoms, and everybody just cheered it on in the name of safety. You got to protect us from the terrorists, and lost all of our freedoms with the Patriot Act. Everything. We lost all of our privacy permanently, and everybody just cheered it on. And it's always like that. They have to make it popular publicly, which means there always has to be a boogeyman. There always has to be the enemy. The boogeyman has to exist, whether it's whatever. And, they'll make crypto the boogeyman. They will. They're already doing it. So we buy their thing. We put our money in their thing, and they'll force us to. Eventually. It's going to happen. They've already told us that it's coming, so it's going to happen. The question is, how long are we going to be able to get away with, staying outside of that system? And that is yet to be determined. Will there be an alternative system that people just revolt? Will people just not? I don't know. If you want to survive, you have to, and that's the thing. You have to comply in order to buy food for your kids, So there's going to be that aspect to it. Anyway, we'll see what trades we can find here. I'm just flipping through, kind of in run and gun mode today still. That looks like that's going to be a long. Not a good entry. Price actions there. Taking some micro lots. I'm trying to just get a couple more bucks out of the market. I've already hit target enough, but there's still time. We're in the hot hour here where we've got time. This is generally when the volume comes in. So I'm just trying to, while the market's moving. Market's been dead today, man. Completely dead. That's going to be a long right there. Aussie Swiss. Buying the bottom of the range for a rejection, assuming the low of the day is in, as long as it doesn't break the current low of the day. I think the Aussie is going to come off the low. I think it's been looking that way. Yeah, the Aussie's strong. Yeah, most of the market has been flat, and then the Aussie and the dollar has moved. It's crazy. The Aussie and dollar made some expansions and then contractions, and the rest of the market has just been flat. The other 6 major currencies have been pretty boring, honestly, today. It's been a very slow day today. Done well today, given the market conditions. We're not getting a lot of like distance moves. Aussie dollar actually looks decent. This is a decent buy. You're assuming that the low of the day is in, then we're looking for the high of the day to be higher. We'll see. Aussie's gaining. Not sure on the dollar. Not sure on the yen even. See. Assume that we're going to go higher there. Just need a couple more dollars. Maybe we'll knock it out in 2 sets of $5. And that's generally what you do. You start reducing when we're, as you get to target, you want to reduce the risk of loss. What's my risk analysis panel say? I can't see it. So $19 risk with a $56 potential gain. Yeah. I'm going to make that text bigger. Honestly, I didn't get to test it until yesterday. God, the NASDAQ just broke the high again. Should have stayed in that. Had that a really good long entry on that. Yeah, this is going to be super useful here. Risk analysis panel. Looks at all your open exposure, all of your stop losses, and calculates the total dollar loss and percentage loss and stops. Yeah, so I'm risking $19, and if things hit target, it'll be $56. So my total net risk is $19, which is whatever. It's unlikely that that's going to happen, but I know what my total positional risk is. That is a big deal. That's really good for taking. It makes it easy to take multiple positions, because you can just say, look, I know what my net risk is. I'm risking. You take 10 different positions, even pending orders, and say, look, my total risk is 0.5% of my account. Just let the market play out, and you know when not to go over. You know what your total risk of loss is. That is huge. That's a big deal, and it works. It's working great. Euro dollar. Crazy thing is I still want to be short euro dollar. I don't like the entry. I think the dollar is going to end up higher this week. It's not a good entry right now. So many things are still in a range. It's crazy to see it, actually. To look across the market, everything's still in its range. Almost the entire market is still ranging inside of its opening range. This is nuts, actually. To be this time of the day on a Tuesday, there's nothing. Dead. Market's dead. Everything is still inside of its, every single pair I'm looking at is still inside of its opening range. There's one that's not oil, and it's not far away. It's barely out. Barely. You know, gold's running finally a little bit, but it hasn't even moved a quarter of a daily candle range. Not even 25. It's about 25% of a daily candle range, which is wild. Biggest move is like a quarter of a daily candle. This is just like dumb slow today. NASDAQ. See if we can get a possible scalp short here. We'll say whatever. Maybe something weird happens. If that'll scalp short, I'm sure it'll reject enough. It'll probably reject enough to get some profit out of it. Same thing here. S&P and the Wix. Let me flip that. Let me put my target up above that block. We'll just say back to the top of the range. Maybe. It's possible it makes a lower high. I'm curious to see if this is going to be the high of the day here in equities soon. Pending order there. Buckhorn. Probably going to be a short. Yeah, stuff just doesn't look good. Might be an equal high up here. Here at the top of the day too. .09. so I'm going to attempt a couple reversals here, just a little bit more, and it may go higher. I'll take the stops, but I just need a little bit of a reversal. I think gold's going to run a little bit higher and then pull back. So same thing on gold right there. Look for a break of the high, risk whatever, risk $4 on a potential higher high wreckage, like a 1 to 10 R. If that's the high of the day on the hash, it's frequently the high of the day, very common. E13 classified. Algorithmic rebalancing point, very common to be the high of the day. Frames need $10. $0.25% without getting wrecked. If I have to take a couple stops, I'll take a couple stops. That's my risk. Risking 35. All right, make 174 or something this is. God, it's too small. Bigger. How to use and activate the bot. Yeah, there's a couple videos on YouTube actually. If you go to my YouTube channel, there's whole like install tutorials, and yeah, there's how to install it. A lot of the strategy stuff we go over, we'll go over in Zoom privately. You know how it all works. You know, but there's 19 different strategies, and a lot of it's like range based. But look on my YouTube. There's videos on how to install it, what each thing does. There's a pretty long video on there actually on what most of the settings do, and just kind of a general overview on what most of the settings are, and anything specific, we'll go over it. The important thing is to just it depends on how many charts you're running it on, how many pairs you're running it on. It's designed to trade the entire market. It trades the whole market as a whole. But you can choose which pairs you want to trade it on. It doesn't have to, but it's better to run it on like 10 or 15 different things. Or more, really. And that's really where it shines, is trading the entire market in a distributed risk model. You don't have to trade it on like one thing, like just GJ or just gold. Like it can trade the whole market. And it's actually better to do that sometimes, to distribute your risk across the whole market. That's what it's designed to do. Low risk, distributed risk model across everything. Dollars Swiss. But yeah, there's a video, check out YouTube. There's a video on there. There's a couple videos on YouTube about it that don't go into specific strategy, but explain how it, what the settings are and stuff like that. And any question you have, we'll talk about it, of course. A little bit more. Probably could be taking more risk, to be honest. Man, that almost hit. See how close that got to the pending order? It just didn't hit. Still might.
Hey, BB.
Hey, what's going on, Bobby? What's up?
How is the new relative projection lines working?
Oh, yeah, we'll go over some of that. That's something I'm testing, and it's very interesting. I figured seeing something. It's a measurement. We'll go into what it is in the group stuff. When we're not
I know what is the concept. I'm just like, because I was
okay. Yeah, no,
definitely. It's been kind of.
Yeah, no, it's definitely interesting. Yeah, it absolutely is. It's hitting it. I'm trying to figure out how to use it as a filter. It's because of how it's measured. It kind of depends on what happens on the previous day, but it is absolutely something that we need to watch 100%. That's why I've left it on there. I was just testing it for a couple days to see, but I was like, yeah, I've noticed that a bunch of these have gone off of that level, and it's really about trying to decide whether or not it's going to continue. Is there confluence with another level? And that's definitely been a thing. I've seen there's some days that it's been like incredibly accurate. It's been like the high or low of the day on a couple of these. So there's clearly something there. It's, it depends on where it is relative to the hash and to your projected high. And it's one of those things where, and I may name it something different. I just named it that so I understand what I'm looking at. But yeah, it is definitely a thing. And I'm leaving it on there right now, and we'll flip through and watch. It depends on what happened the previous day, though. And that's kind of where, when you start to see them all clustered in one place, you're probably heading that way. Like right here, it's on the hash. It's right there at the hash. That's going to be that's going to be a level to watch. I may call it something different. It's more testing right now, but oh yeah, definitely. There is definitely something there. Yeah, it's weird. Stuff where you wouldn't think that it would reject, just rejects out of nowhere right there on the relative projection measured from the previous day. Pretty interesting. Yeah. Cheat codes. Like right here on gold, we can see where we're heading up here. Got some confluence up there. So we'll probably guess that that's going to go a little bit higher. But yeah, it is. Yeah, definitely interesting for sure. Bitcoin. See, we're there right now on Bitcoin, and it's right around some other areas. It's just one of those things, especially when there's multiple things in one area, you have confluence on different levels, and it's a completely different measurement. It's completely unrelated. So when they're saying the same thing, it's something to pay attention to. So yeah, it's been interesting actually. Yeah. Awesome. Yeah, definitely. Yeah, still watching it. Still, I'm trying to get more data, more information, so I may put it in the bot as a filter. Like if we're beyond that level already, then we know we're going to watch the hash. If it's already broken that level and we're not to the hash yet, like if it's under the hash is probably going to be the high. If it's up near the projected high is probably going to be the high. I'm trying to figure out using it to determine whether it's going to reject at the hash or we're going to run the full range. And that's the thing. That is the ticket. Like right here, the relative projected high is way lower than the hash. So it's probably going to run up to the hash and reject. And that's the idea. And watching how many times that's right. And I'm going to have to write some code to go back and test that on historical data. But it's definitely something. Yeah, it's super interesting. Yeah, it's just one of those levels that's like, whoa, wait a minute. Like there is something here. Like something's going on here algorithmically. Right here at the hash, right at supply previous center, it's all there. Like pound Swiss, we'd be looking right there. If we make it down there, it's absolutely going to be a long, But yeah, it's definitely interesting. Yeah, still watching. And again, it depends on where it is relative to the other levels. I'm trying to figure out what to watch here. I'm flipping through kind of run and gun style here, trying to catch a couple more dollars. Like the S&P looks like this is going to continue higher. Like this pullback right here, like it looks like it's going to continue higher. It just price action wise, it's weird. I'm nervous to take that long, but I also know that it's probably going to be a thing. Yeah, a little bit more on gold. Silver, same, a little bit more. Dow and S&P is all probably going to go a little more. Up. It goes higher. Need a couple more dollars. Anyway, still watching. Give me 1 second. Drink here. Silver, yeah. I think silver's probably good. It's got a little more to go. I wish I would have stayed in it from earlier. Yeah. Probably could have stayed in that. That's going to go a little more. Gold's looking rough here, but it's above a previous high. It's sketchy where that is. I'm looking for it to go higher to sell it if it goes higher. Trying to sell the higher high. If you zoom out on gold, I'm trying to catch that higher high for the retracement. Gold is extremely high right now. It's crazy high. Yeah, I got something on my... So weird. Wearing glasses. I never wear glasses. So weird. But these things help.
You got a blue light glasses?
Yeah, blue blocker glasses. Yeah, my girl got me some. It's useful. It's helped a lot. Yeah, it's helped a lot, honestly, especially at night. Yeah. Oh, that's better. Smudge them somehow. Yeah, I mean, staring at a wall of monitors, it's important. I've noticed my eyes are starting to fuzz out at the end of the day. I'm like, oh my God, eyes are just sore. It's crazy. It's actually like completely gone away, which is good. It's a good thing. Pull back here. Well, I'm afraid of a range expansion in equities here. I don't know if that's going to go back and break the low. This level that it's at right now should be strong. We've pushed through that. It should be strong. I'm actually considering taking another one here, depending on how close it is. Come on, get back to it. Right where that is right now, probably going to be a stronger level. Did good today though. Yeah. Did well trading.
Wires back inside the range.
Yeah, I saw that long earlier. I'm glad I'm out of it actually. Very choppy market today. Stuff is all over the place. Dollar is back up.
Yeah,
super choppy.
Like man. I said, most everything inside the range is true.
Everything is.
Just now they're trying to reverse.
Yeah, so it's crazy. Like almost everything is back inside.
The only thing I'm holding now is the cat, dollar cat.
Yeah.
I have 2 positions on it.
Back inside. Hang on. The S&P.
Enemy checking euro pound to see if the pound's going to get a little string and the euro is going to get a little weak.
Yeah.
That's pretty much it on my end.
Yeah, this is like risky here. Trying to bet on a pullback. Man, I don't know. This may run all the way. See, the crazy thing is if it does, like it's going to go much lower. Like this looks like this could be a crazy range expansion and then run all the way down for the rest of the day. Because in structure, like this looks like it's going to go lower. Yeah, I don't know what to do with this, man. We're in a weird, the market's weird right now. The whole thing like has just been in a big choppy mess. Like the whole market is ranging all over the place. How much of this profit am I end up giving back? Start slowing down the risk. It's not going to be a long in equities. I'll wait and see. I want to see this wick back up and hold. Fortunately. Yeah, super choppy. It's just whipsaw all over the place. Everything's going up and down and up and down and up and down and going nowhere. Going nowhere fast. Back and forth and back and forth and back and forth inside of a range. That opening range is just held today, which is crazy because if it doesn't run today, tomorrow is probably going to be a trending day. So the bot's probably doing really well today. I'm just only running it on a couple pairs, and it's not outside of the range enough to be taking any more positions. But this kind of market is when the bot does well. But tomorrow could be a harsh trend because we've been in these ranges so much. Could be good though too. Could be really good. Stuff, especially on the dollar, like dollar and the yen stuff that's already run a lot and they're on higher highs right now. Euro dollar, Aussie dollar, all those. Maybe tomorrow will be the trend retracement. It just wasn't today. It didn't pull back today. We stayed in a range. So looking to sell the high of the day today on Aussie dollar, Euro dollar, but depends on what the dollar is going to do. I know the dollar looks like it's going to go bullish. Dadgummit. NASDAQ. Bouncing. Gold doing. Go back to gold in a minute. Surprised that we're not getting anything really on this hour. It's garbage. Crazy, man. Everything is just nothing. Inside the ranges or pulling back. Weird pullbacks. Bottom of the range on CAD Swiss. Don't have nothing to lose there. Trying to be a little more selective with trades I take because I'm already up. I'm not afraid to give some of it back, but I think if I let all this stuff go, it'll end up in profit at some point anyway. Yeah. That top of a range. Offset it with something else. Gotta find $10 out of the market somewhere. Messy today. No answer. Dude, hold on. Pop scratching at the door. I fell asleep yesterday. I actually tried to sit down and rest for a minute and I fell asleep. It's crazy. I was like, man, oh my God. Woke up like hours later. I was like, oh man. I was trying to finish out the trading day. But yeah, I fell asleep yesterday. We're not going to do that today. I'm going to stay up and watch the national championship game last night, but it was a blowout early. I woke up and I was like, oh my God, it was like 65-7. The national championship. That should never happen. This tells you it was a lopsided matchup from the beginning. It was the wrong two teams playing against each other. But yeah. Thought about staying up last night, but I didn't. Yeah. So here's the thing. In equities, if this doesn't hold, there could be a nasty trend to the down, a nasty run all the way to the downside. I'm hoping this holds kind of in a range here. But man, this kind of price action doesn't look good. This big range expansion like that doesn't look good. In S&P, NASDAQ, yeah, silvers, yeah, gold, same. Like we're just getting some shenanigans here. Not great. Let me gonna run the dog out real quick. He's tapping at the door. He probably needs to go outside. Bitcoin didn't quite hit my pending order. I've had a pending short up there, didn't get hit. Man, good rejection there too. That looks like that's going to come down. This candle closes big full body bearish candle like that on Bitcoin, probably sell on the way up. We'll watch center mass there. Looks like the day's not over. Might have to change our bias on the equities market. I was hoping for a bounce there and it didn't happen. So take some stops. Couple more dollars. Probably should have quit for the day. But stupid market, man. What is this? Dollar CAD's up. What is going on, man? Like, complete garbage, honestly. It's very difficult to stay in a trade today. Look at this. What is this? Just locked in a range like this all day. Flat. Dead flat. Everything, like every single pair is just a choppy mess. What in the heck? Give me a second. Let me go, I'm gonna let this go for a second. We'll watch it for a minute. Try to figure out what to watch. I kind of want to watch the S&P. One of the indices. Try to figure out what the heck's gonna happen here. Watch the NASDAQ. We've got a pending order short that almost got hit and didn't get hit. Almost, like a couple pips away. And then I'm long from the top of the range there. We'll see. Gonna go one way or the other, right? Eventually. Give me just a minute. I'm gonna run downstairs for a second. We'll watch this for a second. I'll be right back. I'll actually be back today. Gonna run the dog out real quick and put something to eat in, and I'll come back and we'll flip through and watch. Give me just a few. was watching on my phone. I was watching the NASDAQ. That weird move right there. No target yet. Oh, right. Riggedy. Let's see what we got. Get my hater blockers back on. All right. Hold on a second. All right. Girl's yelling at me about something. Asking if she can finish the Sprite. Lol. Yellow dotted line. It's a measurement. It's more to kind of judge where stops are going to be, depending on the type of entry I take. More just like it's a reference. It's a reference to know where, if I take a certain type of entry, where it's likely to, where I'm watching for a potential stop, or sometimes it'll wick through a certain level, back down to one of those hash levels, and then back out. It's hard to explain. It's all stuff for the other side. All right, got my hater blockers. Ray Charles to the BS. Kind of look weird with glasses. It's so weird. It's funny. Yeah, so nothing there yet. Let's see what we got. Flip through. See what we got. Come on, NASDAQ. Let's go up. A little bit more. S&P. In the green. What's negative? What's the problem? Euro yen. Right up and eat my cauliflower nuggets. Like healthy chicken nuggets in the air fryer. Actually not bad. It's chicken, like white meat chicken, but it's got like cauliflower in it, like vegetable. It doesn't taste like vegetables at all. It just tastes like a chicken nugget. And healthy nuggets. Lol. Man, oil. I think oil is going to end up being a long. Dollar Swiss. Like, it's so tempting. Try that. Am I already long there? Is that long or short? It's a short. I need to hedge that. It looks like it's going to be a long to me. I'm going to overweight that long. I'm going to hedge it, but overweight it long. So if it runs against me, it won't run hard. But if it goes up, I'll get profit from it. So reduce, kind of soften the landing if it goes down. And it'll be like a normal position if it goes up. I don't like the price action, but I like the rejection. I don't like the structure, but I like the price action. Let me put it that way. Short-term PA is good. Gold. Let's take a look at gold, actually. I'm waiting for it to go higher. Honestly, I want to short gold, but from higher. The bottom of my list here, NASDAQ, Dow. Yeah, silver and gold are a little bit kind of different adventures here. This is the kind of thing that I almost want to watch the dollar here. Like I want to be short. I'd rather it be short from higher. This is normally the kind of thing where I would start looking for shorts, right? I would take a position here and just see if it dumps. Got a weird situation here. Extremely choppy market today. This is a tough market, honestly, today. Tough one. We were lucky to get out of this unscathed and hit any kind of target at all, but breaking it into small chunks is the way to solve that problem. Just a whack market. Just did well today. Got it right on the dollar, for one thing. We got the dollar move early. Betting on the dollar to go up early. That was the right decision. And then that the equities market pump there helped a lot. But yeah, honestly, tough market today. Be the first one to admit it. It's tough market today. Not over yet. Just trying to keep the risk low. Trying to keep it reasonable. Keep the drawdown managed. And still, once things start to move, still be able to hit it a little bit more. Just don't want to do anything stupid and end up giving it all back. Looking for the highest probability really at this point. Either that or in and out quickly, which is also okay. But yeah, what were we talking about? Gold. Down. Yeah, gonna be a short. Let's go out to a 1 hour real quick. I wish it would go higher. I'd like to see this 1 hour candle close first, because this kind of thing, this kind of pullback, that next hourly candle could slam all the way back up. I've seen it so many times. This is not the greatest short entry, but I would rather be short than long just because of where it is in structure. I'd rather be short from a higher high. So a higher high from, yesterday's previous high, like right up here. If it would go above that, that's why I'm looking to fade the high if it'll break that high. We'll see. We'll see on that. It's maybe. Look at this on oil. It's just like this thing is down so far. Like every opportunity has been a buying opportunity today. Every single time it's gone lower, it's gone back up. All week, it's continued higher highs. Higher lows. It's continual higher lows, just all week long. If that closes, we get this big bullish candle close like that. Be reasonable on a pullback. We'll watch some kind of a pullback. Maybe somewhere in there. Depends on where it closes. Pending for the top of the range. I want to see it close first, though. We're still early in this hour. It's a big move for 15 minutes. Good game. So we got, there's still a possibility that goes. Very few things have actually run anywhere close to any kind of range, daily candle range. Nothing. It's a weird day today. Come on, man. This is garbage. Just chop back and forth. We cannot catch a trending move, and it's late to be trying, really. It's a little late. That doesn't mean it can't happen, though. We'll wait for volume to probably come in toward the end of the day. Generally comes in equities toward the end of the day. Messy day today. Garbage. Honestly, did very well today relative to yesterday. Yesterday was kind of crap too, but end up making just slightly better decisions today, really, in a terrible market environment. So it's just wasn't easy today. Cat Swiss, man, I don't want to take that. Stop, it's just going to bounce. To move this and hedge it and trade my way out of it, which is what I'm going to do. Just if it runs all the way down, then good game. I'll hedge that. Sometimes there's no reason to take a loss if it's not a big deal, like if it's not a big position. Watch it. This is probably just going to go just a little bit lower and then bounce. And that bounce may be enough to even get out at break even. So I'm not going to, I'll just offset it with something else. It's not going to be, you know, instead of taking a loss, it will be what, another dollar in drawdown. It won't even matter. That's interesting. Aussie dollar coming back into the range. That's probably going to be a long again. I don't know what the dollar's doing here. Nobody knows. So what do we have here? Flipping through. Going to continue this out. Going to somehow squeeze $10 out of this market and hit my 0.25%. Hit 0.2 already. I'm going to hit that 0.25%. It's a great day. That is a great trading day to hit a 0.25% profit with low risk. I'm not seeing any 20 lot trades here. Trying for 3 pips, hitting a 0.25%. An ultra low risk, consistent trading. Extremely low risk. And you can still make gains on an account trading low risk. That's the whole point of what I do. Is to prove to people that you can still do it without doing anything stupid. That's the whole point. Nasdaq's good. It's a short TP. All right, that's not in yet. Yeah, this can still be done without taking 50 lot trades. Got to be a little more smarter about what you're doing. Again, you're not going to have a winning day every day either. Come on. The idea is that you move the chains. You move the chains forward. Back in. I'm already long on it. That candle closes inside the range like that. There's nothing to do but take it higher. Could be a long. Yeah. All right. Triple check. Kind of how it goes. You hover around, you know, things will go into a little bit of a net drawdown. You hover around, you know, neutral, and then all of a sudden things will start kicking off. For a long, that's fine. I want it to be there. There, that's coming. All the Aussie stuff's coming back. Remember, the Aussie is already very low, so it's likely to gain. It's likely to retrace at least a little bit, get a relief rally in the Australian dollar as an index, as a currency index. Really want to be short Aussie from here. Tempting. Missed it off the hash. Possible high of the day. Taking that, you would be closing your, you'd be taking profit on longs and should have flipped it short right there on that red line. Again, this tool is not as powerful as the trading view. The trading view version just has more things to watch. This is the stripped down version. I've got some of it taken out too for YouTube, but it's a stripped down version of the tool. The rest of it's in the options. There's actually more on the MetaTrader version. I've just got it stripped down right now. I've got it disabled. Just watching the opening range right now. I want to know where price is relative to its opening range highs and lows. How much potential is there left statistically on the daily candle? It's one of the most important things you'll ever learn in trading, ever. And nobody talks about it. Nobody does. How to know when not to trade something. When do I not touch it? Important. Very important. These ranges like this is a when to not touch it. Tell you that. Stupid ranges. That looks like it's going to bounce though. Yeah, there's not much happening today. I wish gold would go a little bit higher so I could sell it. Not going to do it. I need one good candle worth of movement on something. Bitcoin's going to be a short if it goes higher. Wait for that. Yeah, I mean, yeah, there's nothing wrong with sticking to one pair. Just have a different way of looking at it. And that's the crazy thing about trading is there are different ways to do it. I mean, two people can have two very different perspectives on the market and still be profitable. There's nothing wrong, there's nothing wrong with trading just one thing. Depends on what that one thing is. Gold may be a little bit better choice than GJ, but there are going to be times when the market, when that instrument isn't doing anything though. You got to think about it that way. You're going to miss opportunity by not expanding your horizons beyond one instrument. That's the counter argument. And again, I'm not saying that one thing is right or wrong. Last thing I'm going to say is that my way is the only way that's right, because it's not true. It's not how it works. I'm not going to say everybody else is wrong and my way is right. I can sometimes people do some stupid stuff. They teach newer traders terrible habits. There's a lot of streamers and mentors out there who teach really bad habits to new traders. Extremely risky behavior that they're not ready for, and they're not even good at themselves. And it's just, that's the issue I have. I just have an issue with teaching new traders to do stupid things. And there's a lot of that out there. A lot of it. That's the only thing. It's counterproductive. It hurts everybody. Okay. It's either gonna break the high or null, or be an epic short entry. Take a risk on the hash. Although that looks bullish. Something potentially happening here. What it is ain't exactly clear. Structural thing happening here. Algorithmic rebalancing point here on EuroCAD. And I'm going to take the counter argument here on that. Because of the structure. We got a shark fin for group side. We got a very clear shark fin on EuroCAD. And look at where it's happening. Here real quick. I'm going to take the risk on that. Look at it's the playbook. You know, we talk about shark fin playbook. Tight consolidated range. The run. Got the gap below it. Back into density. It's the same playbook right there. So it's there. EuroCAD is running the shark fin. So that's what we're going to go with for now. Stop a little bit higher, but let it breathe a little bit. But if it's going to stall, it's probably going to stall right where it is. See how accurate that entry is. Right there. Yeah. So we'll see this reject center mass. Start working on the lower high consolidation and hopefully cut back through the gap. We'll generally run to the other side of the consolidation, which lasted all day yesterday afternoon, and then run down back into density, preferably to break the low way down here. Potential move happening here. Next. Looks good so far. That would have been a good scalp, actually. Yeah. So I see this would have been one that it could have taken a bigger position size on because of what happened. I just should have, but I'm already, if I was farther back on the day, I'm just trying to get a couple more dollars. I need $10 more out of the market. There you go. There's your shark fin. We'll see if it holds. Come back to it, but that was it. So now we're watching much lower on that on EuroCAD. Run all the way back through that consolidation, through the gap, back into density. That was a manipulation move that just happened right there. To get everybody long and rip it back the other way, right at the rebalancing point. On CAD, probably going to be the same thing. Yeah. On CAD too for the same reason. Different structure. Probably going to make the same move. Probably going to close back inside the opening range. After range expansion, false move on the high end and the low end. It's just time to try it. It might be enough to hit target. There we go, baby. Come on. There we go. Small piece there. Looks like it may be euro. Let me look. Mess, man. What a
1 hour.
Trash today. So funny.
15 minutes.
Turn that down. Prophetess Prime screaming at us all day.
5 minutes.
We'll watch short-term data points. Watching for a pullback on the euro. CAD. CAD is shifting direction. The Aussie. Euro dollar. Maybe a short. See what the dollar's doing real quick. This. Yep. Maybe. We'll watch that. We'll see where it is. That for now. What is this? Same thing. It's probably just going to reject and come back. Range high. Skip that one because it's low in structure. The reason I don't want to take pound Aussie is because look at where this is, just for YouTube. I mean, look at how far down this already is. This isn't on a high, it's on a low actually, and it's buried down in here and put in a double bottom, what people call a double bottom. It's just forming a range. It's a range low, and it is back to its range high, but it's low. So I don't really want to, I don't really want to short it down here. It probably is going to pull back. It's just one I'll leave alone. I would rather buy it lower. If it does pull back down, I'd rather buy it than try to sell it here. I think this is going to end up being a long. There's a pretty good probability it makes a higher low when it pulls back, and it could be hours from now. It may be tomorrow, actually. Tomorrow may be the move. Look at their pound CAD. Banger. Here we go, baby. Re-entry in the top of the opening range. Got it. Pound dollar is probably going to go to a dollar. All these dollar pairs look like they're coming back. A little bit more. Dollar CAD pulled back. Dollar looks like it's going to go stronger. Twist, that's still okay. Oil, messy today on oil. Gold, again, we're looking at a stronger dollar. I'm going to leave it alone. I missed the high. I was hoping it was going to go a little bit higher. I'm not going to try to sell it now, even though it probably is a short. Honestly, it's not a great entry. You're selling something after it just came down for an hour and a half. And selling the break of the high was the answer. It didn't quite go as far as I wanted it to. So whatever, missed it. Next. Overall weight on. Yeah, so equities. What is this? Got a small longs on it. I'm going to leave them. Maybe we pump into the close. It's holding above the consolidation. It's just not, oh, sorry guys. Not a good entry. My voice is wrecked. US 30. I'll take a little risk. Why not? Maybe it does something crazy at the end of the day. Maybe it holds the top of the range. Just in case to hedge. But I'm not going to put on any more risk on that. Maybe it holds and doesn't die. Wrecked. What happens when you talk 12 hours a day for years at a time? In a perpetual state of losing my voice. It's actually crazy. Starting to wonder if it's like a medical problem. Like if I'm doing damage. Talk all day. You guys have just been seeing it lately on YouTube, but here every day trading in the group. Just killer on your voice. Always losing my voice. It's crazy. Kiwi dollar is interesting. I don't know what to do with that. Normally I would look at this and take it long and just for a scalp. I just such a stupid market today. I'm trying to be very careful what I take from this point on. I was kind of running gun earlier, but from here I want to be careful because I don't want to end up doing a bunch of stupid stuff and then I'm in a $40-50 drawdown, and you know what I mean. Hopefully that doesn't happen now. Depends on what happens with stonks. I'm going to watch it and see. I'm willing to take a little bit more risk because, I mean, whatever. I can do better. I can do more out of it. I've got plenty of room. Just trading from a consolidation like this, you got to be careful because if it starts to run, it could run big and you don't want it to run against you big. You know, if it's because we haven't really moved very far in a lot of this, and if it starts to go in a direction, it might stay there. And we still got a couple hours before the volume really comes in, but hopefully we got most of it right. Again, some will be right, some will be wrong. It doesn't matter. You don't have to get every trade right. What I'm showing here. Yeah. God, that's so close. I'll leave that. I'll wait. If it was a bigger position, I'd take the stop. I'm going to take another one if it goes up. I want to be short here on Euro Yen, but from higher. I would rather be short from higher. If it was a bigger position, I would just take it, let it close out and reposition. That may not stay that way. It's probably just going to go a little bit more and then reject again. All the room in the world, just need the market to move. Correct again. Did this the other day. I was way up and ended up giving a lot of it back. $52. So something took profit. Not by much. Need like $10. 13 exactly. Maybe not. Some of this stuff, if I just leave it on, it'll be fine tomorrow. Like EuroCAD, if for some reason this breaks the high, I'm going to be back in it higher. So this will be the first position. I want to see if this is going to be the high of the day or not. A good chance that it is. That it's very close to the high of the day, and it will just completely reject here like a brick wall, and there's something invisible happening here. And there's a very good chance that it does not run any higher today. Very good chance. So that one I feel okay about. Euro Yen, same thing. Could easily come back in, leaving it alone. Everything's good. Just talking through it. Euro dollar. Who knows on the dollar, man? Whack. Maybe we'll go back and look at some charts. There we go. Come on, pound CAD. Talking about right there. What we need. Could go stops to break even right now. I'm going to give it a chance. I may do it in 2 sets of $5. If I hit $5 target, I may just close all.
Yeah, just turn on YouTube, man. You look good. You want glasses?
Oh yeah, yeah. It's weird. It's weird to me because I look different with glasses. It's so weird to see myself with glasses because I never wore glasses. Yeah, it's weird to see. I look studious, look awfully studious today. Yeah, it just looks
very
weird.
nice setup too.
Yeah,
it looks good.
Yeah, something a lot of people don't see the setup a lot. I just figured I'd do something different for once. Why not?
Yeah. Looks everything is
get on
very smooth, very clear. You know, a lot of information too.
Yeah, it's much clearer on YouTube than over Zoom. Actually, it's crazy.
Yeah.
It's there's no delay there.
On your window, if you want to get a little more real estate, you can move, you know, like the minutes, the time, and the arrows on the top to, you know, like one more line up. See, yeah, go with your, I think you're going to need to use the mouse for that.
Right. Yeah. Oh, yeah. I'm not sure. The minutes. You mean down here? I guess I can't. You can't see
Go
it.
up on a no. Go up all the way to the top of the window. On the left now. Go where the arrow, the black arrow is.
Black arrow.
Now go down one line on the time there. You see,
right
you can
here?
the entire time thing.
Arrows. What is that?
Yes, on the next. No. On the little dot lines next to it. A little bit to the right.
Oh,
Another
right.
right.
Right here. Like
Yes,
this.
grab it and we put up next on the next.
Okay, I see what you're
Grab
saying.
it,
Okay, yeah. Okay, yeah. Interesting. I've never tried that. Yeah, see, I don't
and
even
like
need
do
all
the
this.
same thing now with the with,
drawing tools. Oh,
yeah.
okay, gotcha. Oh, okay, cool.
And now you got a
Yeah.
little more real estate. Look at that.
Yeah, cool. All right, Fabi, there we go. Yeah, see, sweet. There you go. Learn something. I figured out what you mean now. Yeah. So that makes sense. Yeah. Every little bit matters. Yeah, good game. Oh yeah, that looks better too. Yeah, cool. So now I can make this a little bit bigger. Yeah. Okay. Yeah. I see what you mean. Risk manager. A little bit more real estate. You can see the pair in the risk manager, and this actually going to be in the tool itself. You'll be able to see it a lot easier. All right, cool.
Well, one thing that I like also, because the tool, you give, like what pair you're looking at it.
Right.
Remember being asked
Yeah,
you
I
to
remember even saying that with the yeah, to put
the watermark on it. Now you have it on
watermark.
it too.
Yeah, it makes it easier to see at least what pair you're on. Actually added that in there because I was like, couldn't see it because it covers up. Yeah, just trying to playing with it, playing with it, trying to. Whoops! What did I do with that? Close it. I thought I closed my streaming software. Yeah. Yeah, I actually don't have everything open. Normally I've got other charts open, all like the dollar. I watch the dollar and I'll open the DXY, I'll open the S&P just so I can always watch those, and then I'll have my working charts. I want to see what equities are doing. I want to see what the dollar's doing almost all the time, just to explain that. And they're waiting to potentially close all. If I hadn't done that earlier, would have already hit target. Accidentally closed all earlier. Oops.
Pound dollar. Entering position. Short.
Okay. The bot's trading a rejecting evening star. Makes sense. I'm okay with it. I need to actually have that do something different. Trade center mass. Once it finds the candle pattern to trade the pullback, let it pull back a little bit before it enters, but still, yeah, that's probably going to be fine. I'm sure that'll end up lower. The bot's just taking a position based on a candlestick pattern. It's trading this rejection type of pattern here. It recognized that as a rejection. It'll probably scalp out $1. Uh-oh, what happened? Heck. Something happened. Something's moving. What changed?
I think it's the CAD.
CAD's still okay. Something changed. Got some volume somewhere.
Nothing.
Maybe the 1145 candle. That's probably good. It's negative. Euro yen in the Dow. Okay. Euro yen in the Dow. So I'm not far off. I have a lot of room, obviously. I'm just trying to just mess around until I get a couple more dollars. I've got something out of it. Trying to get a little bit more. Another $10. Why not? Because there's nothing else to do, really. Whoops. That'll put me at an even 0.25%. If I can get to 65. I need $64, really. Would put me at an even 0.25%. And then that'll be target for the day. And we'll sit here and play with it. But progressively reducing the risk as I hit my targets. Hit 0.1%, try it again, start reducing the risk, try a little bit more, start reducing the risk, start knocking it down. I may, depends on what happens here. Depends on what's going to go and what's not. Coming back already.
Yeah, the market today really sucks. Really.
Yeah, it's terrible. God. It's honestly terrible. Yeah. Yeah. Everything's, back in the range. Might take the stop on that on the Dow. Nasdaq's holding. It's looking for that to hold the top of the range. And since the S&P and the Nasdaq are possibly holding, I might let that breathe a little bit. That stop's a little tight there. I've got plenty of room on it. It's not going to kill me. I'll give it room to breathe. If it's something that needs to take the stop on, I'll take it. But because I've got so much room and I'm so far ahead already, the worst thing that happens is I give some of it back, and it's so low risk anyway, it's not going to make much of a difference. Sorry guys, voice is riggedy wrecked today. Bitcoin, we had a really good short on that earlier. Probably could have held that. Had it short from right around where the hash was and took profit on it. It went down and took profit, and probably could have stayed in that. That's probably going to be a short. Watching this Euro CAD, it's not turning around yet. Man, capitulated. A little bit more. Need one green candle here. I already had a couple red ones in a row. Back to a likely rejection point. Need one green candle in equities. And get out of here. Put the money in the bag, lady. Nobody gets hurt. Put the money in the bag. Kiwi dollar is a potential. It's tempting. Something like that. You could, tempting to take that just for a scalp long. Again, micro lot isn't going to hurt anything. 3 micros might be enough to push it into profit. And worst thing that happens is I'll lose $5. It's one of those things. I'm going to try to stack it in and make $5 more times than I'll lose $5 for the rest of the day. It sounds like such a small dollar amount, but on this size account, it's reasonable. I'm trading low risk for this size account. Could be doing more, but that's not the point. Come on up. That little bit, a little bit might be enough. Might be enough. Looking for things that are going to be a likely bounce. Staying active on it. Kind of scalping, really. Not really scalping, but kind of, in theory. I'm looking for bigger moves. I'm taking things that have a probability of making a bigger move. But, I'm not taking heavy lot sizes for 1 pip. Different kind of scalp. Come on. Hold that hash. If that doesn't hold the hash, then we'll be looking higher. I'm gonna watch it.
Yeah, I don't like to buy things on the high, but holding here to don't get on the area.
Yeah, it looks like it might run up. God, stupid dollar. Just back down. I'm gonna wait. There's that supply level just a hair higher. Yeah, I'm gonna wait and see. Something's gonna go. Something will eventually. You can't get it all wrong. I guess you can, but not likely. Distributing risk like this, you got to get greater than 51% right if you think about it in order to make a gain. Gold about to fly back up, maybe. We'll see. I want gold to go higher so I can short it. I wish I would have held that oil. What a move on that. That's ridiculous. It's not a long now though. Could have taken it from the bottom of the range. Maybe long gold. I wish I would have sold it higher, honestly. Man, maybe a little bit more. It's a messy market. Silver looks like, normally I would look at this on silver and just buy it. It's just, it's not, don't have a tight stop on something like that. Either going to run up or down. Terrible fills on this, by the way. So silver's not really going to be the best spread. But where it is, my guess is that we're going to close higher than equilibrium for the day. See. Take a stop if we need to. And start slowing down. I don't want to add too much exposure here. Taking things only where they make sense. Some are going to be right, some are going to be wrong. Again, just trying to get a couple bucks. Use my available margin to do it. Just, fine. Well, these still look good. See, that kind of price action looks like that's going to be a short on Kiwi Yen. Just rejecting like that. Looks like it's going to roll over and put in a red candle. Just, those kind of things. I just don't want to take it. Swiss, that looks like a long. Everything looks different. Just gonna hover around break even here for a while, probably. Then I'll look at it later and something will go. The bot did. I think NASDAQ did something. Euro yen, a little bit higher on that. That's going to be a good short though. Just try it again higher. Whatever. Hit it there. Put a pending order up there on the hash for Euro yen. If it makes it up there, not going to buy it trying to get it, but if it makes it up there, I'll try for a reverse. I'm sure it'll reject and reverse at least temporarily right there. Getting there on Euro CAD actually. Is it going to run through there? I don't know. Didn't get stopped out yet. No, nothing's changed. Guess not on EuroCAD. Good game. So we're cutting through the hash. Still not going to buy it, but possibility that goes higher, but it's not a long. It's no longs past that level. There was a pretty good chance that rejected. Maybe not. Still might, but maybe not. So leaving that alone. What is that? Aussie dollar. Is that a long? Probably. Really still looks okay. Probably should be watching the strength tool, to be honest. See what direction things are traveling. Could have it open. Yeah, so this is where I'll probably let it sit for a minute and wait. Let things play out. Let something move first. I don't want to keep taking exposure in the same range where, market's not really moving much. Take things at levels that make sense, but I don't want to concentrate too much in one place before something actually happens. Right now, moving, but we still got the end of the day push potential. Come on, Dow. There we go, baby. Come on. That's the candle we need right there. Silver to come back. Silver might hold the center. How much time's left? There's your close right there, probably. Here in 2 minutes. Yeah. Gold. Probably just gonna bounce. I want to be short gold. Would play the counter move until it goes higher. Sketchy. It's not really a good long. I'm put a pending order there just in case it hits there and see if it bounces just enough. If we get one candle back up, it might be enough to go into the green. Equities coming back up already. And this is the crazy thing, is going into the end of the day volume, this whole thing could just take off. It could just run all the way up. That's what happened yesterday. It did nothing. It was down here screwing around all the way at the bottom and then just took off right at the end of the day. Gone. And stayed up all night. It was way down on the low and then took off. Same kind of crap. Just screwing around, same price action, whipsaw. And the volume at the end of the day just ran it all the way up. Fine. Watch gold for a minute. Hold on a second. More coffee. I need to plug that other computer in. Get my other monitor up. Got my Linux box. I moved everything in the office. Need to get that other computer. I moved it so I had more room behind me. So I need to get that other computer plugged in and do some testing. Ooh, here we go on gold. Right before that candle open. Come on, wick back up. Wick back up and close. And rip it back the other way. I want to be short gold, to be honest, just not from here. I'm not going to sell it here. I'd rather be short from much, much higher. Just taking a risk on a bounce, and I'm going to take a stop if it doesn't go. If I give back 20 bucks, then whatever. Get it back, reposition. Come on, wick back up and hold that center. Go break that high. Come on, gold. Wish that would have closed a little stronger. Not terrible. I wish it would have closed a little better. Absolute mess of a market today. Just price action wise is garbage. EuroCAD actually made a decent move. There we go. Come on back. Oil's still up. Dow coming down. Yeah, that's going to be a menace. Getting a red candle on the equities market. Gold might hold though. Yeah. Figured that was going to happen. Screwing around. Not going to add any more risk here until I can figure out what's going to happen. If I end up giving it back, end up giving it back. I also know that if I hold it, I can easily trade out of it later. The market's just not in a good place. And I'm like, this is extremely risky, like trying to trade in this to begin with. But that's why I'm doing it lower risk. Got plenty of room. I want stuff to do something, go somewhere and put in a high or a low or something. Give me something easier to trade. Just trying to trade bounces at this point. Just back and forth, just trying to trade the bounce.
Hey, BB.
Annoying. Hey, what's up? Is that Diogo? Hey, what's up, man?
Yeah.
Yeah, I thought I was you. What's going on, man? How you doing?
Yeah, I'm at work.
Cool.
But I just decided to hop in through the phone.
Yeah,
And
what's up,
I was kind of looking through the charts today and tried to do both things, try to work and try to look at the charts, because today I'm working at home. So
yeah,
man, Euro USD is crazy today, like all over the place.
Yeah, the dollar, everything's all over the place, but yeah, especially that one, especially the dollar. Yeah, it's gonna run counter to the dollar.
Crazy.
Everything's just back and forth, and this is honestly a
like
pretty bad
consolidation,
day,
no move, no trend.
Yeah, exactly, no trend, which may be tomorrow. Just since it's so late in the day, tomorrow may be the trending day. Yeah, Diogo's still got. I think he's got the group record for the best trade still. It was like it's ridiculous. Run, man. Yeah, no, seriously, that run you had. I forget. It was like Euro Kiwi.
The Euro and ZD.
Yeah. I'll never. I'm serious. I remember. It was a long time ago too. But yeah, he had a crazy swing trade on that. It was like ridiculous. Like just kept adding to it. It was perfect. He just kept running it. Adding to it. It was like 700 something pips. Killed it. That was a great trade. He is the swing trade champion. But yeah, no. Anyway, yeah. How you doing, man? Doing all right? Working, you said?
Yeah, I'm working. Just I'm an IT recruiter, so it's easy. I can be on like the computer looking through CVs and all of that, and I can look at the charts sometimes. But yeah, because I don't have any meetings today, I decided to join and see how things are going.
Yeah. No, I get it, man. No, believe me, I know how that goes. Yeah, no, it's good. Yeah, good to hear from you, man. You're still here doing things. Market's been much better lately, is what it is. The market has definitely been better. There was a long stretch about a year ago where it was bad. There was very low volatility. It was like winter, man. It was terrible, honestly, for a long time. But yeah, market's definitely been better. Yeah, it's a market order, Alan.
I have a sell on Euro USD, like the only one that didn't got either break even or stop loss.
Yeah,
it's one of the magic lines that appear when you turn on your zones, like right at the top. Yeah, like that second.
Yeah. So, yeah.
Oh, you don't have all of them, but if you turn on the I think it's like
projections. Range projection lines. Yeah, this is probably going to be fine. I want to be. Yeah, I'd rather be short on that because of where it is. It broke the high. I tried to short this a couple times, but yeah, today was just messy. It's been both directions today. I don't know what's going on with the dollar. Yeah, it's a weird one today. The whole market is just not great, honestly, today. Surprised it survived as well as we did today. Yeah, the whole market's garbage. But tomorrow, the thing is, tomorrow, coming out of a consolidation day, tomorrow will probably be a good run. We want to get in the direction tomorrow. Whatever the direction is going to be, we want to be in it. There's a good chance that there's going to be a trending day tomorrow. One way or the other, it could be both ways, but there's a good chance that there'll be a good trend tomorrow. It just wasn't today. We kind of had to finish the day yesterday with consolidation, and today was the same. The Euro Aussie was good over the last couple of days, but yeah, the majority of the market has been nothing today. It's just anybody who just didn't get
I have less interviews tomorrow, so I will try to pay attention to the charts for sure. I'm gonna try to do both things now. I think it's time for me to focus more on Forex again. It's been a long time and I miss it.
Yeah. It's market's definitely been better lately. It's good to try to do both if you can, but you got to work, man. You got to keep. I get it, man. Yeah, I get it. Trust me, you got to keep that coming in. That's the best thing to do. Always advise, do both if you can. Just put it, an hour or so a day, and do both if you can. But no, it's good to hear from you, man, for sure. Yeah, Diogo's been around
I've seen what you've been doing with the controllers. That's sick, man. I have a PlayStation 3 controller. I don't know if you already tried on that one, but I have to try it, and I will tell you something.
Yeah. Test it on there, and we'll see. Yeah, let me know test it. It should work. It should work with a PlayStation controller. But I'm I haven't tested it, and I'm curious to know. The analog sticks, programming wise, the analog sticks can be hard to get right. So give it a shot.
Yeah, no, it's good to hear from you. Sure.
Diogo,
I've seen what you've been doing with the controllers. I have a PlayStation. We're having some delay. Is it Fabi?
I don't know. Yeah, I was just looking to see, trying to figure. Yeah, Fabi's probably got a delay. No, it's all good. Sorry, I just muted you. Sorry, Fabi, you can unmute. But yeah, no.
No, man, is that how my voice sounds on the audio from you guys?
Mine too. It's
Man,
funny.
that's right.
I always thought that you don't sound anything like you think you do when you're recording. It's so funny.
Exactly, man.
Yeah, it's like seeing yourself in pictures. You know, you feel like you look different than you do in the pictures. Yeah, it's the same thing. But yeah, no. Yeah, it's fun. It's actually pretty cool to trade with the controller. It's actually useful. It works great. It's really good. You can do things quickly. Like you can set your risk quickly, and it's actually extremely useful. I thought I wasn't sure at first when I thought about it. I was like, you know what? I'm just going to finish that project that I started working on before. And I was just like, whatever. I'll just do it. You know, and again, I'm only like about 3 weeks into development now, but it's going to be a lot more than this. It's going to be cool. Ooh, come on, gold. Good bounce on gold there. You know, that was the scalp level right there. Right off equilibrium. So, but yeah, give it a shot. Try it with the PlayStation 3 controller. And it's not too hard to set up. You just need to know what your IP address is. Because it goes over the network. So you can control it from anywhere, really. And that's going to be some of the interesting part that's coming. But yeah, there's some cool stuff coming. Very, very cool stuff coming with this. And it'll be a little bit more development, but it won't be too long. It's already being developed. Not even going to talk about it. I'm just going to unveil it, and people's jaws are going to hit the floor when they see what's coming. I promise. They will talk about this far and wide. It will be viral when they see what I'm about to drop on the market. Yeah, it's going to be great. Actually, it's going to be really fun. It's going to be I'm going to make trading really fun. It's going to be sweet. But yeah, really good stuff coming. Yeah, test it out on PS3. I haven't tried PS3 yet. I'm going to borrow I need to borrow a Xbox controller, like an Xbox One controller. It should work, but I want to try it on that and like a Nintendo Switch. It should work on any gamepad. Most gamepads that have like 2 analog sticks and just shoulder buttons and the normal style controller, normal console type of controller, it should work. As long as you can connect it to your computer. You know, as long as your PC has drivers for it and will recognize it should work. It's set up for
I had to download something
style.
for it to recognize the controller because I play with it on the computer. I don't use the PlayStation 3 anymore. Obviously.
If you use it,
But
if it's already connected to your computer,
with that it should be
work.
like all good.
Yeah, it should just work. Yeah, try it.
I already use it to play games, so I don't see why it shouldn't
should
work.
just work. I'm curious. It should be. Any of the DualShock PS3, PS4, PS5 controllers should work out of the box. Xbox, Xbox One, probably Xbox 360. If you can connect, if it's Bluetooth or USB, if you can connect it to the computer, it should work out of the box. All Xbox controllers that are compatible with PC. A PlayStation 3, 4, and 5 at least. I want to try 2. I haven't. It should work. I don't know. As long as there's a way to connect it to your computer, it should work. Then Nintendo Switch and any kind of USB. Like I have another off-brand, some G-Pad, Matricom G-Pad I got on Amazon like a couple years ago. It works perfectly. So
I still have the PlayStation 2 controllers, but I don't have the adapter because for sure.
Yeah,
you need some
has
adapter
to be an adapter to connect
computer.
it to the computer, and I know some need an adapter. I'm in testing mode right now, basically trying to make sure that it all works, and seems to be working pretty well. I just haven't tested it on all the controller types, but it should work. And that was actually difficult to get the code right to make it like cross-platform compatible with all gamepad style, that generic gamepad with 2 analog sticks, a D-pad, 4 action buttons, north, south, east, and west buttons, and then 2 shoulder buttons, 2 trigger buttons, a select and a start. Most controllers have the same type of control scheme now, at least most consoles. So that's that was actually difficult to map all the buttons for that. Because the way that a PlayStation sends its analog sticks values, the axis values are different than how Xbox does it, and it's different than how Nintendo Switch does it, and there's no standardization, and it's a pain in the butt to program it. So that was the thing. I was just kind of like flying blind. I was like, whatever. So I actually had to go out and buy a PS5 controller to make sure that it was compatible. And then there's some other stuff coming too. Like you can change the light color, like on the controller itself. Like when you're in a short, the light will change orange. When you're in a long, the light will change blue on your controller. You can do all that stuff too. Works best with the PS4, like DualShock controllers. You can make it rumble when you get the explosion to when you change your risk. Rumble, bzz, you have the access to the haptic feedback. Oh, going into the green here. So yeah, it's going to be cool. It's going to be really good. But the stuff that's coming is going to be mind-boggling. You're going to turn on the stream one day and you're going to see 3D candles that look like a video game with fire and lasers and real-time data, but 3D candles, 3D charts. It's never been done before. And I'm not going to go into any more of it past that. But you're going to see trading that looks like a 3D modern video game with 3D candles and charts and crazy stuff going on. Fire, lasers at support levels, and missiles that fly in and close out your positions. And people aren't ready for what's coming, I'm telling you.
Nice.
Trust me. It's more than that. But very soon. Within a few
And
weeks.
have you been using the bot, BB?
Yeah. I'm actually got it running right now. I've been, kind of testing this stuff, but yeah, the bot actually has done well over the last couple of days. I ran it yesterday and I'm running it on GU and NASDAQ right now. There hasn't been enough movement today to go out and take positions. Like it hasn't run out toward the range is far enough to really do much today. I think it took something on the NASDAQ a few minutes ago. It was like a candle pattern. I think it took it long. Yeah. It was a candle pattern trade. It's in the green, but yeah, the bot's good. Just, run it low risk. We've had some really brutal trending days lately, and that can be sketchy sometimes depending on the how much risk you got running on it. So, but yeah, no, it's still running. I know a lot of people are running. It's just it gets sketchy trying to stay within risk parameters. I know some people have also had some really big returns with it by running it on a personal account and just letting it go. I've not without getting into it, I've seen some people had some like serious returns with it, but by allowing it to breathe a little bit and take a little more drawdown, giving it like 10-15% drawdown. Now I don't run it that higher risk. It's designed to run low risk, but I've seen some people get some crazy gains, like 60% in a month. And, by letting it run, on like, I thought somebody was running on like a $7,000 or $8,000 account and did like 61% in a month. It's crazy, like crazy gain, so, but I think it took like a 20% drawdown, but that I don't run it that high a risk. It's designed to be run low risk. It's designed to try to stay under a 5% drawdown, but you can give it more risk. The problem is the markets have been running hard lately. The markets have just been crazy, and you got to run fewer charts, and it's probably killing it today, probably murdering in this choppy environment like this. This whipsaw is exactly what it wants. It's probably knocking stuff out all over the place today. I'm not running it on the entire market. I'm only running it on 2 pairs, but I don't think there's been enough move. Like yesterday, it had some really good trades on the NASDAQ. Like right here, this trade right here was a bot trade. It caught the high of the day right here and ran it all the way down and closed out. That was the bot that did that. But yeah, so
I don't know if I'm just seeing the S&P 500 index.
Yeah. Sorry, on YouTube.
I don't know if you are sharing the.
Yeah, Diogo, how you doing, buddy?
Hey, Fabio, I'm doing well, and you?
I'm doing great. Happy New Year's, man. Congratulations for the new job.
Thank you so much. Yeah, I've been in this job for about a year. It's like it's not perfect, no job is perfect, but there are far worse jobs for sure. So yeah, maybe I will leave the company and change for another that gives me more remote time. But yeah, everything is going well, gladly.
Yeah, BB is back on YouTube with the new tools and everything. So if you want to see what he's talking about, just go to YouTube.
Oh, okay. Yeah.
And you're gonna see him in glasses, buddy.
Man, I've seen I've seen it, you know. As soon as you put a video, it appears to me. So I've already seen that you are
get the notification
streaming again. But I've never joined it.
Yeah, man.
Because
come on,
I
whenever
couldn't.
you want, man.
Yeah.
You're all, you're
right
always
here. I
welcome
just
man.
first
For life,
you are
bro. Come on,
the
man.
first. I open YouTube and it's you.
Yeah, man.
I open YouTube and... Oh my god, my voice, I cannot see.
So, man, nobody cares. But yeah, yeah, come on.
I didn't know I was on
man.
YouTube.
We'll be here. We'll be here. Yeah, it's good to hear from you for sure, man. Yeah, we're just kind of chilling right now, hanging out, trying to trade on into the end of the day here, trying to find something low risk to get into. EuroCAD still holding. It's back down below the hash mark. Let me go back to here. CAD. I need to watch this one. I'm curious if this is going to run the pattern, if it's going to run the shark fin or not. There's a potentially a monster trade here, short, even though it doesn't look like it on EuroCAD, like a 100 plus pips. We'll see. It's probably close. It may be tomorrow that it ends up lower, but there's a reasonable chance that stops there. Just chilling, trying to hit a couple more dollars. Just need a little bit more.
Oil is helping because it's the high of the day on the oil.
Yeah.
So let's see if we have a little more pump on the oil.
Hopefully it keeps going. Oil's got a little bit more room that it could go. It looks like it's going to keep going. It's crazy because I had a really good long on oil yesterday, and again today I kind of wish I would have kept it. But yeah, good game on oil. I closed it out as a basket, but it's on the way up. To watching the S&P, I'm trying to make sure that nothing crazy happens because I do have some S&P and Dow trades on that could be a problem if it slams back down. Got to watch it and be ready to hedge it. I think it's going to be all right. What is that? Euro Aussie's coming back. I do think euro dollar is going to end up being a short. I'm waiting for it to come down. I think it's got a lot of room to come down at some point, hopefully this week. It didn't really do much yesterday. Anyway. Are there instructions? Steve, I just posted the update. This isn't the bot. This is there's two separate ones, and it's actually being rolled into one. I'm going to try to work on that this weekend. There's two separate EAs, one for the risk manager that the risk manager controls, and then there's another one for the bot, but it's all going to be one thing. It's all like in the options for the trade manager. Like there's going to be settings for the bot. I can go to configure bot, and you'll be able to configure the EA from the mobile app. You're going to have access to all the settings and be able to configure it live. Sorry, the music's loud. Be able to change the settings. I actually turn the music down in the menus. Turn the music volume down. But you'll be able to configure the bot from I'm calling it a risk manager right now. It's going to be more than that. It's from the project 2023. It's going to be much more than just a remote or just a bot. It's going to be everything all in one thing. It's going to be a very powerful piece of software, all in one a trade manager. I don't even know what to even call it at this point because it's multiple things, but you'll be able to configure the bot too from the mobile app, from a graphical user interface. So it's going to make it much easier to be able to configure the bot for just anyone who you don't have to even open the options. for MetaTrader. You'll be able to configure it all from one place. That's coming. It's within the next week or two. That's the next part of it that I'm going to work on. So you'll be able to configure the bot from the software live in real time. Like you have drop down menus on strategies, and you want to flip it, you just bloop, change it right on the mobile app instantly, and it'll push the configuration over the network to all of your MetaTraders that you can be running it on multiple accounts. This is going to be a multiple account manager. Like if you have 4 or 5 different funded accounts with different prop firms, you'll be able to manage each one from a central location. There's going to be a lot more to it. Kiwi dollar's going. There we go. Man, I saw some green for a minute there. But yeah, you'll be able to manage the bot from it. So right now it's 2 separate EAs. I posted it in group updates. So there's the Trade Commander EA that goes with the app. The Windows version is built right now for 32-bit Windows. There's an Android version in there too. But the Android version needs to be updated because I've added a bunch of stuff to it since I put in the Android build in Discord. So it's a mobile app. It's going to be for iPhone and iPad too. That's the last thing that's going to happen because it has to be finished before it's put on the App Store. And once it's done, it'll be built for the App Store too. It'll be deployed for all platforms. It'll be Windows, Mac, Linux, and then Android and iPhone. And it's really cool running it from an Android box on the TV. Like on a 65-inch TV downstairs, I can control my MetaTrader with a game controller and a $20 Android box that's connected to a TV or a monitor or something. It's got an HDMI out, 2 gigs of RAM, Bluetooth, Wi-Fi. So those little $20 Android boxes. That is awesome for something like this. And the rest of it that's coming is going to be mind-blowing. You won't even need to open MetaTrader. It will communicate through your MetaTrader to manage your trades, but it's going to be 3D candles with lasers and explosions and multiplayer, deathmatch, trading against other people. Be ready to see something that doesn't exist. With live accounts, leaderboards, team deathmatch trading in 3D candles with explosions and fire and some other stuff I'm not going to get into yet. It's going to be great. But then also be the bot too. You can be able to configure it's a 19 strategy trading bot all in one thing. Risk manager, remote controller for MetaTrader, C-Trader's coming. I got to build out the infrastructure first. So got to build out the back end networking part of it first, and then a lot of things will start happening very quickly. Not going to want to miss this, I'm telling you. You're going to want to pay very close attention to what's going on around here over the next month or two. Man, oil. In there, that pumped and broke the high. Oh, I had a pending order up there too, and my basket closed out, so I forgot to put it back up. Man, that's crazy. Man. What settings for supply and demand? Pretty much the default settings. Leave the God, what do I call it? Where it automatically flips your positions. I would leave that on. I normally run it because it's multi-time frame. It's a multi-time frame automated supply and demand. I'll run it with the 1 hour and the 15 minute most of the time. If you want to spread it out a little bit, it'll take fewer trades, but be better, slower, but more reliable. You could run like a 4 hour and a 15-minute. You can run two time frames. I think you run up to 3 time frames. You can run up to 3 time frames in confluence. So it means it would have to be in a 4-hour supply level, a 1-hour supply level, and like a 5-minute supply level all at the same time, which is like mega confirmation, multi-time frame supply and demand automated. That you can do that. I've had really good results running it on like a 4-hour and a 15-minute, or a 1 hour and a 15-minute, and just let it take positions and just try to hit targets. It'll take profits in between, and it'll flip positions and bounce. It'll bounce between supply and demand levels automatically. But yeah, it gets good entries. Gets really good entries that way. That's again something I need to test more. It's slow to test in the tester is the problem, because it has to draw the supply and all. It's hard to draw all of those supply and demand levels and still run it. It just makes the tester super slow. So it's kind of a pain in the butt to test it. But yeah, it's fully automated supply and demand. Bunch of stuff. There's a bunch of different strategies, a lot of range strategies, hedging strategies, grid strategies, the good ones. Everything that works is in it. Asian range strategy, automated, statistical range, automated, supply and demand. Then there's like signal reversion, which you can have all kind of different entry signals. If you want like a moving average cross, or want to look at the slope of moving averages, it can read the data points and find peaks and valleys in things like RSI or moving averages. I don't really use that much, but divergences and things like that. It can it can take entries off of many different things and then trade the reversion money management strategy with all that. It's a very powerful tool. It's just a lot. Like there's so much to it. It's like, it's hard to know where to start, and I get that. And I'm working on, that's part of what I'm working on, is having it automatically decide what strategy it needs to run at what times, but it's just going to be a lot of testing. I've already started that. It's already in there. The the config file switching, remember from a couple months ago, we were starting that. Like the framework and the back end is there. So it's just going to be some testing from here. It's all coming together over time. It's all being worked into one thing. And there's not going to be anything like this. Nothing. Not even close. It's not even close. Nothing like this that's coming. Yeah, so you might want to stick around and pay attention. Pay attention over the next couple months. I'm not even going to... honestly, like, some of it is like such of a big idea that I'm just not even going to even say it. I'm just going to do it. I'm going to be about it and not talk about it. I'm going to do it and just do it. But it's being built right now. There's some very cool stuff being built right now. AI, full machine learning implementations, training AI agents to trade based on historical OHLC candle data. Going to be an AI Jarvis assistant specifically trained on trading, and millions of lines of code on GitHub. Not even going to get into it. Like, people have no idea what's about to happen. Seriously. So, like, it's going to be great coming up. It'll slowly start to take shape over the next month or two, really. And all of a sudden, there'll be some unveilings that are going to be like, whoa. Yeah. So that's coming. It's going to be some really good stuff coming. I'm super stoked. This is going to be a great year, honestly. This is going to be a huge year, actually. Because of what's already built. Like, what's already done. Like, nobody even knows about it. Like, what's already built, nobody even knows. I don't advertise, but I haven't done that yet. but it's coming. What is this? In there, whatever. Scale into that until it goes close. Couple more dollars. It's both. I do have the bot running. I've only got it running on 2 pairs right now. I've got it running on the NASDAQ and pound dollar. The problem is the market's been so choppy today, it hasn't run out far enough to take any mean reversion strategies. I'm running a mean reversion, like a range expansion strategy, and the markets haven't moved far enough to really do much today. It's taken a couple NASDAQ trades today. I think it's taken 2 NASDAQ trades. But it hasn't really run. I need to run it on more pairs is what I need to do. And that's the answer. You just run it on more charts. I'm only running it on 2 because I'm trading manually. I'm testing all this stuff right now, but I think I'm going to start another account and just let the bot trade it and just run it live on YouTube. I think that's what I'm going to do. Oh, we're in the green. Come on. Nothing stopped out in the green. Need a couple more dollars. What's my target? What I need. Let me change my target real quick. Got it to 10. Whatever, 10's fine. Yeah, 10 bucks is fine for now. I'll try to get a little bit more out of it if I hit target. So if I hit $10, the bot will automatically close it. Or I could do it manually, with the close all, either this chart or all trades. But I'll wait and let it try to hit. It's probably got plenty of room. There we go. Come on. Could close it all manually. And there's an option to do that. Like L2 are, left trigger, right trigger, and triangle brings up your close all trades dialog. I made it something, where you have to push 3 buttons so you don't accidentally do it. And it brings up a confirmation dialog. L2, R2, and square brings up your move all stops to break even. And, like if I hit, I'll do it now. It'll move the top one because the top one's in profit. So if I want to move all my stops to break even, just done. And every position that's in profit, it'll move it to break even. And then like L2, R2 circle brings up your partial close preset menu. So if I want to close 50% of my position, I roll it to there. I want to close 10% of my position, I roll it over here. And you can just do a quick partial close, or you could input a percentage. You can say, I want to close 17%. Not that you would really want to do that, but you can do it manually. But for the most part, the presets that are in there are going to be what you're going to be using anyway. Not going to do that. But because I want this position. But yeah, you can do pretty useful. Pretty much the things that are the most useful: close partial, close all, this chart or all trades, move all stops to break even. You can set your risk, the amount of risk per trade. Either in a dollar amount or percentage with custom inputs. But there's presets. $5, $10, $25, $50. 1/100th, 1/10th, or 1/4 of a percent. Or you could just set it for like 0.5% and just all you have to do is hit it and hit the button. So it works pretty well in that respect. Oh, we're getting there. Might hit target here. Need $10. I'll let Prophetess Prime take care of it. Yeah. Go, baby. A little bit more. Come on. CAD's coming. Looks good. There we go. Knocking them dead, baby. Knocking the positions out. All right.
Open exposure profit target reached.
I think it's the third time we've heard that today. Where am I? All right, so 59. Need a little bit more. Don't have to get more. Just try and whatever. Squeaking out just a little bit here and there. So what I'm going to do, if I were to continue trading, could quit for the day. But what I would do is progressively reduce the amount of risk that I'm taking, because what I don't want to do is give it all back. And that's a difficult thing to do sometimes, to have that discipline to not take a big swing at stuff, because there are some good positions right now. Honestly, now that, well, sorry guys, now that things have moved out a little bit, there's some good positions. But you know, who doesn't want a free $60? It's only $60, but at the same time, it's just short of 0.25% with almost no risk, zero. Now it took more time. You know, it's noon and I'm still sitting here, but we talk about this all the time. There's always a trade-off between risk and time. You can take more risk to get to your goal, or you can take more time to get to your goal. And I choose the latter. I want to take more time and less risk to get to the same goal. You know, if I could take more risk, easily take more risk on this account, but there's no reason to. Why? I can just make consistent gains and then whatever. You know, that's the goal. Just try to hit target and then move on to the next target. You know, I could do another $6 and hit exactly 0.25%. You know, maybe I'll keep looking, you know, see what else is there. But only taking the right trades at this point. There's Aussie CAD, I almost want to, just right there. There's a potential rejection right there. Gosh. So tempting to just, I know that it's likely to reject right there. I'm not going to yet, but just temporarily, there's a good chance that there's going to be a rejection there. I'm trying to take only the best possible things at this point. You know, I may put on one or two things and just let it go and eventually run $6 in a profit. Not that the $6 matters. It's just to continue trading, really. Could be done for the day. You know, if I was trading higher risk, I would just be done for the day, honestly. CAD, if that'll pop and break that high. I don't know if it's going to make it. If it does, maybe I'll check that out a little bit higher. So I want to progressively reduce the amount of risk that I'm taking. See, this Euro Swiss looks like that's going to probably reject at some point. It's a high of a range. Euro Yen, same thing. One of those things where what's it going to go break the high and I lose $5? It's much more likely that that comes down on a big higher high at some point. I would rather take it higher, so I'm going to wait. I'm going to wait and see if I can get a better entry. Some of these things, but you know, honestly, see like this. This looks like a short. Pound CAD, still a short. But I'm going to wait. Just if it gives me something I can't refuse on a higher high or something. Maybe we'll go back down to equities and gold, where the volume's likely to be. We're still got time. Got time until the end of the day push. Dollar CAD ended up going higher. Good game. We had that from way down on the low, way early this morning, way down here on the bottom. Would have been good to hold that. Looking back at it from early this morning in London, the plan for the day was a stronger dollar, and you know, kind of it was messy, but it ended up stronger. So that was good that we got that right. You know, not going to get all of it right, but that was important. We were positioned heavily on the for a stronger dollar. Gold bounce. See right there off the center. Perfect. Banger. Gold's famous for that anyway. You know, we just only make decisions. It's very specific levels for very specific reasons. And most of the time, you're going to make good decisions. It's about making consistently good decisions. You make good decisions more than you make bad decisions. And just mathematically, as long as you manage your risk, you'll be fine. Very likely that you end up in profit to some degree. Now, how much profit is the question? How much risk do you want to take? Your profit is always relative to the amount of risk that you're willing to take. So if you want to take more risk or more profit, you take more risk. If you want less risk, you accept less profit. You can accept a smaller profit, but you gain less risk, and it depends on what your goals are for your account. Are you trying to grow a small account? Or are you trying to hit, trying to pass a challenge where there's no time limit, where there's no deadline? Check the description. If you want to get funded the easy way, not going to spend time on that. Best firm in the industry. I will tell you if I change my mind, but as of right now, it's the truth. Check the description. It's not a commercial, but there is a better way, man. I'm telling you, than FTMO. There's a better way. Sorry, voice wrecked. No time limit. Much better risk parameters. No time limit. It's a no-brainer, honestly. All I'm gonna say. You think there's any stress in what I'm doing here? There's no stress here. I've already scaled this account. I've already scaled this up. Doubled my account. That's tempting. CAD Swiss. Man, see, I look at something like that, I'm probably going to bounce. But I'm also just trying to keep it chill here. Now that I don't want to go backwards. I had 2 whack days in a row. Ended up okay. Like yesterday, it was weird. It was whack. And then I woke up this morning to a $60 profit. Just weird. And that's almost too tempting right there. Too much. Pending order. Yeah, I don't want that. I'll take a small piece here. There, we'll say pop up there somewhere. At some point, probably go lower. Reduce my risk here. So maybe. A little more. Close that out. Couple bucks. I'm trying to scout this out. What is that? EuroCAD. Same thing. Even it out. Try to scalp out a couple dollars at a time as soon as it goes into profit. Close out. This is where you're kind of pushing it. Probably shouldn't be pushing it, but it's higher probability. Might get lucky too. See, this kind of thing is just probably going to put in a red candle. Would rather take it on a higher high. Probably should be watching for the volume though right now in equity. Oh my God, equities. Might wait for 2 p.m. before I actually, at 2 p.m. though, right before that 2 p.m. open, Wall Street time, Eastern Standard Time, that's when there will probably be some more volume coming in. I should have taken a smaller lot size on that. Whatever, I'll take the $5 L. Whatever, man. Crazy thing is it sizes the position based on the stop loss. So a tighter stop on that position, it's gonna be a bigger lot size. Probably should have given it room to breathe. Maybe. Hoping that was gonna reject, but maybe not. Next. Help it out. Give me a $2 or $3 in profit. May close it. That's probably fine. EuroCAD. Given what that's doing, that may be much better. I'd rather have it on that position actually. What is that? Euro Swiss is coming down. Such a messy day today. It's crap, honestly. Didn't really get lucky today. It's just good management, really. And just got some of it right, honestly. It could have been much worse than this in this kind of market environment. This was honestly not the best market environment to be trading. I could see how you could get really chewed up in a day like this. Even taking the same trades, like I can understand that. It's not really the best market environment, honestly. Not great. Chart, take a break from been run and gun all day. Take a break from it, but it's it's too much fun, man. Too much fun. Good testing this week. Kiwi yen, a little bit higher on that. Come on, CAD. Come on, Craig. Yeah. Whole bunch of stuff just changed there. Oh, yeah, there we go. That too right there. That's closing back inside the range on Euro Yen. It's closing back inside the range, just rejected on the high end. If that continues to close back inside the range, it's probably got a long way down. It's way up on a higher high. It's an easy call. Just let it, not want to do it too high a risk. Already got on more than I wanted to have on, exposure wise. But good possibilities here. A little bit more EuroCAD. Slow down a minute. Wait for things to get to levels. Set my auto close here. That's going to be a part of the risk manager too. I haven't put that in yet. Right now I'm using the bot, but I'm going to put that in. You'll be able to configure it, have an auto close and say, look, I'm going to close at 0.2%. And it'll just automatically do it for you. Whenever your open exposure hits that level, it'll be a part of the risk manager. Right now, we'll make it $5.
5 minutes.
It's on the 5-minute chart. That's why it said that. But that's going to be a part of the risk manager as well. To have it auto close at, it'll all be a part of the bot. The bot is going to integrate into all of this. So you'll be able to also use some of the functions of the bot, like the auto hedge and like the smart hedge, where it'll automatically hedge its way into positions and continually gain open exposure. That's something that the bot does that's very cool that people just aren't aware of. There's a very good auto hedging algorithm that takes a position, and then once it goes into profit, it hedges itself. And then it waits and takes another position. And once that goes into profit, it hedges itself, and it continually steps up like 1/100% over and over and over and over and over until you grow this positive equity as a buffer. And then once it can't go negative. Is once it captures equity, it continually steps itself up. And it's actually a really crazy thing mathematically. But it's got to get positions in profit too. So it's like it takes low risk positions, but instead of taking profit, it automatically hedges itself and just grows. You know, your open exposure grows, your positive equity. And then once you hit a target, once it hits a target, automatically it'll just close itself and then start to do it again. It starts building blocks at a time, building, 0.1%, then another 0.1%, another 0.1%. When you get to like 0.5%, it'll close out. That's a cool thing that it does. The smart hedge. Smart hedge is actually a very cool thing. It just, you run it in concert with other strategies. Like you might run a combination strategy. One strategy, its only goal is to gain positive equity to protect against drawdown, while you run a higher risk strategy that may take a little more drawdown, but has a much higher profit potential. So the goal of one strategy, you run two or three strategies in combination. The goal of one of them is to protect the other one. And it's not meant to take profit. Its goal is meant to gain positive equity to protect the higher risk strategy that might take a little more drawdown, but has a much higher profit potential. A risky strategy, you run an equity capture strategy to protect the high risk scalping strategy or something like that. That it does those kinds of things. It's not like a normal system. So we just haven't gotten into all of that yet. It has all those capabilities now, like already. It's already there. It's the combinations. It needs some, we got to test it and figure out what the better combinations are, but it has the capability to do it. That's what that set file that I posted is. It's the same concept. It uses one range expansion strategy to gain positive equity, and its only goal is to hedge positive equity on the outsides of the range. And then the other strategy is the candle pattern scalper inside of the range on a lower time frame. So the range expansion strategy, its only goal is to gather positive equity. So it protects against the scalping strategy that scalps inside the ranges. It's a very smart way to do it. But it's using multiple combinations of strategies. It's a cool thing. We'll try to demo some of that. We'll do that. Maybe we'll do that this week or next week. Come on, man. I'm trying to get in the green here. Close. Where are we? Euro CAD. Euro yen. What's in the green? Euro yen. Let's go down. Euro CAD's close. That's going to be a fine. That trade's fine. Euro CAD's in an epic short on the higher time frames. That's going to be a really good short eventually. Euro yen is fine. Let's go. Euro yen's just confirmed. Closed back inside the opening range. Looks good. It's got plenty of downside. It's on a higher high. Easy call. Just going to let that one go. All right. Let's let this go. Probably hit target. Hey, Omar, what's up, man? See him on YouTube. What's going on, man? Yeah, check his channel out, man. Check Omar out. Yeah, Omar's been around. He's been in the group for a long time. What's up, man? He's got some really good content on YouTube.
Omar is one of the OG.
Yeah, he's OG. He's got some really good YouTube content. Seriously, check him out.
Yeah, for sure. Follow him.
Yeah, he's funny. Some really funny stuff, actually. But yeah, coming up too, man. Omar's doing good. I've seen him on Instagram. He's really. I've seen Omar in a video with 27 million views. 27 million views. Yeah. Yeah, he's coming up, man. Yeah, check him out. OG. Come on. A little bit more. Still do that. I used to be able to do that. Just to go directly to right click and go to user's channel or whatever. Anyway. Come on, profits. Yeah, man, coming up.
Are you guys like boyfriend and girlfriend by chance?
Yikes. 173,000 subscribers. Check him out, man. OG of the group. Yeah. Big boys in here. Got all the OG. Oh my God.
Pound dollar. Entering position. Short.
Oh my God, that's loud as AF. I need to figure that out. How to turn that down.
That scared the shit out of me.
Sorry, guys. I know that's loud. I gotta figure out how to turn that down. I need to change that sound too. I started putting in the back end for the sounds to run sound effects, and I just never changed it. I've got to figure out how to turn that down a little bit without turning down the rest of it of YouTube. What would it say? Pound dollar or something? Short. Oh, okay, yeah, it's trading to. Yeah, it traded to roll over there. It just found an evening star rejection, a lower high rejection pattern is what it was right here. It recognized that, and it's just like, all right, I'm going to take this short for a scalp. And as soon as this goes into profit by about $1 or so, I think I've got it set to $1 right now. It'll just automatically just take itself out. Probably should be running these on lower time. Into the stream. Hold on, guys. Stream wrecked. What the heck happened? No, I'm assuming I'm still on. It said I just popped up a little thing and said the stream is slow. Something happened. Anybody still there on YouTube? Assuming it's still there. Popped up a yellow banner and it's just like
Yeah.
Okay. It says it's
Yeah. I have YouTube on and it's fine.
Okay. It's still on. Okay. Yeah, it just popped up this yellow thing. It was like telling me it's slow. Telling me the stream is slow all of a sudden. I don't know what happened there. Anyway. Work issue. Is it still on? Yeah, it says it's still on. Okay, yeah, it's back. I don't know. Okay, cool. Just making sure there. Anyway, just kind of messing around through the markets here. Trying to get a couple more dollars because there's really not much else to do but chill at this point and maybe make an extra $5. Why not? Trying to slowly get this back. A little bit, like $20 loss or something the other day. Had to chew that back. And got stopped out a bunch and then got it back. And then just going forward basically, slowly. Euro yen. Dollar CAD's coming back down probably. It's crazy. It's been all over the place. Gold made a lower high, weird price action there. I have a feeling that's going to go higher though, even on silver. Looks like it's going to go up. Yeah, so watch the pump into the end of the day, possibly. Indices possibly pumping up. Weird something going on. First it tells me there's 30 people on the stream, then it says 17, then it said 30, it said 12, now it says 17 again. Oh no, something's screwing around. Anywho, now it says 31. Weird. Tripping, bruh. I don't know. Yeah. Press. What's up, man? Anywho, see what else we can do and just see what's going on at this point of the day. Honestly, with this kind of crap price, today was rough. Honestly, price action wise, it wasn't a good day. Price action wise, at this point of the day, we're probably watching the stock market to see if it's going to move toward the end of the day. There's some interesting things happening, like EuroCAD, the structural move that's making is super interesting. Silver, I feel like, is going to be a long. This kind of price action looks like it's going to go back up. It's tempting. I'm going to leave it alone, but it's very tempting. I think at this point, waiting to see if we make a run up to break the high on like the S&P and the NASDAQ. That's probably going to happen. The entry's not good. Probably be a big candle coming. So we're just going to wait for a better entry. The dollar looks like it. Like where the dollar is right now, normally I'd be like, it's a long dollar, you know, like short euro dollar and stuff like that. But I don't like, it's just not good. If it were earlier in the day, I would say, yeah. Like the silver's very likely going to reject right here. It's so tempting. I know I'm going to get a bad fill. I'm going to get a crap fill. So I'm going to get it as low as possible. It's just, this kind of thing is likely to hold right there and put in a green candle. Tempting. Look at that. Look how bad that fill is. It's terrible. Yeah, just messing with it. It's ridiculous. Higher than that. Yeah, it's just instant crap fill there. I don't know why the spread's so bad on silver. It's a very highly liquid thing. Especially paper silver CFDs. Very highly liquid instrument. One of the biggest, actually. So it's weird that the spreads are so bad on that. Especially with a raw feed. That's the one thing I love about this firm. You get raw spreads. Like, look at the spread on Eurodollar. Look at the spreads. Find a better spread than that. You know, these raw spreads, very good. Very good execution. Your scalper, that's good for scalping. I don't really care that much, but it's obviously good to get good spreads. Euro yen's looking good. Stops to BE on that. Stops to break even. That looks great. Really. Probably should let that breathe, but man, that looks good. Hopefully that'll push a little bit lower. That's a great looking trade. Given the structure, the price action really on Euro Yen just being a big higher high like that, just squeezing up into the high. Oh man. Great for a short. It's going to spill. Very likely going to spill. Waiting to see what's going to happen there. If the euro comes down, the dollar's probably going to go up too. So we may be in a stronger dollar scenario. EuroCAD looks good. Price action looks great on EuroCAD. And the structural move that it's making. Pretty good chance that that ends up in profit. Need a few more bucks. Just because, just for the lulz. Slow down on the risk though. I'm not going to add any more risk yet unless something's just at a great spot. Maybe not. A little bit more. Yeah, marathon this week. Been at it all day today too. What is that? Okay. I want to be short on that really, but not from here. Looks like it's going to bounce. Go here. Got price action on EuroCAD. Looks great. Just need an hour to the downside. Just a couple candles. Couple candles. Euro yen. Perfect. Perfect trade. Perfect short. They could probably let that go and let this run all the way down into here tomorrow. Much, much lower. That's probably coming all the way back. Break the low somewhere right in there for sure. That's probably where that'll stop. Question is, does it pull back enough to stop it out at break even before it goes? And that's tempting too, pound CAD. pretty tight stop on something like that. Top of the range, it's got a lot of room to come down. You'd be looking for the bottom of the range. Not a good entry, but I know that it's likely to happen. So I'll just take it and not babysit it. If it runs up, take the stop. If I lose $4, then whatever. The name of the game at this point is, can I make $5 without getting wrecked? Take only the best opportunities. Just out of principle, I'm trying to hit that 0.25% on the money. Just because it was a good trading day. Given the conditions, did really well given the conditions, and honestly, it was not the best. Could have been better, but could have been much worse. There. Bitcoin will break the high. Probably sell that again, but higher. Silver still looks like it's going to bounce. Terrible fill on that though. Give it a minute. Hit target one more time. Trying to reduce the targets progressively. Trying to ease in. Trying to ease into target and reduce the risk on the way there. How you manage that is important. It's just an experience thing. There's no set rule. It's something once you get the feel for that. On Dossie, it's like it's going to bounce there. I want to be long there. What should still be long from yesterday. That was a great, we had that long yesterday. It was just a great run. So tempting to take that right off the top of the range there. Knowing there's probably a green candle coming. How much time's left? I want to see this candle pull back down a little bit, but not break the low. Break the low of that previous candle. I want it to not break the low. Probably, and there it goes. Yeah, I was going to say it's probably going to be a green candle. Oh, in the green. What happened? Aussie CAD, finally. Pound CAD's going. Aussie CAD. Beginning. Come on. How did I get into trading, man? That's a good question. A long story. I got into trading through Bitcoin, kind of, but developing trading bots. You know, the crazy thing is I was working on a trading bot before I ever took a trade. That's a true story. Before I ever even took a live trade, I started trading from day one, the first day, from building a trading bot. I was like, whoa, wait a minute. There's a public API to buy Bitcoin. Like, wait a minute, let me check this out. Like, I didn't know that, I mean, I figured it was a thing, but I thought it was something that that wasn't for the public. Like, you know, like financial institutions had programming APIs and stuff. I wasn't exposed to it. I was just, you know, I was a mobile app developer. And I was like, wait a minute, you mean I can, you know, I'd gotten into Bitcoin 2 times, but this time I needed someone to do some graphics work for a mobile app that I was building. And he was like, hey, if I'll do it for a big discount. I forget what it was. He was like, I'll do it for like 30% off if you pay me in Bitcoin. I was like, okay, cool. You know, I was like, whatever. It was going to be a couple $100. I was like, sure. You know, okay, how do I buy Bitcoin? You know, let me figure it out. How do I do that now? and, you know, going to the exchanges, I'm like, wait a minute, there's an API, a programming API. I can build a bot that does this for me. This was, you know, back in like 2016. And I was like, whoa, wait a minute. It was like Poloniex. And I was like, holy cow, wait a minute. Let me try this. Like, you know, so I started building, and Profit, by the way, started building a trading bot. I was like, let me look at this. And I started putting a piece of code together and testing it. And I got like a demo account. And I was like, wait a minute, like, this is cool. Like, let me check this out. And then I started buying, and I was also into crypto. I started buying Bitcoin and stuff. So my actual first experience with trading period was through developing a trading bot. I was like, let me try this and see, like, let me let a computer do it for me. And I started figuring out there's all of this other stuff, like there's technical indicators and all, you know, I'd never been exposed to it. I didn't know anybody that was a trader. You know, I was a programmer. I didn't know anybody who was trading. I was like, man, why did I not find this like 10 years ago? Like, holy cow. Like if I would have started then, man, you know, but that's kind of how I got into it, was through building a trading bot. It's the true story. I was building a trading bot before I ever took a trade. Now, then I started to learn to trade through that, and, you know, from buying Bitcoin, and got into the whole crypto thing, and then progressed and figured out, wait a minute, there's better ways to do this. You know, I need to expose myself to other markets and not just be crypto. I used to have like a crypto only trading channel, you know, and you know, kind of grew past it. I don't want to say I outgrew it, but I mean, you know, there's nothing wrong with crypto, but there's, I don't know how to explain. I feel like I have a better edge in other markets. I feel like trading more liquid and more controlled markets is the edge. I have a much better edge in currency market, and understanding the whole of how all of the markets work together is just super important, you know. And I moved beyond crypto. I didn't know what I was doing at first. You know, I was making a laser light show of trend lines. I thought that I spent so much time trying to figure out why trend lines, you know, are trend lines. Why does this work? Why does this make sense? And then took me a while. I finally figured out that it just doesn't make sense, really. That something got stopped out or pending order. Oh, okay, break even stop on something. But yeah. So my first trading experiences really were through crypto, but through building trading bots. From day one of trading, from the first day, I was building trading bots the entire time. That's how I started. I started learning trading from learning to program in the market. So I had a weird start, a very different start than most people, than almost anybody. I started learning how to trade from programming trading bots. And then I actually started trading, you know, alongside of it. It's just a weird, and then I, you know, went through the whole crypto thing and progressed past it, and figured out that there's just more to the market than crypto, obviously. But yeah, it's been a journey. It's been a long journey. You know, the crazy thing is there's still some people in the group that were like around in like very early 2017, like on YouTube, just still stuck the whole time, just stuck. You know, it's crazy, you know, and I'm very thankful for that. You know, that means a lot to me too. You know, there are some people that have been around since the old YouTube days, and I've, you know, we've all changed through there. I'll be the first one to tell you, I didn't know what the hell I was doing. I was the laser show master with trend lines. And I was trying to figure out what's the best combination of, you know, trying to look at it from a programmer's perspective. Why is this? And I got lucky, and I did a programming project privately for someone who was in the capital management industry, and I learned a lot from doing that. I learned how real traders trade on the institutional side, and it's not it's not moving averages in MACD and Fibonacci. It's not. They don't even look at that. They don't even look at that. You know, what a treasury analyst does for a bank, and I know now, and it's not what everybody thinks it is. And it's actually very simple and not public at the same time. It's crazy, actually. it seems simple once you know what it is, but it's not necessarily simple. And that's what we do. That's how the range tool came about, was learning that, what treasury analysts do for banks. And, I had an interesting programming project that I did, that they were wanting to get into crypto and provide liquidity in crypto. A whole bunch of investors from Australia, they wanted to get into liquidity provision. So I learned how a liquidity provision algorithm works, because they were like, okay, here's what this did. Here's how we do this. And I need you to program this, and I need you to make this. We need to see this and this. And it's not what everybody thinks it is. It's actually very simple, but also difficult at the same time if you don't understand it. So now I pass that kind of information along to the group. What we do, and looking at very specific levels and algorithmically, and why those things are important. When is it no longer statistically profitable to continue to provide liquidity in the other direction? That is extremely important. But yeah, that was how I got into trading. That was the thing that really kicked it off for me. Really, and it's crazy because I had taken a huge loss, a huge, devastating, almost life-changing loss, because I thought I knew what I was doing. This was years ago. Oh, here we go. Target. Tell me about it. Profit is prime.
Open exposure profit target reached.
Word. Need another $3. $3 more. Push it. Even less risk now. I'm going to progressively reduce the risk. Try to get that $3. But got that right. But anyway, I took a massive loss for me. It was for anyone. It was a big loss, unless you're just baller rich. But I took a huge loss and lost like a year's worth of Bitcoin gains. It was devastating. I gained a lot on the first bull run, and that first big bull run when Bitcoin went from $1,000 to 20,000. I had a huge gain during that, because I came in at the right time. I started buying into Bitcoin when it was like $1,000 back in late 2016, 2007, early 2017, when that started running up to 20K. I caught that whole run. I caught the whole thing on Bitcoin. And I made a massive gain off of that. And I lost almost all of it in like 4 hours, because I thought I was trying to get rich. I learned that lesson. That's why I try to pass this on to other people. Forget about trying to get rich. It's not a get rich quick scheme. You will get wrecked. Don't do it. I made that mistake. I took a huge loss. I don't even want to talk about it. I've talked about it many times, especially in the group. I took a big loss on dollar yen. I still have PTSD on dollar yen. But I didn't understand what I was doing. I was probably selling in at the bottom of the cycle. I didn't understand market cycles and statistical ranges, especially those types of things. I was trusting the combination of MACD and moving averages, and I thought I had the perfect combination, and this was saying sell, but it just kept going up and kept going up and kept going up. I was like, well, this thing's crossed and it's supposed to be a short. There's got confluence. My MACD's cross bearish on the 4 hour, and this is, moving average is low, and you sell it, and then it rips up again. It just kept going, and it just kept going and kept going and kept going, and I kept adding to it way too early. I was trying to add to it, and it was, if you look back at it now, I was concentrating all of my risk in one place, and it just kept going and kept going and kept going. Liquidation, boom, 27 grand, just like that in 4 hours, gone. And it was devastating. It pretty much killed me. Like, I was done. I had a little bit left, and I was just devastated, honestly. And I was like, all right. At first I was done. I was like, man, I'm done trading. That was horrible. I just lost a year's worth of Bitcoin gain in 4 hours. That actually happened. And I was like, well, wrecked. And it was terrible. The feeling I had was just horrific. It was terrible. honestly. And what that did to me psychologically, it forced me to go back to the drawing board and say, okay, what I'm doing obviously didn't work. That was not it. I was like, let me take a step back. I stopped actually trading live for a little bit. I was still active in the market and analyzing and, you know, messing around with demo accounts and stuff for a little bit. And I was like, all right, well, whatever. Let me take a step back. And that experience was the thing that pushed me through to the other side. And you know, I feel like we all have to take that wreckage. We have to get wrecked, you know, in order for you to stop touching the hot stove. Say, look, every time I do this, I get burned. And I didn't understand things like market cycles and that kind of stuff. And I started learning more advanced side of trading. Looking back at it now, I started going down the right path, and I just stopped messing with all the indicators and all that stuff. I was like, okay, what is it like? Trend lines, what, you know, stuff wasn't working. And I thought I knew enough about it. I thought, you know, you get to that point in trading sometimes where, especially early on, where you catch a couple good trades and you think you're Superman. You're like, you think you're, you know, Wolf of Wall Street all of a sudden. And everybody goes through that. I went through it too. And I was humbled, like in a big way. And that was the experience that pushed me through it. And I went back and got very fortunate. I was doing a programming project because I understood trading enough, and I was also a programmer. And I took a programming job, basically. Somebody contacted me and was like, hey, I want to do this thing. Can you do that? And I was like, sure. And yeah, I can do whatever. I'm willing to do whatever. And I learned so much from that it completely changed the way I was thinking. And then from that information that I gained, I developed my own strategy. And they're like, look, this is how we do things, and this is what we need done. And we need to skew orders out in the order book at X levels measured this way. And I was like, oh, okay. And then I took pieces of that the important parts of that information and turned it into the strategy that I still use today. It's changed very little other than looking at confluence at, like, you know, supply and demand levels. But yeah, that's how it happened. That's how I got into trading. And I was very fortunate to have done that programming project, because who knows what might have happened. I may have spent another year doing nothing, spinning the wheels. But it took me getting wrecked in order for me to change my thinking. That's just the honest truth. It took me getting smashed big time to the point where I was done. I was like, all right, I'm done. I wanted to quit. I was like, this sucks. And I never want to go through that again. And, you know, I haven't gone through that again. So came close one time. Almost did it again. Oh man, almost did it again one time. But I got out of it. But because I understood more about it. But yeah, you know, sometimes you gotta get nuked sometimes in order for you to put it into perspective for you, in order for you the wake up call to happen. Say, look, you know, I'm doing this the wrong way. I need to explore another way to do this. And that's the point of the conversation. Yeah, everybody gets wrecked. Believe me, I've been wrecked. Mega wrecked. I've blown accounts. I've been there multiple times. And you just learn. I mean, if you do it now, it's just like, you know, because you're taking risk, you know, because you're trying to just swing and hit it, but you learn to not do that, you know. And you definitely learn to not teach people to do that. You don't want to be responsible for, you know, to teach someone to take heavy risk. Not a good idea. I would rather say take low risk. And I would rather do that now. My mindset has changed a lot in the last couple of years. Still want to short this Euro CAD, even though it's a red candle. And this, again, part of my rules is I don't short red candles. Every once in a while I'll break the rule, but I look at this and I would rather miss it than sell this right now. You know, sell a red candle right here in this inflection point with these wicks right here, right where the buyers are. I'm not going to sell this right now, even though I look at this and I know that this is very likely going to go much lower. And, for the group side, you see what's playing out there. So, it's not something I normally wouldn't even, I would say, all right, I'll wait and I'll only sell green candles and I'll only buy red candles. It's the opposite of what most people do. And maybe you should try it. Maybe you should try that sometime. Set a rule and say, look, I'm only going to buy red candles and I'm only going to sell green candles. Now, not all of them, but I'm only going to buy if the candle's red. I'm only going to sell if the candle's green. See what happens. So euro dollar. Yeah. Been watching euro dollar. Been trying to get short on that for a while. I've been in and out of it short multiple times. Target for the day, but we'll see a couple little bit. We'll finish the day out. Toward this, a whole bunch of micro lots and 0.01s and 0.02s and 0.03s. Ended up hitting 0.25% on a 25K account. Trading mostly micro lots. Think about that for a second. Is there any stress involved with this today? No stress whatsoever. Euro dollar. I would rather catch it on the high of the range. I don't like I'm not going to sell it where it is right now. It's not terrible. It's not a bad short. Even right this second where it is, it's not a bad entry short. It's just not. It's in the middle of a range. I don't want to trade it from the middle of a range. At the end of the day, the important thing right now is what's going to happen with equities here, and that may push the dollar. It may push the dollar around. On the open of this next hourly candle that's about to hit, there's likely to be volume coming in. It's just very common. It's depends on how much risk you have on, whether you can exit or not. It's going to be up to you. Depends on how much risk you have on. What decision I would make personally would depend on how much risk I have on some euro dollar. If you're in the middle of the range, I think that this is going to come down a lot, over the next couple days. But I'd rather sell it higher if I can. If I can sell it at least from the top of the range, or if it breaks the high, I'm looking to sell the high of the day every day. Right now, it's kind of right in the middle of a range. Like if you look at it this way, it's right in the smack in the middle of a range. So kind of wait and see what's going to happen on the dollar. Come back to that. We actually need to watch this toward the end of the day. See what's going on here. Super messy day. It's ridiculous, actually. Looking at the price action of the S&P, it's terrible. Terrible. Ridiculous. It's going higher, though. The S&P is probably going to make a run. It's going. I figured that was coming. Wait for the open, too, of this next candle. If you really, really wanted to be aggressive, take a very low-risk long in the equities market. It's just not a good entry right now, but be ready for it. Be ready to wait. If there's going to be a pullback, it might be a long. And gold probably going to go up too. Bounced off the center twice. Yeah. It's not a good entry. Donks. But look at Buckhorn. All right, we got a broken high on Bitcoin. Exceeded the range. Pretty easy call there. Easy call. It's a short ski. Riggedy. Day. Big Bitcoin short in supply after breaking the high after that crazy run up. Exceeded the daily range for the day. What would statistically be your high of the day is now past that in supply on higher time frames. Let's see if it pulls back. Look for a pullback. Go. Let's go. Perfect. Yeah, I'm cool with that. And just going to let that ride. Not going to add any more risk here, but yeah, if we get a pullback in equities, we'll watch that. What do I need? $3. I don't even want to set. I'm going to reset my target. I'll come in. I'll set it at $3. I'll come in here in the morning, get in a good trade, and it'll close at $3, and I'll be mad about it. I do that all the time. We'll reset to 25.
5 minutes.
Sorry, loud. We'll reset a profit target to $25. Jesus, sorry. Which is 1/10. Well, about 1/10%. It's technically $26. If you wanted to be, wanted to hit it exactly. Technically $26, but we'll shoot for $25 at a time. On a 25K account, if you do $25 100 times, yeah. Sometimes you do it 2 or 3 times a day. Doesn't take long to trade ultra low risk. You get, it can be done. Now, the market also has to cooperate. Market can be difficult, but I haven't been focusing on this account lately. I need to focus more on this account. This account has been on the back burner. I actually may start another challenge. I may reset the one I have. I tried that oil trade and 20 lot trade on oil, and of course I missed it by 1 candle. One. If I would have just waited 1 candle on the 15-minute chart, it pushed one more time down and then ran bonkers. Would have been a $12,000 gain. Stupid. That was devastating. I had it right, big right. And I took a swing for the win and ended up going backwards. So it's going to take forever to get that account back. So I may just reset it instead. I gave it a shot. That's something I would normally never do. But I gave it a shot and I had it. I was right. But did the right thing and closed it out. And I shouldn't have closed it out. Now it's going to take forever to get it back, so I'm just going to leave it alone. Focus on this account. We'll trade this live. I'm just going to, being on YouTube, I'm going to trade a live account. And the idea here is to show that, yes, it can be done with small lot sizes. It can be done. You can grow a small account. That's kind of the kind of thing that I do. Can show that, yes, you can do it. There's many more people with a smaller account than people who have $1 million account. When you watch somebody trade $1 million account, what is that? Take crazy risks, take 50 and 100 lot trades on a fake $1 million account. What does that help you do? Nothing. It doesn't help you do anything. Look at that entry on Buckhorn. Let's go, baby. Easy call on that. Womp womp. That's a really small position though. Again, we get to $1 and I'll knock them out. I'm going to knock out a couple $1 scalps. Anyway, hold on, give me a second. I'll be right back. Let me go grab a drink real quick and be right back. And when this gets up a little bit, actually, when I watch something else other than Bitcoin. Good entry though. This is going to be important here. What happens to the equities market here toward the end of the day? Yeah, whatever. We'll watch this. Why not? See if that's going to be the high. Give me just a second. I'll be back in just a minute. And we're waiting for the 2 p.m. open. Probably going to be volatility today. Institutional volume comes in at 2 p.m. It's another thing that people just don't know about. Give me just a few minutes. Right. Sorry about that, guys. Yeah. No, anyway, I was just saying. I hope Bitcoin go. Dog's barking now, of course. I say if I might have to mute for a minute. I'm gonna have to mute anyway while I eat my snackies. But I was just saying, I hope Bitcoin goes higher so I can take a little bit more risk on it. I just missed it there. That's going to be a good short for tomorrow, is what I was saying. But as far as as far as the bot, I don't sell it outright. It's just a benefit of being a part of the group. I provide all my software as I'm developing it to the group, to group members. If that's something you're interested in, it's links in the description. It's just part of being in a group. It's $25 a month. I intentionally charge almost nothing, but something. I make it accessible, intentionally cheap. I make it accessible so everybody can have a chance at it. You don't have to pay $250 a month, and you're going to learn $250 a month worth of stuff with the trading bot. It's a very powerful trading bot. Challenge you to find something that's better than that. As far as options and potential, we got the trading remote software, the risk manager is coming. It's here. It's available to the group now. You can trade with a PlayStation controller. It's better. It blows Magic Keys completely out of the water. It makes it look like a scam for $170. Matter of fact, those keypads that he uses, those are $8. It's $8 on AliExpress. He charges $130 for an $8 keypad. So, I get it from a business perspective. He's trying to make money. But this makes Magic Keys look like a scam, honestly. But yeah, it's better in every way. I'm not, whatever. There's nothing really to compare it to. I've been doing this since before Magic Keys. So, I have no issue with that. But yeah, it's all provided to the group. And we trade London. We start in London and trade all the way through. Live Zoom all day. Normally don't get on YouTube, but we're going to start getting back on YouTube, but probably not going to do these 10-hour streams all the time. Just getting back on for the first couple days, but we'll pick times during the day where we'll do both. There'll be times kind of like where we did it before, where I'll be on YouTube, but there's times where I'll be muted and we'll be doing group stuff. And then, all the strategy stuff is separate. You won't see all of that here, but anyway, yeah, it's part of the group. If anyone's interested in that, it's, whatever. I'm not going to try to sell it. It sells itself. I don't need to sell it to anybody. But yeah, it's in the description. If anyone is interested in seeking that, it's there. But yeah. Yeah, you can use it with any prop firm really that allows EAs. I'm pretty sure they do. Yeah, FTMO allows EAs. Now there's a better way to do it. I wouldn't choose FTMO personally. There's a link in the description for that too. Especially if you're running a trading bot. There's a better way. You want no time limit. It's a prop firm that I trade with blows FTMO out of the water. It's not even a competition. Saying it makes FTMO look like a scam. Like a money grab. It makes them look like a money grab. Just because of the rule set depends on your strategy. Do you really need 1-to-100 leverage is the question. If you don't, and you're willing to take a lower risk strategy, there's no time limit. There's no time limit, no deadline to pass. Think about that. Think about what that does to your risk management. When you remove the time limit, there's no pressure. None. Links in the descriptions, 10% off. Our group has our own, we have our own discount code. It's Algo10. We have our own discount code at FTP now. I negotiated that deal. It's 10% off all challenges, all funded trading challenges, 10%. So if you're interested in that, in the description. And there's no time limit. You can scale your account up to a $2.4 million account. And there's no time limit. I'm not going to sit here and talk about that. But yeah, it's everything, all the software is all included. I'm not here to advertise yet. Maybe there'll be a time where you'll see some advertisements, but whatever. Everybody, if you're seeking that, you'll find it. I'm not going to sit here and try to sell you stuff all day. but the people who are willing to come in are going to get a lot more than they thought they were going to get. But, you know, it's again, people just don't know about it, which is another thing. I don't advertise, so people just don't know that I even do. I still have people message me on Instagram. It's like, dude, I didn't even know you had a group. It's been like 2.5 years now. I've been doing almost 3 years. I've been doing this, and people all the time message me on Instagram. It's like, dude, I had no idea, you know, because, you know, just people just don't know. But anyway, but yeah, it's all included. Yeah, it's the trading bot and all the software and the range tools, and for MetaTrader and TradingView. All of that's all included. There's more information on it if you hit the list, you know, whatever. So what are we going to get here at the end of the day? That's the question right now. What's going to happen after this weird price action in equities here today? Yeah, you know, if you're interested in just buying it outright or whatever, yeah, maybe send me a message. We'll talk about it. It's not something that I've just really ever done, but you know, we'll talk about it. You know, the lifetime membership. If you want to do a lifetime membership, we'll do unrestricted version. Other than that, it's a part of the group. Like it's a part of being in the group. But if you're interested in that, you know, we'll do like the unlimited lifetime access for $250. It's like it's like a 1 month cost with other groups. And $250 lifetime unlimited. That's what it's always been. The price will probably go up. I'll do that for now. But you know, if you're interested in that, we'll and that'll be everything included. We'll talk about that. That stuff's coming. It's just hasn't been a focus because it's still kind of in development. And there are updates. There are constantly updates coming. But it's functional now. It is there. Like it works now. I'm just always adding to it. Like there are other strategies that I want to add in, and that's all a part of it. Every once in a while, I'll upload it. I'll be working on stuff. When the market's slow, I'll be doing programming stuff toward the end of the day, and you know, I'll drop in updates. Be like, oh, okay, you know, I added the multi-time frame Heikin-Ashi strategy. You know, or I added a whatever, this and that. I put in, like the other day, I put in a time range filter where you can lock down and only trade during a certain time of the day. You know, like if you only wanted to trade, you know, between London Open and, you know, the first 2 hours of London Open, you can restrict it to only trading during that time. If you wanted to trade one standard deviation reversal strategy outside of the opening range only between 3 a.m. and 5 a.m. Eastern New York time, then you can do that. You know, that, like I added that feature in, you know, whatever. Sometimes I'll add to it. So it's constantly changing and there's more stuff that's coming. And it's all going to integrate into the risk manager. So there's a lot more coming. So it's just a part of the group. It's just a benefit of being in the group is you also get all the software that comes with it. I'm a career programmer and I build trading software. This is what I do and trade. But part of it is I build my own custom software that nobody else has. So yeah, if you're interested in that, whatever, it's not a commercial, but it is part of it. If you just want the software and you don't care about like, you know, the Zoom group and all that, all the strategy stuff, if you just want the bot and the stuff, you know, we'll talk about it. That can be included in the lifetime membership. And a lot of people do that. Some people will come in for a little bit and then they'll be like, okay, I'll just do it. That happens all the time. Yeah, but it's, you know, I'm not going to give it away for free because it's not that kind of thing. Like I could charge a lot more. I've actually had people recommend that I do charge more, but I don't because, you know, I made a promise to my people a while back that I will never charge more than $25 a month because I want it to be accessible, because I like the people who are in there and I want everybody to be able to have it, basically. I don't want to make it inaccessible, you know, not going to charge, like, you know, $150, $200 a month. I don't know why people do that. Or charge $200 a month to teach the same thing that everybody else is teaching. What I do is very different. You're not going to see the same thing here, but because I don't do things the same way. So again, not to sell that. I don't need to sell it. It sells itself. When people realize what they get, they come in. So it's whatever. If anybody's interested in that, links in the description. Right now, we got to catch this market. The Bitcoin trade is going to be good. I think that's going to be good tomorrow. I'm going to leave this on actually, unless I hit target. Let me see where I'm at. Let me see if there's any change. Yeah, bot can do that now and run a hedging algorithm to manage the money. But everything you mentioned it can do. Yeah, signal reversion. We'll do that. Yep. Yeah. Yep. It can do all of that now. Yeah, that would, you would use signal reversion for that. You can check slope and direction of moving averages, but also crosses, candlestick patterns, RSIs in there. It can enter signal based on a signal, whatever the signal is, and trade, like a reversion strategy, but you could invert it for a trend strategy. You could do that exactly everything you said, with ATR stops, or standard deviation of the opening range, which can be better, or a hard stop in pips. Yep. Yeah, you can. I'll show the options to it in a minute. Hold on a second. Let me get I'm watching the market here too, but I'll show. I can get this window to come up. Hold on one second. I'm gonna do that window capture. So blurry. Camera's like fuzzed out. Okay. Trying to get the options to show. All right. All right. So we got a bunch of different strategies. Not going to get into all of this, but right now, configuration file also, it can be done through a configuration file. So it can be changed programmatically and hot swapped in real time. We have an algorithm that changes its configuration based on the market conditions that we're working on. Fully automated supply and demand, directional momentum, index cross. These are strength, using the relative volatility tool to do that. Directional levels is another thing. Makes decisions based on the direction of the currency indexes. Very good way to do things. Asian range strategy, like range breaks, center rejection, stack positions. It trades multiple positions in momentum. Stack reversals, same thing, but opposite. Reversal strategy, say, look, I want to, when price moves, 2 standard deviations of the opening range, I want it to take a reversal. You can set it wherever you want. Hash mark reversals, that's classified. That's a very powerful thing. Obviously statistical range, buy the freaking dip, sell the freaking rip. Not going to get into what that is. Very cool thing. Open reversion, one of the bread and butters. Not going to get into that. Not going to explain what everything is. That's G13 classified. Signal reversion. This one has a lot of options. That's kind of what we were talking about there. Range expansion is very important. It automatically calculates a range. Oops, you can't see me. automatically calculates a range, and it trades reversals. It finds a range and then takes the range expansions for the reversals. There's just a bunch of things. Smart grid, that's a very good one. That is a smart grid trading strategy that changes based on how much open exposure it has. Delta neutral grid trading strategy, the big one, is in there. That's a newer addition. Multi-time frame Heikin-Ashi can trade confluence between, like, say, the 4-hour, when your 4-hour Heikin-Ashi flips and then your 15-minute also flips, enter a position and manage it on the way. All the money management is there. Multiple strategies. There's so many. There's honestly like pages and pages and pages of options. Like, it's not your normal thing. There's a lot in it. Each strategy has, like, say, signal reversion. And again, we won't spend too much time on this, but just some people don't know that this exists. Like, people don't know because I don't advertise it. I have a very powerful thing that people don't know about. Like, say you wanted to take like, this is set up for like an SMA, like a moving average, but recognizes a whole bunch of different candlestick patterns. There's a whole bunch of them, tons of them, and more being added. But, like, say you wanted to take, like you're saying, like, you want to know when RSI on the 1-hour chart, you can pick any time. It's multi-time frame everything. You say, I want to know when the 1-hour RSI puts in a peak where one data point is lower. There you have a higher data point and then a lower data point. It shows a peak in the data in RSI above the 70 level, whatever. Say I want to see when there's a peak in RSI above 70. I wanted that to be my whatever, or you would put it in your sell signal. You just say I want a valley. I want to see when there's a valley in the data below 30, to use the typical RSI stuff. I want that to be my buy signal, and you can stack them up also. And I want to sell when the 20 period moving or when the 8 period moving average, you can set them down here. Your sell MAs. I want to say when the 8 period moving average crosses below the 20 period moving average, I want to sell. Or when it's bearish, when the slope of both of them are both pointing in the same direction and one is lower than the other, I want to know when the 8 is below the 20 and they're also both bearish, which means you have a confirmed trend. You can do that with moving averages. There's nothing wrong with doing that algorithmically. I don't do that with my manual strategy. Algorithmically, there's something there, especially momentum for scalping. It's good for scalping, especially lower time frames. And just candlestick patterns, and that's just one strategy. It takes a signal. Then you can individually close all your buys and sells at a certain percentage. All grid period, won't get into that. The money management within a grid, using those entry signals, it will automatically transfer that into a grid strategy. Using those entry signals, though, you can trail your stops by percentage of ATR of the daily range. Progressive lots, you can progress your lots up and say every time this goes up 1/4 of a weekly ATR, I want to take an extra 0.1 or whatever. I want to not martingale, but progressive lot changing. Say I want to take a 0.1 here, and if it runs up another 1/4 of a weekly range, I want to take a 0.02 and then a 0.03. I don't like martingale. I don't put the option in there because it's just an easy way to blow it up. Progressive is different when it's used the right way, and it also manages some of that for you. Your max progression you can put in. You can invert the progressive lots and make it go backwards the other way. You can have an expanding grid where it weights and it adds an expansion to every time it takes a position. It's hard to explain. Some more advanced features. You can invert the strategy. You can turn a reversion strategy into a momentum trending strategy. No, I'm not gonna, this is important. Smart hedge. This automatically hedges your positions. It uses those entries and automatically hedges and steps you up every, whatever, 1/4 of a 1/10 of a percent or whatever, 1/4 of 1% or whatever you want to set it to. It can automatically just lock in that profit. It locks in profit is what it does, and steps you up until you hit a target. Smart capture equity, that's a big one. This captures inside and outside positions and leaves the outsides open, and so you can scalp the middle while keeping a bunch of stuff open. This is just one strategy's options. Range expansion. How many candles do you want to look back? And it will automatically find the range. If you've been trading in a range, it will automatically find that, and you can trade an expansion. When it breaks out of the range, it will pull it back into the middle. And it's a mean reversion type of strategy that's very effective, extremely effective. Especially after a trend. If you've just dumped a big heavy dump, turn on range expansion. If you big pumped a lot, turn on a range expansion. It'll catch the distribution at the top and catch the reversion with all kind of options. There's a whole bunch of stuff. Zone hedging. The momentum strategy is interesting. It uses the strength data that we were talking about earlier to trade. It figures out what direction the currency indexes themselves are going. That's kind of also classified, and trades a strategy based on that. Yeah, there's tons of stuff. Range breaks, like Asian range stuff for people who know what that is. There's just a whole bunch of crap. I'm not going to go through it all. Grid hedging, the delta neutral grid hedging, huge. It's a big deal. For people that know what that is, it's in theory a 100% win rate strategy. You just don't want to do it on a small account. It's not for small accounts. But if you've got a little bit of room, pretty wild. Maybe we'll run this week. Maybe we'll run it on one pair. Multi-time frame, Heiken-Ashi, whatever. There's a whole, I'm not even going to go through it all. There's a whole bunch of stuff that it does. We'll look at some equity curves and stuff. Maybe we'll do some testing on it. I'm just not really, I don't have it. It's better to run it by itself on an account and just let it go. It also talks to you like Optimus Prime. So yeah, it's just not talking a lot right now because it's not taking a lot of trades, but you can turn the sounds on and off. Talks like Optimus Prime. But yeah, you can close all your trades by percentage and what is your open exposure. It's got an equity step algorithm that looks at how much you've gained and tries to progress it and step it up to ramp your account up quicker. A whole bunch of stuff. The smart chase algorithm is actually a very interesting thing. If you get into like, say a 1%, say the threshold, say I get into a 1% drawdown, it will automatically stop taking profit and it'll start squaring up positive positions with negative positions. And the goal is to reduce open exposure. So you're reducing your risk. It will automatically chase your drawdown for you. If you have a drawdown, it'll automatically stop and start chasing the drawdown until it pulls it back under that threshold. That's something that I'm not even going to talk more about that. That's like trade secret stuff. Yeah, supply and demand, automated supply and demand, smart flip zones. It bounces automatically if it's in a long and it gets to a supply level, it will automatically close the long and flip it short. It can trade multiple time frames, 3 different time frame confluence. Like if you want to know when something's in supply on the 4 hour, the 1 hour, and the 15 minute, all at the same time, simultaneously, you can do that. There's filters. Say I want to only trade a supply level when it's outside of its statistical range for the day. It's a much higher probability that it's going to reverse. You can do that. All kinds of stuff. It does a lot, honestly, but we won't go through all that right now. But yeah, it does a lot. It does a lot. And there's more coming. There's more being added. So, I won't go into it. Honestly, you need to be running it more. It's coming. If you keep the risk low, it's designed to be a low risk situation. If you keep the risk low and you don't push it too hard, then you can do very well with it. It will do good numbers. But it's meant to be, it depends on how you use it, really. You can make it a high risk, high reward strategy or a low risk, low reward strategy. It's a tool that it is what you make it. there are so many ways to configure it. It's not like it doesn't just do one thing. Like there's infinite ways that you can set combination strategies and turn some things on and some things off. And when you turn them on and off matters. You know, if you're running a trending strategy, when the market's coming out of consolidation, it starts to run a trend. When that trend's over, you flip that to a reversal or mean reversion strategy. And that's where the magic is running different combinations of strategies, even across multiple accounts. And, you know, it's an interesting thing. It's a very powerful trading bot. Yeah, I see what other people are doing, and like I kind of laugh to myself sometimes. They're like, "Oh, it's the best trading bot ever." I'm like, "Oh my god, like seriously?" I'm like light years ahead. It's not even the same thing. Talking to another streamer not long ago, he was like, "Yeah, we got the best trading bot in the business," and when I saw what it did, I was like, "Jesus, dude, light years ahead." Not even the same game. We're just in a completely different league, honestly. It's the truth. It's the 100% truth. I'm very confident saying that because it's the truth. So, it is what it is. And you don't have to use a VPS. I've run it on VPS. I've run like 4 different instances of MetaTrader with the bot on a VPS. Yeah, you can do that. Can you pass a challenge with it? Yeah, it depends on the market conditions. Some people have. I passed most of one. I passed about 8% of mine using only the bot, and then I did the last 2% manually, just because I wanted to make sure it went through, because I wanted to do it quicker. But yeah, you can. Will it do it? Yes, if you're willing to take the time to do it, and that's why you should check the description for a prop firm that does not have a time limit. Take your time. You need more than 30 days? No problem. They want good traders. They're not trying to steal your money. They don't want to force you to blow it up in 30 days because you feel like you have to take too much risk in order to pass in 30 days. Very different. Unless you want to trade that kind of high risk, that's fine. There's nothing wrong with that. But if you want a lower risk approach, check it out. We have our own discount. It's a 10% discount. It's free. It's a 10% free discount. It doesn't cost you anything. It costs you nothing to get a 10% discount. And we have our own. We have a very good code. We got Algo 10. I've talked to the people frequently. Talk to the guys who work there. And they're good. They run a good business. And that's what's important to me. I'm not going to recommend stuff to my people that's sketchy. They run a good business. They always pay out. They are perfect with support. It is what it is. And it's the rules. It's the rule set. The risk parameters are unbeatable in the industry. It's unbeatable. No time limit. There's an 80-20 split by default. You can request a 90-10 once you do 10%. A 90-10. Single phase challenge. Single phase. You don't have to do it twice. There's no time limit and you only have to do it once. Why would you waste your money on FTMO? FTMO is good. They're going to get wrecked. I'm telling you, they're going to get killed because people are realizing that there's better things out there. They're going to lose a lot of business to places like FTP, they're not looking for a money grab. And then again, it's not a commercial for them. You make your own, check it out. Look at Trustpilot. Look at all the reviews on Trustpilot. Do your own research. But if you want a 10% discount with no time limit, check it out. Not going to find a better discount than that. It's the best discount you're going to find for that firm. Euro yen looks like a short. Relative projected high to the pip. Interesting. Yeah, enough commercials. Not a salesman. Never been. Any hater blockers though. You guys can make your own decision. Everybody's grown ups here. You make your own decision on what you think is right and wrong. I'm not here trying to sell you something. I am offering a lot if you're willing to put a little bit of skin in the game. But I'm not here to take your money. I'm not trying to. Yeah, some stuff is just way too expensive, honestly. That's why I do what I do for the price that I do it. The crazy thing is if I charged more, there would probably be more people here. Funny how that works. But that's not what I'm looking to do. And I know that. Just not something I'm willing to give away for free. It's not. But I'm also not going to kill people on the price. And I made a promise that I would never change my price. And I'm going to hold that promise. Euro dollar. Skip it. Euro yen, man. Oh, God, this looks so good. Let me take a look here. A higher time frame. I think Euro yen is going to be a really good trade. Probably tomorrow. Bro. Yeah, this is going to be a good trade back down to somewhere near the low of the range back into here. And a crazy strategy here, but somewhere back in there. It's just due for a red candle. You know, what's the likelihood that you get some soon, you get some thing like that, some red candle that pulls down. Probably going to head back to the bottom of this range. It'll probably be a consolidation. I bet tomorrow this will look something like this. I'm actually going to leave this up here and we'll look at it tomorrow. Remember this tomorrow. Or over the next couple days that this starts to pull back down to the bottom of a range. The question is, how much higher is it going to go? It's about to run into trouble here soon. Possibly a little bit higher. Then again, all of these tools are provided. Yeah. Next, we do here. And you get a risk manager that's better than Magic Keys, and it's included. You don't have to pay $170 for something that cost $8. I could show you on AliExpress the exact one. It's $8 a piece. Aussie dollar. Euro dollar, euro pound, euro yen. Yeah, I think euro yen's going to be a good one. It's tempting to try it here. If it wasn't the end of the day, I probably would. It's just, I was hoping we were going to get some volatility here coming in. A lot of times there'll be a move toward the end of the day, starting about right now. There'll be a move in the equities market that presses like into the high or the low of the day. Not a good long entry right here. This is some whack price action. I think it's going to end up higher, but then it's going to be a great short after that. Just not a good entry right now. We'll watch this though. We'll watch this moving into the end of the day. Eat my chips real quick. Well, give me a second. I'm still here. Snack time. Yeah, I do need some hold music. You know what's crazy is that I keep going through like royalty free music, and I keep getting copyright strikes off of royalty free music. I don't understand it. I've used YouTube's own music out of the YouTube audio library and gotten copyright strikes. I don't understand it. Like, I emailed about it, never got a response. I got a copyright strike from something that I got from the YouTube music library. It specifically says use this music for your streams. I don't understand it. It's just royalty free, no copyright music, and still get a copyright strike. It changes so much that I honestly don't even mess with it anymore. I just quit messing with it. Yeah, but yeah, I need to find some music that doesn't ring for, hit for a copyright strike. It's weird. It's a problem with streaming. It's hard to find music that doesn't hit for copyright. Even if it says it's no copyright, a lot of times it'll still show up as a copyright strike. I don't get it. Even from YouTube's own music library that they claim is for you to stream with no copyrights. I swear on my life, and I don't understand it. So I just quit messing with it. I'm like, I don't know why it changes so much. And they don't ban you or anything. They're just like, you got a copyright strike and, blah, 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 blah. I'm like, oh, man, whatever. I'm like, I got this from the no copyright music. So I just quit messing with it. Honestly, normally we, like in the group, we listen to the news, like Yahoo Finance and sometimes TD Ameritrade lately. And Bloomberg in the mornings. Bloomberg sucks in the afternoon, but we listen to Yahoo Finance and, like TD Ameritrade Network, and just listen to financial news during this time of the day while we're chilling, waiting. But probably shouldn't do that on YouTube because that'll just be another copyright strike. Somebody will complain. Oh man, this looks like a short coming. I'm watching just a little bit higher here. Might take a risk on it. Anyway, still watching. We'll see what happens toward the end of the day. A little bit more, might take a scalp. This looks like this is going to be just reject and get a red candle. Anyway, still here. Give me a second. Eating my sweet heat barbecue chips. Give me a second. It's in there, and yeah, I was gonna try some music, see if it gets wrecked, just for a minute. The range tool is in the group updates. If you want this version of it, I'll post up the code real quick for this version. Kind of a testing version. Nothing's really changed. It's in there. It's in there in this form. It'll be in group updates. Not really much has changed, just that testing level, but it's still kind of testing right now. It's interesting to watch though. 1 second. Version of the range tool. There we go. Yeah. And there's another version that I'm testing too that goes back and looks at previous days. I don't have everything added into it. It's interesting. It's a lot on the screen though, but it shows you what the previous day's ranges were. That one's very interesting. Yeah, I guess I'll post that. It just doesn't have everything in it yet, but it's interesting to watch. It's interesting to go back and look at. I'll post that maybe up in a minute. I've got to finish that. I've got to finish adding like some of the levels in. It's got most of the good levels in there. Why not? I'll post it up. I was going to try to finish it first, but previous days. All right, so there's the two current versions. It's just still testing some of those levels. But yeah, so it's there. In group updates in Discord. Okay, cool.
NASDAQ. Entering position. Short.
Holy cow.
Pound dollar. Entering position. Short.
Yikes. I need to turn that down. Holy cow. Bruh. Sorry, guys. That's extremely loud. I got to figure out how to regulate the volume. The bot's taking positions is what it was. I'm sure everybody and their mom heard that from miles away. Sorry, guys. I just turned the volume down on the master mixer. Just hopefully that won't be so crazy. Yeah, so yeah, it was a candlestick pattern short. Same thing on the NASDAQ and the Dow. It took an evening star reversal at the top of the range, where it was the highest high in a little bit. Broke the previous high and put in an evening star. So the bot just took it short. It does a whole bunch of candle patterns. There's a bunch of stuff. I've just got that running right now in combination with something else, and it should close out a dollar scalp eventually. Anyway, still here. Give me a second. Just mute for a minute. Let me eat some chips and watching to see what's going to happen. It looks like we're getting a reversal. I already wish I would have sold it, but yeah, put that stuff up in group updates. And yeah, Frez, it's in the Discord. Anyway, give me a few minutes. Heard the cha-ching there. That was the bot taking a profit, taking a scalp. The dollar scalp on something. What was it? NASDAQ. Need to add swaps and commissions in there, but yeah. We just closed out a scalp on the NASDAQ. That's what that was. Oh, it's in profit. Pound dollar's still in profit too. I'll just let the bot work out a couple extra dollars. Gonna hit that 0.25% today. One way or the other.
NASDAQ. Entering position. Log.
That was a quick dollar. It was a really quick dollar there on the NASDAQ. What that did, it traded double hammer. That's one of the candlestick patterns, is a double hammer. There's two hammers in a row, and it traded the open of the next candle long on the double hammer. There was one previous, and then that, as soon as that candle opened, it took it long and just took $1. It's exactly what that was, a double hammer candlestick pattern. May cut off here on YouTube. I was hoping we were going to get a push of volume toward the end of the day. Obviously not. It's not moving. I think by this point it probably would have been. Maybe, but I don't know. It was a slow day today, guys. Honestly, we did pretty well today, given how slow it was. I'm going to leave this Bitcoin short on for tomorrow. Whatever, let the bot run overnight. See what happens. I'm sure it'll get a couple bucks overnight. Yeah, we'll just hit it again tomorrow in London. We'll be here in London if you want to come by. There's just not really much left to do for the day. I was watching to see if we were going to get some volume toward the end of the day. Take it easy, Fres. I was watching to see if we were going to get some volume. A lot of times there'll be a big push of volume right at the end of the day. And we're just not. It's a really dead day today. It's actually shocking how crazy this was. Looking across the strength, it was just flat all day. Everything was flat. But what that tells me is that tomorrow there's probably going to be some moves, and it might not be the direction that it goes first. A lot of times there'll be a fake out direction. There'll be a false move and then a rip the other way. So we're going to try to be ready tomorrow. See if we're going to break a low or a high first in London. Tomorrow might be a really good day. Tomorrow could be a trending day. So yeah, we'll give it a shot in the morning. We'll be here in the morning. So somewhere around London, and we'll try to be ready for it tomorrow. We'll try to get ready for it tomorrow, but tomorrow may be a trending day because today was so flat, just market wide. That may make sense. I have a feeling the dollar is going to break the low, and we might be risk on tomorrow. So we'll watch that. We'll try to get positioned for that. Tomorrow is not really much news. Thursday is CPI, I think. So that Thursday will be volatile. Thursday for sure is going to be an important day, but we'll try to get positioned tomorrow for what might happen Thursday too. We'll try it again in the morning. It was a good day today, honestly. Somehow made it out. Somehow survived it. It was good management today. Did a really good job managing trades today. Given the lack of volatility, the choppiness of the market, did a pretty good job to hit target, hit a 0.25% target with almost no risk at all. A very, very good trading day, management wise, very bad day, price action wise. So tomorrow, hopefully might try to get in the trend tomorrow. Remind me about that. We'll know what's going on tomorrow morning because it's probably going to be a trending day because of how flat everything was today. So I don't know, we'll see you guys in the morning. There's not really much to do right now. We could hang out, but just watch. There's just not much to do at this point. Take a break here. Take a break for a little bit and probably work on some code. That's about what I'm going to do. I'll still be here, but we'll shut the YouTube stream down for now. There's not really much to do. So anyway, I'll see you guys in the morning. Have a good one. Maybe.